Hi, and welcome back to day 2 of ABG Investor Day. My name is Max Bacco, and I am an equity research analyst here at ABG, and will be your host during the first presentation. Today we have some 32 companies presenting, which will be live streamed throughout the day on 2 dual tracks. And the presentation will be available afterwards on demand as well. Our first company to present here on track 2 is Alcadon. And as always, we have CEO Sonny Mirborn with us, who will give us a presentation, and then we will follow up with a Q&A. And with that said, Sonny, please go ahead with the presentation.
Thank you, Max. Glad to be here today. I've been with the company Alcadon Group for the last 3 years now. We had a very interesting journey. Before I arrived, we also had a very interesting journey. We're a company with a very strong market position in the premium segment of our niche market. Let us describe a little bit more about what we do and how our plans look going forward. Next slide, please. Just to explain a little bit what we are doing. We are a distributor and product developer of all the products you need for connectivity to work. Our products are fiber optic cables, duct systems. It's all the components you need for connectivity to work in any type of building. It doesn't matter if it's a residential home, an office, an hospital, or even a data center. What we do is that we provide the products that are needed for the transfer of data. Could be the transfer of data between cities, between communities, between buildings, but also the transfer of data within any type of building. If you look at our largest business area here, fiber networks, or FTTX, fiber to the X, this is basically where we provide products for 3G, 4G, and a 5G rollout, or fiber to the home, or broadband rollout. So it's basically fiber optic cable systems, a complete system, a turnkey solution for entrepreneurs, operators, anyone working within the area of fiber, basically. Now, we have had historically a very strong market position in the Swedish and Norwegian markets when it comes to the 3G, 4G, and FTTH rollouts. So we are a rather large player in these markets when it comes to FTTX. Now, where we come from when we were founded in 1988 was basically commercial networks. This is connectivity in commercial properties, like offices, like hospitals, like data centers. Basically, when you have a commercial property, you need copper cables, you need fiber cables, you need outlets, sockets, you need routers, switchers, fiber cabinets. You need a lot of products for a complete connectivity solution. We offer all of those products. Basically, you could say that a large part of this business area is our own developed products, like the European cabling system that we developed in the mid-90s, and where we are the market leader today in Sweden and Norway when it comes to the premium segment of the market. Very important business area for us. It's growing quite well, and especially or particularly the data center segment, where we provide racks and cabling solutions for mostly enterprise data centers. Very, very nice business area, and we have seen the data center segment grow quite a lot the last 3 years, in particular, I would say. The residential networks, that's basically where we offer smart connected home solutions, where we marry together data products and connectivity products with electrical installation products to offer a complete concept. We have a few large construction companies as customers, but also a very large set of smaller installers working with us. Services and training, that's basically where we offer the instruments, the certification and training courses needed for installers to be able to install our products and gain the full advantage of getting assistance and structural help from the Alcadon team when they deploy fiber and copper solutions. Next slide, please. A brief picture of who we are. If we start to the left here, you can see that about 30% of our turnover is products that we developed ourselves. About 10% of our staff works today with product management and product development. We develop products and complete systems adapted to our local markets, but we do not do the manufacturing part ourselves. That's outsourced to several factories around the world. And we do some kitting and assembly ourselves within this system development. 70% is professional distribution. This is where we represent globally leading manufacturers within our field, within our local geographical markets. Having these two solutions here with both our own products and distribution, it's great because it offers us flexibility, locally adapted solutions. It strengthens our brand, but it also provides us with the potential of never missing out of a technology trend. When you work with globally leading partners, you make sure that that does not happen. And it gives us a very strong sense of flexibility within the organization. Looking at the share of turnover from each country, Sweden is still a very large share of the turnover, growing quite rapidly during Q1 and also started with organic growth during Q4. Norway have experienced a couple of really strong years, about 20% of the turnover. Denmark, strong organic growth. We acquired a company called 66 International in Denmark beginning of 2021. And we have since then experienced a very strong organic growth on the Danish market. Also Germany, very small share of the turnover today, but we took a couple of really large deals during last summer. And as we can see, we have a concept that works very well on the German market. It's a tough market, but getting these quite large deals showed us proof of concept on the market, which has worked very, very well for us. Through an acquisition, we entered the Belgian market a few months ago, or about 6 months ago, a small company. And we see that we have the potential of helping them grow. And they also add some interesting supplier relations for us to use in our other markets. So a nice acquisition carried out at a fairly low multiple of, I think it was 3.9 times EBITDA on the last rolling 12 months EBITDA. We have done quite a lot of acquisitions historically. We do not say that we are a serial acquirer. We do quite few acquisitions compared to serial acquirers, but we do rather large acquisitions compared to them in our size. But what's important for us when we do an acquisition is that the acquisitions really add something, that they add something to the group and that we can really help them grow, that we reduce the risk in the group and we create cross-selling synergies, for example, extremely important for us. So we are quite picky when we choose our acquisitions, and we have quite an active acquisition agenda. Otherwise, over 200 suppliers today in the group. We have a very large set of customers. No single customer is constituting more than about 6-7% of the turnover, and that shifts every year which customer is the largest one. But a lot of our customers are small to mid-sized installer firms. So it's a rather fragmented customer base that we have. And about 100 employees, happy, motivated employees. We have an employee net promotion score of 46, which I know some people think is extremely high. We're aiming to be about 50. A lot of our staff are shareholders in the company. About 16 or 50, between 15 and 16% of the shares are owned by employees of Alcado. So we truly believe in the company ourselves. And I think that's the best motivator, being a shareholder, actually. Next slide, please. Short about the market in general. What drives our development is the increased volumes of data in society. And I mean, it's not a secret that the volumes of data are growing very rapidly, especially with the introduction of IoT or Internet of Things and 5G. We have seen increases of between 20 and 60% the last few years, a year. And we are going to see a continued high increase of the amounts of data going forward. Now, this requires fiber. It requires fiber to the home. It requires 5G to be able to utilize the benefits of increasing amounts of data. It's a must, basically. And when you have increased amounts of data, you also need storage capacity for that data. And the storage capacity is basically a cloud solution or a data center. It's the same thing. Now, the data center segment is an area which is very important for Alcadom, where we focus a lot, especially the last 3 years. We have a very nice competitive concept, and it's a market that grows with about 10 to 25% a year. We are focused mostly on co-location and enterprise, which is the small data center, the edge computing, not the large data centers provided by Facebook and Google. That's not our main market. Otherwise, you could say that what some people miss when you talk about data and connectivity is that 80% of the bandwidth is indoor connectivity. And this is one of the strongest area and focus segments for Alcadom. We provide complete solutions here, and it's a nice market that has been growing in the Nordics and in Europe with between 5 and 7% a year in the last 20 years. So it's steadily growing, it's highly profitable, and it's expected to continue to grow with around 7 to 8% going forward. So it's a very nice market to be in. We have seen during the pandemic that it was basically at a standstill because nobody wanted to invest in connectivity in any type of premises. That has changed a little bit, and those investments need to be done. They need to be carried out. So we have seen that it has been a little bit of a catch-up effect the last few months, which is of course positive for us. Next slide, please. When people look at us, they look at Hexatronic, they look at connectivity companies, they often talk about FTTH. Now, FTTH is one part, it's an important part, but it's one part of our business area, fiber networks. But since it is a fast-growing segment, since we have a strong market position and a strong market offer here, I think it's fairly interesting to do a deep dive here. You see the red here, markets where we have highlighted where we are present today. You can see that, for example, Sweden have a very large share of households already being connected. But one have to remember that even if Sweden is a rather mature market, it's a very low coverage of the rural areas of Sweden, a lot of investments that still remains. And FTTH deployment, it's a moving target. You have population growth, you have technological growth, you have a situation where between 5 and 15 years on after a fiber rollout, you need to not only replace the fiber, but perhaps roll down new fiber or additional fiber. So it's a moving target, and that's what we see in Sweden right now, where additional investments are being done the next few years. Norway, Denmark, somewhere in between Sweden and the high growth markets of Germany, the UK, Belgium. We are present today in Germany and Belgium, and as you can see to the right here, these markets are among the 3 fastest growing markets in volume and percentage going forward. Very, very interesting, and we are positioning ourselves gradually to be more focused on the so-called FTTH growth markets. But connectivity in general is our business, not only FTTH. We look also at data centers and the indoor connectivity in general. Next slide, please. Shortly about our financial development. As you can see, since we had a very strong position in the FTTH market and still have in Sweden and Norway during 2017 and 2018, we grew with the market. We took a lot of market shares. And when that market fell down, because it actually did, one large customer of ours were extremely aggressive on the Swedish market, too aggressive. They didn't get the land permits. They didn't find enough entrepreneurs to do the digging for duct systems. The market pretty much died out for 1 or 2 years. But Alcadom managed to stay profitable. We had a strong positive cash flow. And that's basically when I entered the company, and together with our CFO and our updated management team started to focus on efficiency, improving our gross margins, focus on cash flow, improving the sales force management. We had a very nice profit growth due to that in 2020 and 2021. and we started to do acquisitions. We entered Denmark, Germany, Belgium, the Netherlands, and that has so far been quite successful. We have been picky in choosing our acquisitions, and so far we have been able to add something to those companies, and they have definitely strengthened the group. Next slide, please. Just briefly looking at 2021, strong sales and operating profit growth. I think we showed strong EBIT numbers, return on equity. We had a nice operating cash flow, but most important of all, we did enter these new geographical markets, positioning ourselves for growth, transforming the group into a more high growth company. We did a lot of investments in creating additional revenue streams, adding OPEX, but planned increases of OPEX, I would say, where we are focusing on the long term. We want to be a really strong, fast-growing company for the next 10 to 20 years. We're not looking at the next quarter. That's not the kind of company we are. We took strong, large contracts with Deutsche Glasfaser and MTEL in Germany, and Norlys in Denmark, further strengthening the group. We did a refinancing and capital injection, so we lowered our financing costs. We strengthened our balance sheet in order to prepare ourselves for growth and also an acquisitive growth. The pandemic affected us a lot, delayed projects, bottlenecks. It was a difficult market to be in. As for most companies in any type of industry, we were not saved being in the connectivity business, even though we saw the underlying demand continue to increase. But it was a difficult situation for us also, of course. Next slide, please. Our Q1 this year, we had a strong sales growth, an organic growth of around 15%. We grew particularly strong in Denmark and Sweden during this quarter. We did lose out on the operating profit a bit, which was basically due to us growing our OPEX, investing for the future, creating new revenue streams in several markets. We also saw a gross margin decrease, but that was mainly due to the country mix and a lag effect of pricing. As everyone knows, we have severely increasing prices, and for Alcadon and anyone in our business, I would say that we can move on those price increases fairly easily, but it takes 1 to 3 months before we do that. In this type of situation, we see increased prices on a monthly basis. So it's a difficult situation for anyone, but we usually come out in a very positive manner when something like this happens. Otherwise, we had a positive operative cash flow. We had to invest some cash in building up our inventory levels, of course, which is needless to say why. We are focusing on a lot of growth initiatives on data centers, FTTH market. We can see the installer market bouncing back. But in terms of what I always get a lot of questions from investors the last few months, I'd say that, yes, we were negatively affected by the pandemic still, especially in January and February, especially I would say on the German market. And we had a lot of supply chain bottlenecks, a lot of difficult issues. They remain, but we, I would say, handle it very well. So we are affected, but not in a very, very negative manner, I would say. Next slide, please. Just to summarize, I mean, we are affected by global macro trends. I think it's fair to say that we are an interesting company because we have a very strong market position. We are viewed as a competence center within connectivity as a whole. We have done a lot of value-adding acquisitions. I didn't mention a lot about our customers, but most of our customers have been with us for the last 15 to 20 years, buying products and systems from us on a monthly basis. We hardly have any customer churn, which is, I think, is very, very positive, of course. I mentioned a little bit about our business model, flexibility, differentiated, locally adapted solutions. And for those who choose to follow us, I think you'll see that for the next few years, we are going to transform into becoming more and more of a European company, perhaps even during the next few years venturing into other parts of the world. But we are doing it in a very sensible manner where we think first and act afterwards. Thank you. That was a little bit about Alcadon.
Thank you very much, Ronny, for the presentation. Now we have some 5 minutes left for questions. And I think we can start with your Q1 report. And as you mentioned during the presentation, you reported 19% organic sales growth in Sweden. And Sweden has been a quite challenging market for you and other players on the Swedish fiber market since 2017 or something like that. Could you elaborate on what drove the growth here in Sweden in the first quarter, and if it is temporary, or do you see the same momentum going forward as well?
Sure, I can say I would be happy to say that we gained a lot of market shares, and I think that we did gain some market shares, but mainly the market woke up again. We saw the fiber market picking up growth there because there are some really large investments being needed in that field in Sweden. We saw the installer market and the investments in commercial premises waking up again, where all the investments that were needed during the pandemic are now being done. The only thing stopping us from growing more is basically the bottlenecks, the supply chain bottlenecks, I would say. But yeah, we expect the Swedish market to continue to grow, if not the bottlenecks take away some of that growth, of course.
Okay, and as you also mentioned during the presentation, last year during the summer, you signed 2 larger contracts in Germany, one with Dutch Glasfaser and one with MTEL. And the deliveries was planned to commence in Q4 21, but has been pushed forward due to the pandemic. And in your Q1 report, you mentioned that deliveries have started in a small scale and is expected to be ramped up going ahead. Could you give us an update on how this is going and your expectations moving forward on these contracts?
Sure. Well, basically what we said still holds true. We have had some deliveries to both of these projects, so we are moving forward. It's not picking up at the same pace that were expected when we signed the agreements. The pandemic has affected at least Deutsche Glasfaser quite significantly, so a lot of the sub-projects have been delayed quite significantly. But we see slowly and gradually the sales towards these contracts are picking up. So for us, it's not a matter of if, it's a matter of when. And we do expect the contracts to be honored from both parties. And the intention when we have our discussions and negotiations with the customers are basically the same as this summer.
Okay, perfect. And now with the cost inflation and to some extent continued component shortage, but mainly cost inflation, do you see a risk for new products being delayed or pushed upon by customer due to the economics not matching up?
No, we haven't seen that actually, not due to the price increases. What we have seen is that some projects are delayed or postponed due to material shortages, that it's either us or competitors of ours or other suppliers to these projects who can't deliver. So basically the situation has been dreadful during the last few months, and there are going to continue to be a lot of projects being delayed, but it's not due to price increases. There is a great understanding, I would have to say, in the market for price increases being a necessity, and we don't know for how long those price increases are going to last. So there's no need to delay projects due to the price increases itself.
Yeah. We have 1 minute left, so take a quick question here. Let's see if it's quick or not. But as I said, during 2021, you entered both Germany and Benelux, 2 new markets for Alcadon. What are, according to you, the main challenges when entering a new market? Is it, for example, recruiting competent personnel, Or is it perhaps brand awareness among customer, or is it something else?
I would say brand awareness is not an issue. We acquire strong, profitable companies with a strong market position, and Alcadon is beginning to be very well known in a lot of markets throughout Europe. So that's not an issue. The main problem when we want to grow is finding the right staff. A huge problem for everyone in our industry. The last year, we have seen that it becomes easier for us as we are more well known as a player with a strong market position, interesting growth journey ahead of us. So we are attracting a lot of people, but it's still the difficult situation, hiring people for sure.
Yeah. Okay. I think our time is up, Sonny. Thank you very much for joining us today, and good luck going ahead, and hope you have a nice summer.
The same to you. Thank you very much, Max.
Thank you. Bye.
Thank you. Bye.
Hi and welcome everyone for the next presentation of this seminar. My name is Daniel Thorsson, analyst at ABG, covering IT and tech companies. And with us on this presentation, we have Invisio and CEO Lars Højgaard Hansen. So please go ahead, Lars, presenting Invisio, and I will follow up with some questions in the end.
Thank you very much. Welcome everyone to the presentation from Invisio. Now, we have a lot of noise in the background. Daniel, I'm not sure if you can hear that.
Yes, I hear it. We will fix it.
Okay, thank you. Good. So the global pandemic has affected most companies in different ways. For Invisio, it means that we have had a hard time visiting customers, and for that reason, many of our projects that we've been working on has also been postponed or delays. But most importantly, we don't think we have lost business during the pandemic. It has merely been a question of delaying certain activities. Secondly, we have, of course, seen issues with components and also delays in deliveries, both incoming and outgoing goods. Next slide, please. But in spite of the challenges during the pandemic, we can see now that the basic needs that we try to address are still there. These are unchanged. We still see very high incidences of hearing loss among professionals like police officers, firefighters, and soldiers globally. This is a huge problem for many, not only the personal suffering from having a hearing loss, but also the costs associated that are affecting many countries, because it is very costly in terms of paying compensations, buying hearing aids, and taking people out of service because they are not able to do their jobs. Next slide, please. In addition to the hearing loss itself, it also often causes influences your quality of life. We see that both veterans and police officers suffer from not only tinnitus, but also anxiety problems. And a great portion of those with hearing loss also suffer from depression and other conditions. So it's quite severe once you are being affected by hearing loss. Next, please. Now, in addition to preventing hearing loss and protecting people in very noisy conditions, Invisio also helps the same people communicate in noisy conditions. Both firefighters, police officers, and soldiers very often operate in extremely high noise environments. And we have the technologies and the solutions to help them in these very noisy environments. Next, please. Invisio is an innovative technology company. We have very advanced microphone technologies that we apply for crystal clear communication in high noise environments. And this is in the form of different types of hearing protection headsets. At the same time, we provide hearing protection that allows the user to hear sound and everything that is going on around him or her, but at the same time being hearing protected. This is what we call situational awareness. And our solutions and systems can be interfaced to a number of different equipment that our users utilize, like radio communication, cell phones, computers, and any other device that gives audio inputs. Next, please. So Invisio has, for the past 15 years, become the global leader in communication and hearing protection systems for these very demanding environments. We are located with our head office in Copenhagen and have sales offices in the US, in the UK, Italy, France, and Thailand. We recently bought a company in the UK called Racal Acoustics that are the experts for hearing protection and communication in vehicles. So we today operate under two brands, Invisio and Racal Acoustics. We work very closely with our customers to make sure that the solutions and products that we develop are aligned with the needs that they have in their line of work. And we have a long list of agreements with our customers in many countries that is a high barrier to entry for competitors. Our sales is primarily direct, but we also in certain markets and countries sell through partners. And we have a very scalable business model where our manufacturing is outsourced to large EMS manufacturers, primarily in Europe. And Envisio is listed on Nasdaq since 2015 on the mid-cap list. Next, please. So a little more down to what is happening right now. As I said, we have seen a lot of delays and postponements of customer activities during the global pandemic. But in the first quarter of 2022, we have seen a very high activity level in all of our markets. And this has led to a record high order intake. We have the strongest order book ever at the end of Q1. However, we still see that our deliveries are lagging a little bit behind. We still have issues with certain deliveries, and therefore our revenues are still not up to expectations. We saw a number of large new agreements and contracts in the first quarter. I will get back to them in a minute. A large framework agreement with a vehicle program in Europe, but also several substantial orders from the UK Ministry of Defence. And I will also comment on the geopolitical situation in Europe that is occurring right now, and where this has led to larger defense budgets in many countries. Next, please. So from a numbers point of view, we, as I indicated, did not reach our revenue targets for the first quarter. We were again hindered by certain delivery issues, and therefore our revenues are below expectations. The good news is that from a gross margin point of view, we have been able to keep a steady and good gross margin, even though, of course, there's a lot of turbulence around component pricings and so on. But we have largely been able to offset these price increases by also increasing our prices to our customers. And as you can see, the financial result here is not satisfactory, but again, this relates very much to the lower than expected sales. The good news, a very, very high order intake, almost 400 million in the quarter, by far the highest order intake in one quarter, and almost 500 million in order backlog when we left Q1 at the end of March. Next, please. So a little summary here just to see the trends. On the left-hand side, the order intake per quarter, rolling 12 months, we can see that the order intake has started to improve from mid-2020 and have continued to improve and now accelerated in the first part of 2022. And same goes then for the order book per quarter, that the order book has also been increasing since quite a number of quarters back. So we have seen a good steady growth. Next, please. Sales, on the other hand, is more flat, and again, because of problems with component supplies and deliveries. That has not developed in the way that we would have liked it to see because of the pandemic. Gross profit, we normally say that we would like to be somewhere between 60 and 65%, and we are close to the 60 mark, even though we've had a little bit of a downwards trend. But some of that is also related to product mix and customer mix. We have a little bit of a different gross margin picture depending on whether we sell to military, to police or law enforcement, and also whether we sell direct or if we sell through a partner. Next, please. So where we are not happy is, as I say, on the EBITDA and the EBIT, where this is affected heavily by lower than expected revenues. But it's also affected by the fact that we have continued to invest during the pandemic. We have continued to invest heavily in R&D. Many new products have been finalized and are now ready to be introduced into the market. And we have also continued to invest into the sales organization so that we are absolutely ready now for the increased activity level that we expect, and we are able and ready to serve our customers. As you can see on the left-hand side here, we have also increased our operating expenses considerably during the pandemic. Part of that is the acquisition of Racal Acoustics in the UK. But as I said, we've also increased our expenses in terms of people in R&D and sales. We do expect a more flat development, though, over the coming quarters as we are now at a new level. But of course, we will continue to look at the activity level in the market and add people where needed in order to take advantage of the opportunities. Next, please. So, a very significant happening in the first quarter was a new framework agreement with a system integrator and for a customer in a European country. This is related to a vehicle modernization program where the customer will be buying and will have deliveries of a number of vehicles over the coming years. And the frame order agreement is normally without commitment, but we have already received the first firm order for 91 million for this contract. So we do believe that the customer over the period of the framework agreement will spend all of the 275 million. But 91 is in the books, and it is for a newly launched headset under the Racal Acoustics brand. It's called RA4000, a very sophisticated and advanced headset for use in vehicles. And these volumes will be delivered when the vehicles are delivered, and it will happen somewhere between 2023 and 2026. Next, please. In the UK, we have a very strong position, and we of course now also have a company in the form of Racal Acoustics, so we consider UK to be a home market for us. During the first quarter, we received an order for almost 90 million for our latest generations of control units and headsets that are going to be used on armored fighting vehicles in the UK. And this is a very important reference order for us that we can utilize in other markets within NATO countries and also for further business in the UK. Secondly, we had follow-up orders for a program in the UK called Tactical Hearing Protection System. The order value here was 30 million. This is a program that we have been delivering to for many years now, plus 5 years, and we have so far received orders for over 270 million kroner from this program. A third happening in the UK was a long-term contract that we have with another part of the army. This contract was renewed with a 3+2 year, what they call an in-service support contract, which basically means that they will continue to utilize our products for the next 5 years, and we expect also significant orders to come from this contract over time. Next, please. So we've all seen the terrible situation in Ukraine, and for Envisio, this will of course have an impact. We are hearing from many countries, especially in Europe and within NATO, that defense budgets are going to increase substantially in the coming years. In the short term, meaning 2022, we do not think that this will have a huge impact on Envisio because most of these increased budgets and demands will be a little bit further down the road. But in the longer term, we are certain that these very large budget increases will absolutely be an expansion of our opportunities and our markets. Not only will many countries be able to increase their short-term spendings, but it will also mean more soldiers in many countries. We hear from several markets that the number of soldiers will increase significantly. The need for modern communication equipment with hearing protection is great in many countries. We know that there are programs for rolling out new radio equipment, and as a part of that, we will also be relevant with our types of solution. And we think that the larger budgets that will be available in many countries will allow for a faster rollout. But as usual, these projects follow specific rules and they take time. So we do not think we will see effects of this until 2023 and onwards. Next slide, please. So in short, we think that we, after two very tough pandemic years, will start to see a return to more normal conditions during 2022 and a continued strong order intake. As I said, we have during the pandemic focused on finalizing a number of new products, new control units, new headsets, and so forth, our new intercom system, and we will focus now on the marketing and selling of our many new products. We will also resume our geographical expansion in Asia and parts of Middle East and South America. Invisio is well positioned. We are the market leader in our category, and with increased spendings, we are also certain that we will benefit from that because we are the proven solution. We are already fielded in many countries, and that will give us an advantage in the coming years. Now, the acquisition of Racal has given us new technologies for communication in vehicles, and the combination of the technologies that the two brands here offer has already led to a first new hearing protection solution that we just introduced last week. So as a little final teaser here, we will just show if the technology works, a small movie, about 1 minute, where you can see our latest hearing protection and communication solution, the RA51 headset. So the movie, please. Seems like it froze. All right. If we can get it to run, then you can find it on our website, Invisio.com.
Jag kan inte få. Okay, thank you very much, Lars. We tried to get the movie work. It worked, but we didn't have any sound on it, so we tried to solve it.
Okay,
so that was the reason. But as you said, I think people can maybe look at it themselves, and we leave 5 minutes for questions. So it was just us deciding to try to get the sound on.
No problem.
Unfortunately. Okay. So you touched upon it, the strong order intake and the strong order book. What's your visibility on deliveries here? Is it in your hands? Is it on the customer hands on timing of deliveries? Or is it the global supply chain affecting this?
It's a little bit of everything right now. Of course, it is still a little bit messy. It will continue to be messy into Q2 and possibly into the early part of Q3, but hopefully then we will start to see some improvements. But we, of course, work very closely with our customers, and everyone is aware of the fact that there are delays. So it is very much a matter of planning and being very open with our customers and just trying to match whatever plans they have for training and rollout. But I think we can manage that.
Excellent. And then on the gross margin here in the business, we are facing a situation with increased prices, inflation, both on wages and components. What's your pricing power in the industry? Can you do anything short term on the prices, or are they already predetermined by agreements?
Yeah, to some extent, but most agreements also have a possibility of certain price increases. But it is a little bit customer by customer. I think so far we have not seen, we've seen some component prices increase. It hasn't been massive, but we have so far, as I said, been able to compensate for it. But we, of course, follow it very closely. We also follow and see what other companies in our industry do and try to find out. I think one thing we have, though, which is positive for us, is still being a market leader and increasing our volume. And the combined buying power of Racal and Invisio does give us some advantage towards suppliers as well. So far it's under control, but we of course follow it very closely.
Yeah, I see. And then also on kind of the penetration of your products in your targeted markets here. I guess that historically military units and soldiers, they have been able to share communication products because they have not been in active training at the same time. But now when all of the armies will be larger, they'll probably have more training. Is that a large driver for you ahead in terms of growth? And can you say something on the penetration rate here for you in the markets?
Absolutely. So as you say, first of all, related to penetration, in many countries still it's only a fraction of users, both military and law enforcement, that actually has a communication radio. So that penetration is of course important to us, that we believe that over time everybody in the army, in law enforcement and police will have their own radio in the same way they have a mobile phone when they are private. So that is a penetration driver. Secondly, as you say, also in countries, many countries, we have seen that you don't have equipment for everybody. You only maybe have equipment for 1/3 of the troops because they are rotating and not in active service all the time. We hear now more and more that many countries are saying we actually do need to have everybody outfitted at the same time. So this will drive the demand for more equipment over time.
True, that makes sense. And then a question on the intercom system that you launched pretty recently. What has been kind of the first feedback from customers? Any substantial, like coming closer to orders or anything like that you see?
Oh yes, absolutely. And even with the issues from the pandemic and so forth, we have been able to demonstrate and trial the product with many different customers, especially special forces customers. And we have received I would say a good amount of first test orders, and we have also seen a couple of customers now moving to the next level and actually ordering more systems. One customer in Europe ordered 40 systems recently, which is a larger volume for us and is indicating a broader rollout. So that is going really well, and I think in general, once we've been demonstrating it, it is a product that everybody understands quite a way, and also say that, yes, we definitely need that. But as always, it does take time before funding is in place, before testing is in place, and so on. But it is definitely a product category that we expect to contribute greatly to Invisio's development over time.
Yeah, that sounds promising. And as we are seeing your end markets increasing their spending or plan to increase their spending, do you expect to see or have already seen some increased competition in your product field from any other players?
Not really yet. It's still the same companies we are competing with, and I think also, as I've said, even though we will see increased spending, it is of course still a niche market, and it's also a market where you have quite high barriers to entry, not only from a product solution point of view, but also from a contract point of view. So many of the contracts are long term, and if they belong to a competitor, it's quite difficult to get into these contracts for quite a period of time. And we have been successful in winning many of these contracts, and we do have a strong relationship. And I also think that in many cases now, when companies and countries will be spending money, they will be looking for something that they know is already in the market, that is proven, that has been utilized by other NATO countries. So we will definitely be benefiting from being the market leader there.
Yeah, excellent. That makes sense. My final question is on the cost side and headcount here. You said in the presentation that you grew your organization throughout the pandemic, both on product development but also sales. Are you pretty much ready now with the organization to deliver a lot more, generate more orders and sales,
Yep.
And we should see slower
Absolutely.
growth ahead here?
Yeah, no, absolutely, absolutely. We are, and as I said, we will be looking now at, of course, the customer side and seeing the activity level. And if we can see that the activity level is increasing heavily, then of course we will need to add more salespeople here and there to cope with all of that, and maybe also more on the support side. But we will follow that closely. So I don't expect any big jumps in operating expenses, but a gradual development that matches our business. And as I said, we can do a lot more revenue with the same organization that we have today, because all of our manufacturing is outsourced. So that is where we will see an increase in OpEx is, of course, in traveling expenses now that not everybody, the number of trade shows, the activities that we go to is just massive now. So there's a lot of traveling going on, and prices for flight tickets and hotels and so it's not cheap for the time being. So, but I think that's a positive.
Excellent. Thank you very much for the time, Lars. Very good presentation of Invisio. And thank you everyone that listened in. Have a good day, Lars.
Thank you. Likewise.
Bye.
Hello and welcome back to ABG Investor Days. My name is Rebecca Jadrup and I work as an equity analyst here at ABG. And now we're gonna hear a presentation with the CEO of Distit, Robert Rosenzweig. Robert, please go ahead with your presentation.
Thank you. Distit in short. Distit's business concept is to acquire and develop niche distributors within IT, mobility, home electronics, AV, and networking. We have channel access in the Nordic countries within B2B and B2C, and we have quite deep integrations with our customers. And we also have an expanding network of distributing into Europe through partners. And we are distributing our own and external brands. So we carry around 30,000 article numbers within our operating companies. And our own brands consists of about 26% of our turnover. So if we look at what we do on our value chain, so we have a well-positioned portfolio. So we have external brands and our own brands, which we funnel through our operating companies. They're doing the business. And we do that in B2B and B2C channels, and with a number of channels all across Nordics. So we have a very far reach in the Nordics. And then to the right, you have all the well-known customers, which most of them we have worked with for many years and have quite deep knowledge and relationships with them and integrations. Well, we all read papers these days, don't we? So if we take a look at how Distit has fared over a 25-year history, so we see that the company has shown remarkable resilience to various crises. And now how is that? Well, it is because we are present in all the Nordic countries. That's a diversity. We have a presence in both B2B and B2C. And moreover, we have offerings of a wide range in various fields. So we've been able to adapt. So in times of crisis, typically our like discount channels expand and premium channels decrease, and value offerings increase, premium offerings decrease. So these are various cycles. So the perfect storm is which is that everything goes bad everywhere at the same time. That is a statistical anomaly, and that is what this graph shows, actually. So if we look at what Distit is, we see that what do we have? We have scalable growth dynamics in our business. And this is the core of what we are doing and have been doing and will be doing. And you can see these 4 items as being the keystones in our strategy as well. And that is, first one is the focus on growth in structural trends. Structural trends grow faster than the average markets, typically. We go through that later on in our presentation, with this digitalization, electrification, gaming, 5G, etc. The next one is the gross margin expansion. And there we have put a lot of effort, quite successfully, in expanding or offering our own brand business, which typically carries a higher gross margin and better strategic control as well. We're also doing specific direct access distribution, and another one is of great importance is to build an efficient base plate for our operations, so that we can expand and grow and have EBIT fall through of the gross margins we generate in growth. And it is a very important factor to have an efficient base plate, which makes us also more flexible in expanding businesses. And in terms of acquisitions, we are looking at add-on acquisitions with synergy potential, and also new platforms as well for growth, which is core of our business. Just a short brief on 2021's performance. We had a growth of 7% in 2021, and we had a gross margin which slightly decreased, but if we look at the FX adjustments, it was okay. So we also see we had a growth in our EBITDA. We have the adjusted EBITDA due to the acquisition of eFuel. There's an adjustment in the result there. We grew that, and we grew that even further if you would make an FX neutralization of it. So let's have a look at our strategy. As I mentioned before, the structural trends or riding mega trends is key for us, as well as developing our own brands where we have a proven model and machine for it, and we have the channel access. So you could describe it as with the megatrends, we find a megatrend we believe in, we can start that to enter it with external brands and get to know it and find the pockets and the niches where we want to be, and where we come with our offers of own brands eventually. We have a web shop and service developments as well, both in several of our operating companies. We also have a strategic ESG focus, which brings us cost, and also it's important for us to develop our key customer relationships. On the agenda is also geographical expansion. We have European concepts in our own brands. And also very important for us is the capital allocation, to do the balance of organic growth and acquisitions. Here is a slide which shows our key strategic activities. What have we been doing? What are we doing? What will we be doing? And what is our goal? So, well, I realize that this is a little bit not so PowerPoint friendly slide, but we have been working with our operating companies to set their strategies, and we are systematically building the agenda thereof. Let's take Aurora and Del Taco as an example and just walk through what have we been doing with it. We started out 2019 with a restructuring of management and the need to have nice to haves. And in 2020 we did management upgrades and started a put focus on the transformation of own brands. And last year we started the efforts of the export business and accelerating their own brands. And this year we are concluding the merger with the process and IT and everything, and warehousing and all these common functions and nitty-gritties, which is rather complicated, and that we do this year. And we also expand our export networks. And next year we will be putting more efforts into building more technology into our own brands, actually, and investing in people to do that. And we will also accelerating this megatrend strategy. And the vision 2025 is that Aurora del Taco should have technology ownership and European key position in some selected megatrends. For example, smart home, for example, to be more concrete. And then we have similar flows for all our operating companies. So we work both from a strategic and together with the operating companies to find the right things. And with e-fuel, for example, we are building own brand accessories into e-fuel, and we also have other possibilities we're also exploring with e-fuel, which is of great strategic interest for us. A few words on our geographical expansion or our export business is that we started our efforts to put systematic efforts into this in 2021, last year, meaning. And we grew last year at 62%. We did around 50 million SEK. And we see a strong trajectory in our export business, and that is because it's proven that our own brand products are export friendly. They're on the level, and they're well received. And this is a very important thing for us because it is one pillar of our strategy, our hypothesis to expand our own brands and build better brands, build bigger brands, and build us up on the markets. And we actually started to sell Del Taco gaming products in the US just recently. So on the megatrend strategy, here are some examples of the main ones. That is digitalization, which is an evolutionary base plate for all products and services. We have gaming, we have a smart home, we have e-charge, and we have home office, which is also will stay as a megatrend, we believe. And we fill these with our own brand portfolio. And here are some examples. And so this is how we work and develop. Sustainable value creation is important for us. It brings us cost saving. It reduces freight costs. It is also a market opportunity with offerings to bring better offerings to the market in terms of packaging, in terms of material. And for that, it is important to have control over your supply chain, which we have. I mean, it is not only environment, it's also all the social issues which are accompanied. I mean, it might be hard for people to realize, but the world is not all good. There is evil in the world. so we need to have control over your supply chain. It's more important than you would think. And there are large risks not having that. We can also attract more and larger customers. We drive this together with our customers. We are in dialogue with all our large customers and asking them, what would you like to have? What are your challenges? How would you like to improve? How can we help? That is the energy we bring to our strategy. And that is a good way of approaching this. So we want to make the world a better place together with our customers. And not just for ourselves, for everybody. So a few words on our M&A strategy. key opportunity for us is to increase our exposure in megatrends, which we find interesting, either through a niche distributor within the megatrend or a product company. It's also possible. And that is also another thing is geographical expansion is a big opportunity for us. If you look at the portfolio structure, so how would we do? We focus on add-on acquisitions to group companies to maximize synergies. Also possible is to acquire add-ons. Not add-ons, but I mean like new legs, additional legs of business for Distit. One example of that is actually e-fuel, which we acquired. And coming to that, how did this example of e-fuel fit into our business? Well, e-fuel is on the in the focus around the megatrends of digitalization, electrification, and green tech, and offers us a very good overwatch into these areas and intersections, and will give us business opportunities, additional business opportunities. So we did present last spring our financial targets, and here they are. And they are that in 2025 we want to reach 3.5 billion SEK in turnover. With to get there, we have an implied revenue growth of 8%, and we are targeting a 25% gross margin, and that should mathematically yield us 8% EBIT margin. Thanks.
All right. Thank you very much, Robert, for the presentation. Very good. Thank you. Some questions from me. Let's start off with the current market situation with high inflation, supply chain problems, rising transportation costs. How have this affected Distit, and how have the company handled these problems so far?
Yes, these complexities, they transcend differently into the various operating companies. But typically, it is a big challenge. We have a sourcing office in Asia, so which has enabled us to have local presence with our supply chain, even in these times of COVID waves rolling through China, for example, right now. So that has alleviated some, but lead times are long, and some of our A brands are struggling more than others. So it affects us, yes. It also is a challenge to press back price increases, and it is also a challenge to the time lag for price increases from our side to our end customers. It has gone reasonably well for us to increase prices to our customers, but there is a time lag in it. But in some instances, these price increases in some segments are quite juicy. So you can't stop asking yourself from a philosophical standpoint is, what is the limit? We're sort of in uncharted territories.
Does this external factors affect your own brands more than external brands?
You could put this in the way that for our own brands, we have this supply chain responsibility. So there we plan, and we know the full picture, and we can plan the lead times and plan our forecasts. and plan our transportations, so we have better control in a way. And we have A brands who are very skilled and where we don't need to think. But those who are struggling and don't have that control causes us some frustration.
And do you expect to increase your own brands even more compared to external brands in a percentage of revenue going forward? And how do you think that dynamic will be going forward?
Yes, is the simple answer.
Yeah.
Yeah, and it is also so that we have our own brands. It's not like Armani or Gucci. Our own brands are more like H&M. So we have quite a number of offerings which are very suitable for times like this. So we expect a continued expansion of our own brands.
Yeah, yeah. And also about the common platform that you will build for Aurora del Taco. You touch upon it, but can you tell us why you choose to do this now, and why is it important for going forward?
Yes, I can. We did a large restructuring of cost in 2019 of Aurora del Taco, and that was on more that was on the level of management in terms of nice to have sorting outs. What we're doing now goes far deeper. We are now into the engine room and into the behind the electrical panels and working. And you should know how to reconnect things and build up the system from the ground up with process, IT, etc. So therefore, you have to have that in place before you do such restructurings, because otherwise you would risk ruining the machine.
Okay, I think our time is up, Robert. Thank you very much for the presentation and for the Q&A session. And thanks everyone for listening in.
Thank you.
Hi and welcome back to ABG Investor Day. My name is Simon Johnson and I'm an equity analyst here at ABG covering IT and gaming. Next up we have Johan Nordqvist and Erik Hammarberg from Briox. With that said, I'll leave the floor to you guys.
Thank you very much. Let me start. I'm Erik, and start to take the opportunity to thank you, ABG, for inviting Briox again to these investor days. This is the first time for me being here, but it sounds like a very exciting forum to bring together investors and growth companies such as Briox. If you go ahead to the next slide, please. Me speaking now is Erik Hammarberg. I'm the new kid on the block. I'm the newly appointed chairman for Briox since just a couple of weeks back. And I'm co-presenting here today with Johan Nordqvist, the CEO of Briox. And since this is the first time for me and I'm new at my job, I can start just by mentioning a few things about myself. I've spent my entire career in the SaaS business-to-business world, most recently as the head of strategy for Medius, another Swedish SaaS company. And now I'm truly honored and excited to be a part and on board of the Briox team. And I'm very impressed with the company and all the things that I've seen so far. So if you go ahead to the next slide, please. The agenda for today is for me to give a brief introduction to the company, Briox, and then Johan will take over to give some more color on how we are repositioning the company for accelerated growth and some of the key priorities that entails. And of course, in the end, we'll open up for some questions. So next slide, please. As I said, we'll start here by giving a quick introduction to the company. I think you can continue on to the next slide here. And perhaps most of you people listening in today know Briox fairly well since previous investor days, perhaps. But by any chance, for those of you who haven't met or know about Briox since before, I can tell you that Briox is a software as a SaaS company dedicated to helping the micro companies and the entrepreneurs to simplify and managing their business administration. And we do this through delivering a fully cloud-based, user-friendly platform where the micro businesses owner can collaborate with their accounting agencies and accounting firms, which is a pretty typical setup for these kind of companies in a real-time fashion on mobile and a desktop experience. And today we offer our platform in Finland and in the Baltics, where we have local sales presence and support staff to support our customers on site. But product development and marketing is managed from Sweden and Växjö, where we do have our head office. Next slide, please. And being the new chairman, I could not be more delighted to work with such a stellar board of directors. And to give you a sense here from left to right, we have Johan Nordqvist, the former chairman, and now acting as a regular board member. And Johan has worked with several fast-growing SaaS companies and fintech companies, and has also previously served as the CEO of Briox. We have Michael Lindblom, who is the founder of the world leader of invoice automation, Medius, where he was the both founder and CEO for many years, and since has been both investor and strategic advisor to a lot of very exciting companies, notably Einride, which is currently revolutionizing the transport industry. In Daniel de Souza, we have an extensive experience from the accounting software world. He has served as the CEO of Visma SPCS as one of his assignments. So we have a great domain expertise in Daniel de Souza. And with Helena Westin, we have one of the most notable and competent professional in PR and communication in Sweden, and she really brings a strong asset in that perspective to the board work and into the strategic work of communication for Briox. And finally, we do have Martin Jönsson, who is a real estate professional and entrepreneur, and also a very active investor in the tech space. Next slide, please. So I'm a big fan and advocate of focus, and these are some of the key near-term priorities for me and more broadly the company and the board. First of all, the main focus for us now is to even further sharpen the focus on micro businesses, our core segment. And we do this by adding value to the both platform and our offering to provide relevancy and the sharpest offering for this particular segment. So this is something that we're focusing. And with this as a springboard, we are then developing and launching our strategic and financial 3 to 5 year plan, so the long-term growth plan. And thirdly, we are now securing a very robust financial platform to support this strategic growth plan for the coming years ahead. And we're doing this through a new issue. So I will just mention a few words about that on the next slide, please. This new issue, it's a combination of a rights issue and a directed issue. The total issue amounts to 43 million Swedish crowns, which is a very, very healthy foundation for Briox to execute our strategic growth plan on. And it's very comforting to see the level of confidence that our existing shareholders are putting into the team and into the plan ahead. And we also do have 100% of the rights issues actually secured 100% by guaranteed commitments to the issue. So that's very comforting for me as a chairman to see, and now it's on to execution of the plan. And that's a great opportunity for me to hand over to Johan Nordqvist, who will give us some further detail and color on the latest and greatest.
Good. Thank you very much, Eric. It's indeed very good to be presenting at the ABG Investor Days again, and thank you everybody for joining. So building on what Eric just mentioned, I will talk a bit about what we're doing with Briox to set the company up for accelerated growth. And this includes what we've done in the last year and the results we've achieved so far. I will then speak about the background to our focus on the micro business segment and our most important priorities relating to that. So if you continue, please. For those of you who've been following Briox, you know that a lot was achieved in 2021. We've set a very clear strategy for accelerated growth, which includes an increased focus on serving the very smallest companies, the micro business segment that Eric mentioned. I've also been busy recruiting a new and very competent management team, which is now fully in place as of January of this year. And parallel with this, we've also developed and launched a new brand platform and new product packaging, which have so far been very well received. So next slide, please. So these interventions that have started to bear fruit, and in 2021, we actually delivered accelerated growth 4 quarters in a row. And as you can see here in the green bars in this table, net sales grew steadily in 2021. And in the first quarter of this year, our revenue was up 63% compared to last year. It's a good start of the year. Continue, please. The same trend is then visible in annual recurring revenue, which I would say is our most important metric, up 68% versus last year. And of course, this positive momentum we of course intend to maintain. So if you move on, looking at our strategy for growth, what's currently guiding us are, I would say, 4 key pillars, which our plans are built on. First and foremost is our distinct focus on then the micro business segment, and I will talk more about this shortly. Secondly, and relating then to our narrowed down target segment, we focus on developing a core offer which is internationally scalable, Briox is already present in many markets, and we intend to be so. And key in this work is really to focus on the most important product functionalities, while at the same time ensuring that we offer everything that our target customer expects. And then the third pillar is a highly efficient digital sales model. This includes that all functions within the Briox organization is focusing on sales. And we need to make smart decisions using data and driving lead generation and conversion online. And then finally, the final key pillar is for us to win with strategic partnerships. Naturally, our most important partners are still the accounting agencies, and we now work with more than 200 agencies across Finland and the Baltics. But having said this, there are of course many other potential partners that also target the microbusiness segment, such as credit card providers, fintech companies, etc., which are equally interesting for us to team up with for accelerated growth. So if you continue, please. So before I continue and talk a bit more about our most important priorities, I'd like to make a small recap of why Briox has made a strategic decision to take a leading position in the micro business segment. So if you move ahead. So if we stop there, it's important to point out that the micro business segment is by far the largest segment in the world in terms of number of companies, which of course means a very robust business potential. It's also the fastest growing segment, and this growth has actually accelerated during the pandemic. And although the official definition of microbusiness is up to 10 employees, our real focus is on even smaller companies, the ones with up to 3 to 5 employees. And this is important because when companies are this small, the basic needs are often relatively similar, which in turn makes it possible then for us to develop a very targeted offer. And more similar needs also make it easier to have a tight core product that actually facilitates this international expansion that I was referring to earlier. So next slide, please. What is also then a great business opportunity for us is that a very large proportion of the accounting agencies, that at least the ones that we talk to, do not feel today that they have a winning formula when they work with their smallest customers. Most micro businesses, they want a fairly simple service at an affordable price. And in order for an accounting agency then to be able to offer that with good profitability, they must have a very, very time efficient way of working in this particular customer segment. And this is sort of where Briox comes in with a solution and a concept that is adapted precisely to serve these micro businesses. Next slide, please. And then another important reason why we chose to focus on the micro business segment is that we feel that there is a lack of a really strong total offer for this particular segment. As Eric pointed out, we already have a strong base in our accounting software, which is quite difficult for anybody to develop in-house. But with this as a base, we can add other relevant services that help the micro business entrepreneur to simplify his everyday life and run a better business. So great potential when it comes to unmet customer needs. If you move on, please. So looking ahead then, which are our key priorities for the coming, I would say, 6 to 12 months? Where do we put our efforts mostly today? If you move on. The first one, and this is of course critical, those of you who are aware of the different players in our industry, you know also that there are different views on whether the entrepreneurs will want or need help from accounting agencies to in the future to manage their finances. We at Briox, we're firmly convinced that the vast majority of these micro entrepreneurs, they will continue to want help from the accounting firms. However, and this is really, really important, a prerequisite for this is of course that these agencies can offer added value at a reasonable cost. So in that collaboration between the agency and their smallest customers, Briox mobile app becomes absolutely critical, because this, we believe, is the sort of really the key tool for the micro business owner to be involved in the financial aspects of his business together with the agency. So therefore, in the coming quarters, we will continue launching a number of features in our app, all of which aim to simplify and save time. And in this work, we place special focus on value creating automations and a very, very attractive user interface. And the feedback we've received on our new app so far has been very, very positive. So this feels extremely good. Please, next slide. And as I mentioned, though, key for the accounting firms that want to grow with profitability in the microbusiness segment is really about one thing. It's about saving time in this work. And getting more done in less time, this means that they can actually say yes to more customers. It also makes this time saving, makes it possible for accounting agencies to offer a very attractive pricing. And as I just mentioned, this is key to have a very simple and very affordable offer to this segment. So pretty much all work we do in collaboration with the agencies is to ensure that our product delivers against this requirement. So just to mention some important initiatives that enable an efficient way of working are, for example, a systematic onboarding of new customers for agencies, and also various other tools that simplify communication in this ongoing then collaboration between the agency and the micro company. So next slide, please. So, and then finally, thirdly, the important priority parallel with this work, we're also working on further developing our sales model. And this is quite a significant and very important shift. So to make this more digital, to align with our scalable ambitions. So in this process, we put a lot of focus on marketing automation and digital leads generation. And we will continue investing in this area with focus on our sort of online store, which is the Briox website in the respective markets where we are present. So next slide, please. So in summary, before we open up for questions, we're very happy to see that 2021 was a very important year of transformation for Briox, for the accelerated growth. Net sales grew steadily throughout the year, and in Q1, net sales actually increased by 63% compared to last year. And at the same time then, as I mentioned, annual recurring revenue grew by a healthy 68% in the same period. So a good, solid start of 2022. We continue delivering on our transformation plan. And as I mentioned, this work includes every function in the company, from sales and marketing to product development. And finally, and I want to emphasize this again, we have made a very important strategic choice as a company to focus on the microbusiness segment, where we intend to take a leading position. And this, we believe, is absolutely critical to have this tight focus to really ensure that whatever we decide is we have the ambition to be the best. And then you have to be very, very choiceful in what you do. So exciting times at Briox. I personally feel very good about having welcomed Eric on board with his experience, and we are quite eager to continue working in 2022. So with that, Eric and I round off, and we're very happy to take any questions if you have some. So thank you very much.
Thank you very much, both Johan and Eric. Yes, we will start off with some Q&A. And the first question from me is that your focus now is on microbusinesses. And I wonder what that transition means for your legacy customers. How do you plan to retain those?
Right. I hear a silent assumption that our legacy customers are not microbusiness customers, but in fact, I would actually say that most of our existing customer base, if you look at sort of the end customers that are typically served by an accounting agency, most of them are actually quite small. So it's not, I would say, a major transition in customer base. It's not a major transition in how we work. Having said that, it's still a very, very important distinction for us as a company to always start with the focus on, that everything we build is built around this very small company with maybe up to 3 employees. And that actually implicates a lot of things in how you plan product development, the kind of questions you ask. You have to be, by default, much more choiceful. So to answer your question, I would say that this is something that enabled us to make tougher and more distinct decisions rather than turning our existing customer base upside down. But having said that, we are now much clearer, especially in our conversations with the accounting agencies, that we always open up the question, narrowing it down to this particular segment. And if a particular agency says that, well, our customer base is predominantly large customers, it's totally fine to sort of round off that conversation and for them to find a great partner elsewhere. So it's rather than for us to clarify our positioning both internally and externally. That's the most important piece, and make tough choices.
Thank you, Johan. And that was actually my follow-up. How large a share microbusinesses is of your existing customer base? And to clarify, I think you said most, basically. But does that mean most are like companies with 1 to 3 employees? Or is it more the broader term of microbusinesses up to 10 employees?
Right. To be honest, I don't have the specific number. I can only make a guess. But I would think that a large majority of the companies that we work with for sure have less than 10 employees. I would guess that most of them have less than that, and that correspond with how this segment looks in general, even though the definition, I think it's even an EU definition, is up to 10. The vast majority are the even smaller ones. Having said that, and I think this is important also to point out, we actually have customers that are much bigger than that. So the point I want to make is that our software is actually potent enough to serve the needs of much bigger companies. It's almost like I would say that it's too powerful from an accounting point of view, which you can argue, well, that's good, but I would actually say that what we want to do going forward is that we want to make it as distinct and tight and narrow as possible, actually, because I can't emphasize enough the importance of actually deselecting and not putting everything into the software and to the offering, both from a commercial point of view, from a marketing point of view, but also from a product perspective. I mean, think about, for example, the mobile app. It could be tempting to put everything in it, but I think that's just the issue where most companies actually go wrong. You do too much, and then you lose it. So I think together with Eric, what we are focusing on is actually to see how much we can remove, or at least hide, or sort of not include in the core offer that is for everybody. I think because if when you're that distinct, at least in my experience, all the great companies, at least the ones I look at, regardless of industry, they are very good at what they do, and that is frankly impossible unless you have unlimited resources. That is extremely difficult to achieve unless you target a very, very narrow niche, and you do that at your very best ability. Then you actually have a chance, even as a small company, to be among the best, and that's our intention.
All right. And Johan, what can you say about the competition, mainly in the micro segment, and what are your main edges?
Right. It's a question I typically get, and I think it's a good one. I would answer it like this. First of all, are there other, I assume you're referring to then other accounting software providers that can serve the segment? And the answer is absolutely yes. Many can do the job from an accounting perspective. Many have very good functionalities. So there's a sea of other potential players for an end user or an agency, for that matter, to choose from. I would say, though, that where we are not unique, but quite distinctly positioned, is that we actually outright say that this is our distinct focus, and it will be even more so in the beginning, in the future. I would say that we tried to have a very, very user-friendly interface. That's very visible for those of you who've seen our new mobile application. And I would say that in working with the agencies, I dare to say that few other players in this field are so sort of pegged up around this micro-business promise, because it's one thing is the actual accounting functionalities, but I would say that for an agency, it's much more about the working process. I mean, I would even, if I were an agency, I would assume that the product does the job. That's the hygiene factor. But having actually a setup that, how would I put this, a process supporting this with one single aim is to reduce time spent while maintaining a very, very good customer experience. That's what it's all about. And here I think we're actually quite unique, focusing all our efforts when it comes to customer onboarding, communication, resources and tools to enable the interaction between the consultant and the micro-business entrepreneur. So that I think is a unique contribution by Briox.
Okay, thank you. And I think we have to stop there in the interest of time. But thank you so much, both Johan and Eric, for attending. I guess I'll see you next time, hopefully. And thank you to the audience as well.
Our pleasure. Thank you very much.
Thank you.
Thank you.
Hello and welcome back to ABG Investor Days. My name is Adrian Gilani and I'm an equity research analyst here at ABG. Our next presentation will be with OrganoClick, and we are very pleased to be joined by the CEO of OrganoClick, Morten Hellberg, who will give a roughly 20-minute presentation, and then hopefully we will have time for some Q&A after that. So with that being said, I will leave it up to you, Morten.
Thanks, Adrian, and thanks for the introduction. My name is Morten Hellberg. I'm CEO and co-founder of OrganoClick. 16 years ago, me and my scientific co-founders set out on a mission to replace plastics and toxic chemicals with different bio-based solutions. My two scientific co-founders, they had since the mid-90s done research in natural chemistries, looking at what is the chemistry behind a tree becoming so strong, or why does some leaves become water repellent, or why does some trees burn less good than other trees? What are the molecules doing this? This is a field of science called biomimicry, in which you look at how nature has solved different functional solutions. Based on their science, they developed a technology which we call modification of cellulosic fibers. That is, we can click on organic molecules to the surface of the cellulose fibers, which are the most common material in wood, in paper, and in non-woven and textile materials. Based on this chemistry, we have developed a number of different technologies. We have our wood protection technology, where we are replacing different type of heavy metals and biocides with silicon minerals. We have our chemistry that are replacing plastics in non-woven and biocomposites. And we have also our textile waterproofing technologies, where we are replacing PFAS and fluorocarbons, which are hormone disruptive, with the biodegradable technology to create water-repellent textiles. Today, we are an industrial company, had revenues of 110 million last year, an increase of 14% in comparison with the year before. We have a production facility up in Täby, where we are producing our different type of chemicals. Today, we have a capacity of 10,000 tons per year, but we are right now installing a new production line, adding another 10,000 tons. Looking at the different business segments, we have a number of different customers, both coming from industrial customers to different retailers. So in the non-woven and the biocomposite business, we have customers like Duni, Ahlström Munksjö, Sharpcell, and Baux and Fredal Rydéns. So spanning from large companies to a little bit smaller industrial companies. In our functional wood and our green coatings and maintenance business, we're selling mainly to retailers within the building sector and also in paint sector, but also to different companies which are working in outdoor and sports segments. Today we have more than 800 resellers in Sweden. We have distributors in more than 15 countries and are working in mainly Europe, but also now targeting US, Canada, and also some Asian nations. If you go back into 2021 and look at the highlights from that year, which is actually now coming into place in 2022, we had in the non-woven and technical textile segment, this is a smaller segment today actually, only revenues of 2.3 million SEK, but we signed a very major deal for us last year with Duni. This is a 5-year deal where we will have revenues of more than 30 million crowns per year. And this is now scaling up during this year. We have also more than 10 customer projects in production trials at the moment. And we were, in order to be able to supply to all these customers, we added another 10,000 ton production line. So here we really see right now an upscaling of our projects. I will come back to that a little bit later, what has happened during Q1. In our consumer goods segments, green coatings and maintenance, we had a revenue increase of 17%, had revenues of 38.4 million. The major part of this revenue growth came from our brand Organotex. Here we launched, we're selling textile impregnation products for different retailers, but we also launched a shoe care product segment, which have been implemented in almost all our retailers. We signed new agreements with XXL, Stadium, and Hööks, and we also actually increased the growth of, we increased the sales with more than 100% of Organotex. One thing that affected us quite badly in 2021 was our filling capacity of cans. This can sound a little bit strange, but we ordered this machine in 2020, and due to the COVID situation, it was delayed during 2021, and that affected us quite heavily. This have now been implemented during the last 6 months, and this year we have no problem at all to deliver on the orders and the demand that we have. So this is really nice. This automated filling line also lowers our production cost for this segment. So this will be seen now during the year. We could already see it in Q1, but it's seen even more now in Q2 and Q3. Looking at Organotex in particular, which is the highest growing segment in this sector, if you look at this picture, you can see how many new customers we've added every year. So every year we've added almost double the number of resellers, and also then, of course, increasing the sales that we have. Last year we added Hööks, Stadium, and XXL, and we have now more than 200 resellers in Sweden, more than 50 resellers in Finland. We have now distributors in Denmark, Norway, and the Netherlands, and are now also looking at the DACH region with Germany, Austria, Switzerland, and France, which is naturally using a lot of textile impregnation as they are an outdoor-loving region. If you look at our biggest segment, functional wood, we had a growth rate of 8.4% in last year, coming up to revenue of 65.7 million. We've signed distribution agreements with Bergs Timber UK for the UK market, which we are now coming into that market. And we had a sales growth of more than 100% in Germany. Germany was a market which we entered 2 years ago, and now we really see that this is growing, and it's growing really well this year as well. One of the major things last year, though, was the launch of our second generation wood protection technology, Organowood Silicium HD, which adds a much improved product. It's more durable, there's easier maintenance, and we believe this can compete a lot more with the traditional pressure impregnated wood. So this is something that we are now really focusing on getting out on the market, and we start to sell it in larger and larger volumes this year. However, we grow okay last year, but we had really difficulties with raw material prices. We were affected, as most companies, by increasing raw materials, disrupted logistic chains, and also higher shipping cost. And this really affected our profitability last year, as you can see on this slide. Even though we had a steady sales growth, the gross margin went down considerably, mainly from higher raw material prices, but we also had increases in cost due to the problem with this filling line, which was delayed, which decreased our profit quite considerably last year. However, this was something we worked on really hard from Q2 until the end of the year, and in Q4 we could see that we had been able to push forward the price increase that we had to our customers, which increased our gross margin in Q4. And this also continued into Q1, as we'll see coming up. If you look at Q1, we saw a continued strong sales increase of Organotex, also good sales growth for Organowood in Germany. Another non-woven and technical textile deal was signed with Ahlström-Munksjö, which launched an agricultural textile where they use our bio-based binder and replace plastic binders that they used in the past. Duni, they started marketing their new Bio-Duni Soft product, and this was the start for their transition, moving away from plastic binders to completely bio-based binders. And we continue to increase production and supply of Organowood Silicium HD, and further improved our margins by adjusting our prices to our customers, and also actually had a positive product mix in our sales. If we move and look into the collaboration with Ahlström-Munksjö, as you remember, the deal with Duni is a deal which we approximate will be a little bit more than 30 million crowns per year. Duni have one factory where they are producing non-woven material, where they are using this bio-based binder to bind the fibers together in the non-woven materials that they are using to produce napkins. Ahlstrom-Munksjö, on the other hand, is a company producing a lot of different type of products made of non-woven. Agricultural textile is one product, but they also produce material for wet wipes. They produce materials for traditional wipes. They produce it for filter applications and so on. And they actually have 5 factories around the world where they are using binders, and in approximately the same volume as Duni is doing in their own factory. So for us, this is this customer have a very large potential moving forward. And right now we are supplying one factory in Sweden where they are now starting to use our bio-based binders. But we are also now looking at the factory in France, and they have one more factory in Europe and 2 in US where they are using binders. So right now, with the current product that they are launching, this agriculture textiles, we see that the volumes will increase during second half of 2022, but in particular in the first half of 2023. But we have now around 3 different development projects with Ahlstrom-Munksjö for completely other applications. So they are really also now on a way to replace plastic binders to bio-based solutions. If you look at the Duni deal, which is now ongoing, they are currently selling 6 articles, but they are about to launch now a number of new articles during 2022. And their major launch will be in September this year. And in their annual report, which was recently published, they also set out a timeline for when they want to become completely free of plastic binders, which will be, it's a 3-year plan, and that is, of course, this we are working with together with them now to realize. Coming from this, our volumes from this contract will increase in Q2, but in particular in Q3 after the September launch. And the Q4 will be the first quarter where we see really good volumes from the prognosis that we have. The organowood, this really important launch of Silicium HD. This is a new generation wood protection technology. It's based also on silicon as the current technology, but we have completely remodified the way we are treating the wood. The impregnation process have been optimized, also the drying process, and we have invested in one of the largest high temperature drying equipment that exists today. We have tested this since 2015, so we see that we have a much higher durability compared with the current product, but also an easier maintenance for the end customers, which we believe altogether will be a much more competitive product in comparison with a traditional pressure impregnated wood. So this is really interesting now to get on the market, and we start to get up to quite good volumes in comparison with our normal wood, and the aim is to replace the traditional organowood completely by the end of this year. If you then look into the figures for Q1, in particular we improved our gross margins, and this I'm very satisfied about, that we've been able to move forward the price increases that we've had in raw materials to our end customers, and we increased the gross margin from 23% to 25%, mainly due to this price adjustments, but also due to a more effective production internally. And this, I think, will be seen even more now in Q2, when we have higher volumes due to the seasonal changes that we have in our sales demand. In terms of OpEx, it increased, but not as much as we increased the gross profit. So that also led to an improved EBITDA. So we had a positive EBITDA in the first quarter, and also an improvement in EBIT, which is of course nice to see after 2021, where we had decreasing profitability almost every quarter. So very happy that we now have changed the tide and are now moving forward with increasing sales and also improved profit. If we continue to look forward in 2022, we believe we will have a very strong sales development of Organotex this year, as we had last year, but also good sales increase in the German market for organowood, and also of course the launch in the UK market. The Swedish market seems to be a little bit more cautious due to several reasons, but mainly I believe it's due to the more global environment that we see right now. We had a cold spring in April, but now we see very nice order intake from BioClean and Organowood when the spring finally came. So I believe we will have a quite solid sales of these two brands also in this quarter. The binder, during the second half from September, then we will see a substantial increase in sales there. So I believe this for the full year, it will be a quite good year for the binder segment as well. And we have also good progress with two other non-woven customers, except these that we have already talked about. So hopefully we will see some more customers being added during this year. And I believe also we will have a limited increase in OpEx, because we have now a good facility where we can produce our products. We don't add any more sales or marketing people, so we keep the same organization as we have right now. And this is the aim that we will work with towards profitability. So with that, I thank you very much for listening.
Okay, thank you so much, Morgan, for your presentation. We'll go right ahead with some Q&A. And I'd just like to start off with one of the last things you mentioned about the potential new contracts within nonwoven. The last time we spoke, you said that you were finished with production tests with one customer and that you had some final production tests ongoing with another one. Could you just give us a status update on where you are in those two close contracts?
Yeah, I think we are on that. We are in this place. We have one customer where we are technically proven for their products. Now it's about the whole supply chain contracts and so on. It may take some time because of the situation that we have on the global scale, but we're pretty sure that we will have this Aktier as a customer later on.
Yeah. And a bit more of sort of a macro backdrop. As I understand, roughly 10% of global oil consumption is for plastic products or petrochemical products. And since we're in a situation right now where oil supply is becoming more and more uncertain, are you seeing sort of that accelerate the desire among your customers to move away from plastic binders?
Yeah, I would say so from a more general perspective. And in particular, we have actually benefited a little bit from this, because the oil prices have gone up so much, and the plastic prices have gone up more than what we need to increase our prices for. So we are more, we are actually gaining a little bit on momentum on this, yes.
Okay. You mentioned that Duni, they have a very concrete target of phasing out plastic in 2023 in their binders. Your current contract that you have, that's roughly 30 million per year. How much of their total production is that, and what's your potential to sort of grow within Duni, so to say?
There are some areas where we can grow more. I wouldn't say that we cannot double it, but we can grow some within Duni. There are some areas where we are not implemented yet, or where they are, which is a little bit different compared with the areas where we are. But most of the volumes we take with this contract, and then there are some more areas where we can grow.
And as far as you know, if Duni wants to phase out plastic binders by 2023, do they have another option to go with, or is it just you out there?
I think we are pretty unique at the moment. There are, if you look at the non-woven business as a whole, there are certain different type of production technologies. You have the production technologies which we are targeting is the air-laid production, the wet-laid, and the chemical bonded dry-laid nonwovens. Then there are a production technology called spunlace, which is a completely different technology, where you're using long cellulosic fibers like viscose, for example, and you entangle them by using hydro entanglement. You're spraying water jets on them. Okay. So you can get some plastic-free products with this technology, but they are not used for exactly the same application. But however, there are plastic-free wet wipes, but it's not the competing binder there. It's actually using spunlace technology. The applications which we are targeting, they require higher wet strength. But certain consumer products you can produce without binders, where you don't need so much wet strength, but not for professional uses. So we see ourselves as quite unique when it comes to bio-based binders.
Okay. And are there other nonwoven producers out there that might not be customers of yours today that have similar targets to Duni, that they want to phase out plastic binders in a few years?
Yeah, absolutely. Yeah.
Okay.
Yes.
Maybe all of them really have one of these targets. Okay.
Yeah, I'd say most of them have these targets today.
Yeah.
It's a matter of, I mean, we're new. This is quite new in this industry. I mean, we are a new actor in this industry, and still working. We're working with all the big players today.
Okay. And also just a more sort of broad strategic question. You've talked before about moving towards a business model where you just sell sort of the chemical mix instead of more advanced production as you do today. First of all, what would concretely have to happen for you to move towards that kind of a business model? Because that would be quite a bit of a change compared to what you do today.
Well, in the biocomposite business area, which I didn't mention so much today, there we're really working towards this business model. We are now in discussions with potential license partner of which can produce the material, and where we can send the binders and the chemical additives that is required to produce the biocomposite. So what is required there is that we get these discussions in place and set up machinery at their facilities. But I believe that here we have a quite good momentum right now. We have some interested parties, so hopefully we can move ahead with this during this year and get out with more news later on.
Okay, and are you looking at a similar solution for the functional wood business as well, or are you more content sort of keeping that in-house?
No, I mean, we have said since long that we will look at also license partner within that segment. However, that is maybe a little bit longer process compared with the biocomposite area.
Okay, and in that case, just a final question from my side before we round up. You have a margin target, or you want to reach 20% EBIT margin in time. But say that you sort of move towards this type of a business model where you just sell the chemical product, presumably that is much more sort of high margin business. What would the margin potential be like if you move towards that type of a business model, would you say?
That is hard to say exactly, but I believe coming to 20% margin would be the first step anyway, and then we'll see what happens after that. Coming from that, we say we want to have a gross margin from variable cost of 50%. We need to add about 10% fixed production cost, so we'll have a real gross margin of around 40%, and then 20% of our sales will be other OPEX related costs like sales and marketing and research and development and administration. So this is what we believe is achievable in, let's say, a number of years from now when we have reached a little bit higher volume.
Okay. In that case, I'd like to thank you again for your presentation, and I will just leave it up to you if you have any final remarks before we round off.
No, I think it will be an interesting year, in particular to scale up our non-woven and technical textile business, our binder production. However, it is also a challenging year with the difficult situation on the raw material market that we see, but I think we learned a lot from last year, and this helps us a lot also now moving forward.
Hello everyone and welcome back to the next presentation. Very excited to have C-RAD with us today and the CEO, Tim Turn, to present the company. And I'll leave it over right away to you, Tim.
Great. Good morning, everyone. My name is Tim Turn and I'm looking forward to present C-RAD to you. So next slide. Would like to start with a short introduction of C-RAD. What we provide is exceptional high precision, safety and efficiency in advanced radiation therapy. C-RAD is about 70 employees strong. Last year we had a revenue of 260 million SEK and delivered an operating profit margin of around 14%. Next slide. Cancer is among the leading causes for death worldwide. In 2020, there were about 18 million new cancer cases diagnosed, and about half of the patients could be treated. Only half of the patients could be treated. But it is expected that this number is to rise until 2040 to about 29 million new cancer cases, so a dramatic increase. And essentially, there are three ways of how cancer is treated nowadays. One is surgery, one is chemotherapy, and then the third pillar is radiation therapy. And C-RAD, with its product, with the solution, is focusing entirely on the radiation therapy. Next slide. So if we look at the cost benefit of the C-RAD solution, if we look at the typical investment for a treatment room, for a radiation room, the C-RAD solution is priced at about 5% of an investment for such a radiation treatment room. And what the customers get is patient safety and enhanced efficiency. And let me give you an example. Breast treatment or breast cancer treatment is one of the common indications where radiation therapy is used. With the C-RAD solution, the risk for radiation damages, in the case of breast cancer, to the heart is significantly decreased. And if we look at the efficiency, one of the huge challenges in cancer care in general is access to radiation therapy. And what I mean by that is there is a huge unmet demand in radiation therapy capacity. With the C-RAD solutions, we are able to treat the patients, or the customers are able to treat the patients faster, and by that treat more patients on the existing equipment, hence increasing the efficiency. Looking at the cost benefit, typically customers see this as a strong benefit. Depending on their clinical profile, they might focus either on the patient safety or on the efficiency part, but nonetheless, the system goes for both in both directions. If we go to the next slide. We believe strongly that this technology is becoming standard of care. And when we mean standard of care, it means that essentially in our target markets, all linear accelerators, or the large majority of the linear accelerators, is going to be equipped with surface tracking. And if I may give an example, when we look at the tenders that are published in the Western world, and for example in Scandinavia, we can see that over the last year there was a very strong development, and by now essentially all tenders that are published are including surface tracking, also the C-RAD technology, or technology like ours, as a requirement. Not all markets are as sophisticated as the Scandinavian market. However, we clearly see a trend towards a higher adoption of surface tracking in the developed markets. Another very good example is a tender that is published in Spain, and we are also expecting another tender in Italy coming up soon, where we see that the government made surface tracking as a mandatory part of the whole tender. So if we go to the next slide and take the slightly more clinical angle to the standard of care question, I mean, we see a very strong development of the adoption of our technology from 2015 over the years. Whereas 5 years back, or in 2015, the technology surface tracking was primarily used for breast treatment, which was already a very important and huge indication. We see that now the customers that have adopted our technology are using it on 70% or more than 70%, if not on all their patients, to support the treatment. So the technology has certainly developed from a niche solution towards a solution that can be adopted for almost all patients. if we move to the next slide and look at the global market. Today, there are around 15,000 Linux installed worldwide. If we look at the different markets and how sophisticated the markets are, we are saying that we are focusing our activities on what we call the advanced market, which stand for approximately 70% or around 10,000 linear accelerators. If we think about making it standard of care, it can probably be debated if it's 100% of the Linux or if it's 75 or 80%. But if we take a bit of a conservative approach and say it is going to be 75% of the Linux, we see and look at an addressable market of around 8,000 units. If we then in return also see how many units are already installed, we see that there is a market penetration of around 30% across all vendors, not only C-RAD, but across all vendors, leaving us with an opportunity to sell another around 5,500 surface tracking systems, either as a retrofit, meaning on an existing Linux, as an upgrade to an existing Linux, or as part of a Linux replacement together with a new Linux. Next slide. Looking at the market potential, we basically assess it to be based on 3 pillars. It is the business with the new Linux. It is the upgrade business or retrofit business, meaning Linux is already installed and we upgrade the installation with the C-RAD technology. And then the more important part of the business is, or increasingly important part of the business, the service contracts. If we look at the annual number of new Linux sold, we look at around 1,300. If we focus again on the markets that we are primarily interested in, we can say that around 700 Linux are sold in what we call the advanced markets. With the current pricing and price levels on the market, that gives an opportunity of 1 billion SEK on an annual basis. And then we have not looked at the installed base. So the installed base, I mentioned before, around 5,500 Linux that are to be equipped. Again, multiplied with the current prices, average sales prices, we are looking at around 7 billion SEK over time for equipping the installed base. And then last but not least, the service contracts. For us, it is still fairly new business, the service contracts. However, what we see that, and when we look at our peers, they have a service business of around 40%, or in some cases even more than 30% of the total revenue is attributed to the service contract. So, I mean, there is another huge opportunity also in the service business. And what I haven't mentioned is that the radiation therapy market is growing year over year with 6 to 8%. So this opportunity is even growing over time. Move to the next slide. Looking at the last 5 years, C-RAD has been growing with around 18.5% on an annual basis. We had achieved our break even in 2018, and already last year, 2021, we delivered a 40% operating profit margin. Next slide. Taking a look at the competitive landscape, we can say that the market is basically split between 2 vendors. There is 1/3 roughly C-RAD systems and 2/3 from our main competitor, which is Vision-RT, a UK-based company. However, if we look at the new number of new installation and the market split for new installation, it looks slightly different. C-RAD is by far more than 1/3 of the new installation are coming from C-RAD. And this is due to the fact that Vision-RT has been cooperating over many years with Varian, and this collaboration has ceased recently, well, 2-3 years back now. And from that perspective, this sales channel was not available for Vision-RT anymore. Whereas C-RAD has focused over the years very much on direct sales, distributor sales, and recently engaged with Elekta. Now Elekta has in certain countries, namely in the US, in Japan, and in China, the opportunity to also promote the C-RAD product as part of their proposition towards the end customer. Next slide. If we look at the value proposition, it is about treatment efficiency, it's about accuracy or precision and safety. There are a couple of studies published over the years that are looking at treatment efficiency improvements based on the C-RAD technology from different angles. And what I'm showing here is two examples, whereas the conventional way of how patients are positioned with a technology which is called cone beam CT, which is basically standard or was the standard, being replaced by surface tracking. And here the improvement is about 80%, whereas a patient positioning with the cone beam CT takes about 5 minutes. The same positioning and the same setup of the patient can be achieved with the C-RAD technology in roughly 1 minute. Another angle to look at the technology from a precision perspective, if we look at the laser-based positioning, which has over many years been the status or standard for customers to set up their patients, we see also an accuracy improvement with the C-RAD technology. And last but not least, the safety aspect. A study published just recently has shown that what they did is they assessed all the incidents that happened over a certain period of time. Excuse me. Sorry. They looked at the databases and the incidents that happened in radiation therapy deliveries and assessed that around 1/5, also 20% of these incidents could be avoided by using surface tracking. So there is definitely a very strong improvement from a safety perspective using and implementing this technology. I guess looking at the overall value proposition, it becomes clear it has clearly developed from a niche solution into a solution that helps in a versatile solution that helps in many aspects in the radiation therapy workflow. Next slide. Looking at the workflow that a typical patient undergoes receiving radiation therapy. The conventional way was that a patient receives around 30 fractions, meaning that the patient needs to come back for receiving radiation 30 days in a row. With the more advanced technologies that supported by C-RAD technology, high precision radiation therapy can be applied, allowing to reduce the number of fractions, meaning how often the patient comes back to receive the radiation significantly. So when we look at stereotactic treatment protocols or hypofractionation, the treatment fraction can be reduced down to 5 fractions, typical protocols for C7, 9, or maybe 10, max 15 fractions. So what we see is that there is a potential for significantly decrease the number of fractions, creating definitely a benefit for the patient, but also, again, the improvement in efficiency for the radiation therapy center. Next slide. Looking at the clinical advantages of the C-RAD technology, it's dose-free. There are alternative solutions, and I mentioned earlier in the presentation cone beam CT, but the C-RAD solution is dose-free. The benefit is less side effects for the patient after the treatment. It is non-invasive, clearly translating into an ease of use advantage for the operator, but certainly also for the patient. It is markerless, creating highest patient comfort, less impact on the clinical workflow. C-RAD has put a lot of effort over the years to have a seamless integration and therewith a usability advantage over other vendors in the space. And last but not least, patient compliance. I mentioned on an earlier slide, customers that have implemented our technologies use it on the large majority of their patients, 70% or more of their patients. If we move on to the next slide. Taking a look at our business model. C-RAD is focusing on advanced radiation therapy clinics, and we approach these customers through 3 different sales channels. Traditionally, C-RAD has been very strong on the direct sales. In all major markets, we have established our direct sales organization, and if I say sales and service organization that are working together with the customers. In certain markets, we have established distributors, which are independent distributors that are selling the equipment on behalf of C-RAD towards the end customer. And the third channel is the industrial partnerships. I mentioned the Electra cooperation already, but there are other partnerships as well, where we are co-marketing our products through the channels of our industrial partners, meaning they have the possibility to offer the solution as part of a bigger package towards the end customer. And this is really where we see the huge opportunity now for us also moving forward, because there we have the possibility to scale the business. Looking at the competence that we have in-house, it is primarily focused on the development, on the product knowledge, of course, sales and service. Service is becoming more and more important. I mentioned it earlier. The production is entirely outsourced, also again giving us the opportunity to further scale the business moving forward. Next slide. If we look at the service business, and here looking at the attachment rates by region, in the US, we see a very service-friendly market, meaning that the large majority, and I'm speaking here about 90+% of our customers are adopting or signing up for a service contract to service or outsource the service for the product to the manufacturer, to C-RAD. In Europe, we are at around 60%, a little bit north of 60%. And the APAC region, we see a little bit of a different picture. Depending on the market, we have, for example, Japan and Australia, which are certainly very sophisticated markets, where the large majority of the customers is signing up for a service contract. But we have also markets like China, for example, where customers are not yet adopting service contracts from the manufacturer in the same way as we see it in other markets. The service business is important for us, has over the last year shown high growth rates, which is certainly a positive indication and the confirmation that the customer want to engage in a long-term relationship with C-RAD. For us, it is an interesting business as it is a long-term commitment. Typically, service contracts last 3 to 5 years, and the customer pays on an annual basis a certain percentage of the initial purchasing price to C-RAD. Next slide. Perhaps taking a look at the result from a financial perspective of our service business in the first quarter this year. The order intake increased or basically tripled compared to the previous year. So that is certainly a significant improvement related to the overall development and the adoption or the increasing adoption of service contracts, but also we had 2 large orders received during the first quarter where the customer at the point of sale already signed up for a service contract. For us, important KPI is the percentage of the service business of the total revenue. And that's what we see on the chart here on the right side. We are tracking this since 2018, where the service percentage was close to 4%. And now in the first quarter 2022, we reached around 18%, which I need to say is partly related to lower product revenue, but we clearly see the trend going in the right direction. And as I mentioned earlier, if we look at the peer group, other companies, other suppliers in radiation therapy, they have a service business that is about half of their total revenue. So certainly still a potential for us to grow in this area. Next slide. Let me move on to the next slide. If we look at our growth strategy, it is based on 3 pillars. It's the product excellence, it's the sales excellence, and the service excellence. We spoke already about the service piece. From a product perspective, I think the technology, the base technology is well developed. We have a clear understanding. We have a clinical proof. We have many proof points for the certain application that we want to use the technology for. From our perspective, the next step is now to expand our product portfolio in neighboring areas. And what we are looking at is right now we are looking at expanding our product portfolio towards workflow management. Sales excellence, with the product being established in the market, the customers know about service tracking. A large part of our future success is dependent on our ability to roll out the message, to get in contact with as many customers as possible, to get them excited about the C-RAD technology. And that is what we are doing right now, both from a sales perspective, but also from a marketing perspective. Meaning, if the technology is on its way to become standard of care, essentially all customers out there, sooner or later, will be interested in this technology. We move on. Taking a quick look at the financial highlights from last year, order intake increased by around 13% during 2021 over 2020. Revenue increased by 18%. And last year, we delivered an operating income of 36 million SEK or 17%. Sorry, 36 million SEK or 14%. Next slide. Looking at the financial highlights from the first quarter, we certainly had a very good start from an order intake perspective, and as a matter of fact, also from a revenue perspective in all regions except for China. And I guess we are all aware of the current situation with ongoing COVID lockdowns that is clearly affecting also our business. China, being an important market for us, was very much restricting our ability to continue to deliver systems to the Chinese market. And as a consequence of that, revenue decreased with 6% in the first quarter. We move on to the next slide. And perhaps to dive a little bit deeper in this China situation, what we see is that in all major cities there are ongoing lockdowns. It's partly temporary, but partly, like in Shanghai, for example, already since 2.5 months. And that has certainly also affected our distributor that is selling our products across China. And as a consequence, as they were not able to install the systems and did not receive the payments from the customer, we stopped deliveries to the Chinese market in Q1. And that is the reason why we had such an impact on the revenue side during the first quarter this year. However, we are very optimistic about the mid and long-term perspective. If we take a look at the COVID lockdown, I mean, we believe this is a temporary effect and we will get through the situation, and the opportunity in the Chinese market is very important, and we see a lot of potential for C-RAD. And as a consequence of that, we have decided to take the chance now to further invest into our local sales organization and strengthen our sales team in this very important market. Next slide. Looking at the development of revenue and operating profit over the last years by quarter, we clearly see a seasonality pattern, which usually has a weaker first half of the year and then a stronger second half and a very strong fourth quarter. This is both affecting order intake, but also revenue. But what we also see is clearly a trend going in the right direction. I think we as a company have achieved or reached a point of showing clinical proof of our technology. Customers are adopting the technology, and in the context of making this technology standard of care, we see clearly a positive development. Next slide. To sum up the presentation, C-RAD is doing something important for society in the fight against cancer. C-RAD has already a proven and recognized product with more than 1,000 systems installed out there in the market. With the measures that we have taken over the last year, starting with direct sales and then developing distributor, but also industrial partners, we do have a comprehensive market access in all relevant markets. And we believe surface tracking is becoming standard of care. That gives us a significant growth potential. And last but not least, C-RAD has a very stable financial platform. And I think I close the presentation, but I do believe we have still a few minutes for questions. Thank you very much.
Thank you very much for an interesting presentation, Tim. And we're a bit short on time, but I'm going to squeeze in at least one question. And I think the sort of tender processes going on in Europe is quite interesting and a potential trigger for the share as well in the short term. So maybe if we could talk a bit about that. So thinking about the Spain and Italy tenders, that's combined 160 Linux, if I remember correctly. And then thinking about Croatia and Poland as well, that's possibly close to 200 there as well. But this would mean a revenue potential of north of 150 million. But how should we think about attachment rates to these Linux? Are they required, all of them, to use SGRT? And then also, how should we think about competition from Vision RT, and what sort of market share you expect?
Yeah. So yeah, I mean, in both cases, or in the Spain case, I mean, all Linux are supposed to be equipped with surface tracking technology, and then it is still the competitive question. So I think in Spain we face certainly a competitive situation, and so we will also in Italy. Having this said, I do believe that especially in the Italy case, we are in a very good position with the C-RAD product. We have done a lot of market development over the past years. In Italy, C-RAD is already market leader, by far market leader when it comes to surface tracking. So we see this as an important opportunity for us, not only for this year. I think from a revenue perspective, we are more looking at the next year. But nevertheless, I mean, we will see the orders developing. I think Spain has already made good progress to develop this project, and it will be interesting to follow this moving forward.
I agree. And just to dwell in a bit more, I mean, do you expect to see the sort of 60% attachment rate of service in these markets as well? Or is the south of Europe a bit lower on that part?
So I think that is a question that I can't answer to the full extent at this moment. I mean, Spain, for example, there it is mandatory to have service contracts. So, I mean, there we can expect that the large majority of the customers is going for some form of service contract. Having this said, Italy is a little bit different, in a different position. What we expect is that the service contracts, based on the history and the experience in this market, that service contract discussion is coming into play once the warranty has expired, the warranty of the system has expired. So typically the service contracts in these markets are not negotiated at the time of the product sales.
Okay, very interesting. Always nice to hear about C-RAD, and thank you very much for doing this presentation with us. We need to wrap up now, but in about 2 minutes we will return with a presentation from Catella. Thank you very much.
Thank you.
Hi, and welcome. My name is Patrick Bratelius, and I'm an equity analyst here at ABG. Next company to present is Catella, and with us today we have CEO Christopher Abrahamsson, CFO Mattias Brodin, and IR Michelle Fischer. Take it away.
Thank you, Patrick. Good afternoon, and thank you for joining us today. I am Christopher Abrahamsson. This is Mattias Brodin and Michelle Fischer. I will start the presentation by introducing and giving an overview of the revitalized and now completely property-focused Catella. Following that, I'll go through a brief highlight of our Q1 results that was released on May 6th. And after that, we'll open up for a short Q&A moderated by Patrick and the ABG team. So if we go to page 2, next slide, there we go, wonderful. So today's Catella operates in 3 different segments within property-focused business areas: investment management, principal investments, and corporate finance. We manage 126 billion Swedish kronor as of the end of Q1 in investment management, which is our pan-European investment management platform, out of which 75% of assets under management are managed in property funds, and the rest in various asset management mandates across Europe. Principal investments is where we invest our capital, our equity effectively, into a broad and diversified portfolio of investment projects together with our partners. As of Q1 2022, the project development companies and project management companies are also included in the segment to give even better transparency between investment management and principal investments. And corporate finance is our real estate advisory and brokerage arm with leading positions across Europe. And I would also want to highlight that corporate finance is an important advisor to our other 2 business segments in a lot of transactions across Europe. We go to page 3. Really briefly, by having a pan-European reach and across property segments in various ways across the balance sheet for our investors, we can also benefit from internal synergies, and that's something that we've been working on a lot over the last couple of years. As mentioned, corporate finance can be an advisor to both principal investment and investment management when it comes to buying and selling assets and providing market intelligence. Principal investments, our development projects there can also be sold into funds, and we have funds that have our internal asset management mandates as well, which means that we can manage our own assets without leaking fees to third parties. And I think maybe most importantly, a lot of co-investments that we make through principal investments will open up new and larger institutional asset management and other mandates across Europe in investment management. So we're starting to realize more and more of this, and I think this is something that we'll start to talk a little bit more about value creation in coming quarters. So if we go to page number 5, describing investment management in a little bit more detail. So in this segment, so we link external capital, and Catella is pretty much exclusively institutional capital into European property. So we link the external capital with real estate investments. So our property funds and asset management mandates exist in a broad range of asset classes and geographies across Europe. So we have a growing portfolio, which I'll go into a lot more about the growth and the future prospects, with, I'd say, great diversity in both asset classes and risk profiles, and long-term sticky institutional capital, which is very important for our long-term profitability and baseline. We've grown this business since really 2015 to manage, as I said, 126 billion Swedish kronor So besides acquiring real estate assets into funds and mandates, we also are an active manager and developer of properties and a whole actually new areas and cities, yielding good risk-adjusted returns to our investors. On page 6, we'll show a little bit about the history of investment management. So over the last 7 years, investment management grown AUM on an average of 23% a year. And during 2021, we continued to deliver significant growth with strong and improving underlying profitability. You'd say investment management really is the core growth engine of Catella. And we have a clear strategic focus on raising new capital and particularly into sustainability assets and products across Europe. We can see very, very strong growth in the last couple of years specifically, and particularly into our green residential funds. A little blip here in January of 2021, we divested our French asset management operations, reducing the baseline from 2020 onwards. And we've also exited a number of low margin mandates in certain European countries. But despite this, we delivered a very strong AUM growth in 2021 and continued so in the first quarter of 22, and a full year operating margin last year of 23% in the segment. I think investors into our products are mainly, as I said, European institutions that are attracted. I'd say, we're selling our historical performance, but a little bit of our niche is we have very, very strong local presence in every market that we operate, both through our corporate finance and asset management platforms that provide a baseline for and competence and intelligence in each local market, giving our investors further confidence in our ability to deliver these above our peer sector returns. And the growth here, it really has delivered, an increasing and steadily increasing and expanding margin, where our fixed fee compared to our fixed cost has displayed a pretty strong leverage on our cost base. The operating margins keep expanding, which gives us a relatively predictable future earnings stream from investment management. So if we go to page 8, I'd like to move on to principal investments, our newest business area. We deploy our own capital here into real estate investment projects, primarily with partners. So we're never, hardly ever at least, alone in a project of scale. And currently we have 16 projects in 6 European countries. Spanning across asset classes as logistics, residential, office, and mixed use. So a pretty diversified portfolio, both from an asset class and geography perspective. And the overall target for Catella here is, above all the synergies that we've already discussed, to develop a standalone IRR on average over the longer period of 20% on our capital. Until today, we have delivered significantly in excess of this, actually at 50% IRR to date. But I don't want anyone to have that expectation going forward, but we are at least delivering above our own expectations and have a really nice, strong portfolio going forward. If we move to page number 9, we can, as I said, besides generating material profits now in the last couple of years on a standalone basis, the principal investments also unlocks value to the rest of Catella. The sourcing of projects are done by local partnership, our local teams, with real deep knowledge, which they get not only from their own experience and their own teams, but also from our asset management platforms and corporate finance intelligence. And even though, with 16 investments to date of about 1.3 billion of equity, so each co-investment is sometime, on a moderate size because we want that risk diversification. and a timeline of delivering projects that are not too choppy. Even though they're moderate in size, they can unlock a lot bigger mandates, so that if we go in with, say, 5, 10, 20% of the equity, we will still have the development mandate, an asset management mandate, and sometimes the sell side mandate on the entirety of the invested capital, which gives us a nice fee leverage model. Of course, on an arm's length basis, we can also sell a completed project into our own funds. And so overall, by deploying our equity into various projects across Europe, we're not only building up a nice portfolio of capital gains, but also recurring mandates over time for the rest of Catella. We go to page 11, and we'll turn to corporate finance, sort of the heart and the beginning of Catella. Corporate finance is a leading advisor in the pan-European real estate market. We have about 200 colleagues across Europe, and a target of maintaining or achieving a top 5 position and a very strong niche delivery in every market where we operate. The main line that we do is large scale / complex buy or sell side transaction advisory and brokerage. But we have in recent years moved into higher margin businesses such as debt advisory and complex capital markets transactions. And we also have in certain countries a bit more recurring revenues coming from valuation mandates and residential developments, which is quite unique compared to our peers, I would say. If we go to page number 12 on corporate finance, still, one of the key differentiating factors here is a strong local expertise. And I would also say a very, very close partnerships in each countries where we are. We have partnerships and managing directors have been with us for 20 years. And coupled with the pan-European market intelligence and the reach of a coordinated group, not in sort of a franchise model, which is very common in the market, I think we have a much stronger network than some of our peers. We have a long history in the markets where we operate and a broad offering from smaller scale, but most of them big buy and sell side transaction up to complex debt advisory and IPOs. Corporate finance, again, also provides significant value and intelligence to all our other investment management and principal investment decisions throughout Europe. So let's go to page 14. Just a quick highlight of our Q1 results we released a few weeks ago. On a group level, we divested our remaining shareholding in Catella mutual funds in early January. And thus, we basically completed the transformation that we began in 2020 of going from a broad range of investment businesses and financial services into a property-focused company. And moving ahead, that really now enables us to focus on growing and refining the Catella that we present today with businesses that are much more tightly linked, have a lot more synergies, and then we can now focus our efforts, especially at a group level, on growing and doing business development in the areas that we wish to grow in. To support additional growth and synergies, we also entered into an agreement to acquire the majority stake in the investment management and development management company WPP in Poland, thereby establishing sort of Catella Poland for real. We have some assets already in our funds in Poland, but this gives us the opportunity to take over the management of those assets. We have acquired an existing portfolio of some size in AUM and a great skilled and experienced team that also gives us the platform to work with principal investments, equity investments in Poland, where we now have a platform for growth. Very excited about that. It's a key strategic market on the European landscape for us. And we continue to have a very, very strong liquidity position. We had 1.1 billion of cash at the end of the first quarter. And I think over the last 12 months, we've used our balance sheet a lot more effectively. We have chosen to leverage our investments less and using excess cash since we have such quick turnaround in some of our development projects. And again, having a strong balance sheet and liquidity position where the market is today, we think is becoming more and more important. On investment management, we continue to deliver stable growth in AUM. We're now at 126 billion. And even though the growth was, I'd say only, but 3 billion in the quarter, Q1 is seasonally extremely slow in our market. But on an annual growth basis, that's still a very healthy number. And importantly, we kept increasing our operating margins. And to further focus on growth here in the right areas, especially with the sustainability ambitions that we have as a group, and the focus of our investors is really moving rapidly, and it should, into these types of products. We launched our second Article 9 dark green fund, which is called Elithis Towers, which is the world's first energy positive residential impact fund, where we will, together with our partner, Elithis Group, develop 100 energy positive residential buildings, starting in France and spreading across Europe. We're very proud of this, and to further stress how much capital and how much success we've had in this field by being I would say a front runner, especially in residential dark green products. Our Catella European Residential 3 fund, which is also an Article 9 dark green fund, has reached over 1 billion euros of assets under management. And looking ahead in investment management, we remain well positioned with over 12 billion Swedish of uninvested, unlevered capital ready to deploy in the right opportunities. Principal investments, we completed the first sale from our InfraHubs logistic portfolio in Sweden, which resulted in an IRR and an equity multiple far exceeding our group targets of 20%, and confirms the business model of developing really solid, modern, sustainable logistic properties with first-class tenants and in grade A locations. We generated a total profit of 106 million, plus an additional 30 million to be recognized when the installation of the solar panels on the roof is completed later this year. An additional 3 InfraHubs projects in Sweden are being completed and planned for sale in 2022. And all in all, we expect the sale of 7 projects out of our portfolio in 2022, out of which the Cactus Towers residential development project in Copenhagen will be the biggest. In corporate finance, following the divestments of mutual funds and the wind down and liquidation of our bank, etc., we also performed a strategic review of corporate finance, resulting in a difficult decision to close down our operations in Germany and the Baltics. However, over the last several years, these platforms have not contributed materially to our synergies and have accumulated significant losses to the group, which means the decision is hard, and it impacted the first quarter earnings negatively. But on an ongoing basis, we should see much stronger underlying operating profit margins in corporate finance as a whole. And we are now focusing completely on our 5 really big, strong European markets and pan-European debt advisory, where we see an increasing demand as credit markets are tightening and refinancing needs become more urgent in the market. And as a final point, it's worth noting that the sale in InfraHubs in Norrköping, very successful, also was done sell side on an arm's length basis by our corporate finance team in Sweden, further highlighting our synergies across the group. So let's go to page 15, a little bit of a summary of the consolidated results in Q1. So very, very happy to continue to deliver strong quarters here. Revenues grew by 200 million year over year to 581. Operating profit grew dramatically to 111 million after being negative the same quarter last year. And we delivered a very, very healthy operating margin of 19% on a group level. Even though earnings per share were down fractionally, last year's earnings per share were impacted by a sale of our French platform that yielded a profit in financial net of 130 million. And we had a slight revaluation of our runoff loan portfolio in this quarter, 2022. If you adjust for those effects, those one-time effects, our earnings per share actually grew by 1.56 krona on a year-over-year basis, which is we're extremely proud of. Investment management, as we've pointed out a couple of times, has grown to 126 billion, which has been growing by 17 billion in the last 12 months, and stable operating margin in the 20s. And I'd say that the really key thing to point out in Q1 was we delivered a profit margin over 20% without any material variable or performance fees. That really shows the strength of our fixed fee to fixed cost model with the size leverage that we have now in investment management and continue to grow. In principal investments, obviously we had one significant gain on sale, but we also deployed another 200 million into various projects. However, our landmark development project, an office tower in Düsseldorf in Königsallee, was refinanced, thereby reducing our equity, but you know, moving that project healthily forward. And at quarter end, as I mentioned earlier, we had about 1.3 billion invested in 16 projects across Europe. Corporate finance, Q1, always very slow. We had a seasonally, I would say, normal quarter. But when you adjust for the one-time restructuring costs of exiting in the Baltics and Germany, you'd see, when you clear that out, an underlying improvement of margin of 20 million year over year, which highlights the continued strength we have in our remaining operations, and which we will now focus on growing, and also to connect further with pan-European mandates, especially in debt advisory. So if we go to the last slide, slide 16, before opening up for Q&A, just highlight where Catella is today from our perspective. So we've shown again that we have a very strong momentum in investment management with significant opportunities for further growth with uncommitted, unlevered capital of 12 billion to be invested. We're excited and very encouraged and proud of our investor interest and the money flowing into our sustainability-focused funds and our dark green funds, which we continue to launch. To further grow and improve the underlying profitability in corporate finance, we've exited a couple of markets and can wholeheartedly focus on where we want to be and strengthen the market positions in our remaining markets. After the quarter ended, we agreed to acquire the majority of Warsaw Property Partners. And as I mentioned, this is a really synergistic existing platform that gives us both a strong platform to grow from in investment management and principal investments in a new market for Catella. And a final point, we made a first successful sale of logistics assets in Sweden. And I would say with the remaining development projects for sale this year, we will see a strong profit growth in 2022 and an additional strengthening of our balance sheet going forward into an interesting and challenging market. And with that, thank you all for listening, and would like to open it up for questions.
Thank you, Christopher, for that presentation. Let's start off with some Q&A before we wrap this up. Your AUM has grown with a CAGR of 23% since 2015. The operating profit within property investment management has during the same time grown by a CAGR of 45%, I believe. Can you talk a little bit about the future scalability within this operational segment?
Sure. I think we do have existing platforms. So the infrastructure, both at group level and especially in our biggest investment management platform. So Catella Residential Investment Management, based in Berlin. Catella Real Estate AG, based in Munich, which is commercial. Catella APAM in the UK and Ireland are our biggest platforms in investment management. They have reached scale now where launching new funds and mandates really means that they have to focus on fund management, portfolio management, and asset management, and really very limited growth in the back office and other functions. The offices exist, and very little growth is needed in that cost base. Naturally, we are still investing in some, especially in ESG resources, and a little bit on the capital raising side, but that's all growth related. So yes, there's still a lot of leverage to be had on the operating margin side. I think what we have left to do is reestablish in France, where we had a large portfolio before, which we worked actively with, and to get some of our moderate-sized asset management platform across the sort of 500 million to 1 billion hurdle of asset under management, where you really get the leverage, and therefore we think we can continue to expand our margins.
I see. Thank you. Then, as a final question before we wrap this up, perhaps you can talk a little bit how you see the cost inflation impacting the divestment of your coming principal investment projects, please.
Sure. I think on the cost side, we're well positioned. We have fixed construction contracts for anything that's under development right now and being positioned for sale in 2022. So the impact of development cost inflation is going to be limited. There will most likely be a slight impact on the exit pricing, given where interest rates have been moving. We can see that in certain areas in the market. But we have great first-class assets with strong investor interest. So even though maybe the exit price will be marginally less than what we envisioned 2-3 months ago, it's still a very, very healthy margin, and we're still projecting IRRs above our hurdle or above our target. So I think that the impact for us is more on the exit pricing rather than the cost, where we are protected, which is very important. And secondly, I would say what we're doing is also divesting and putting cash on our balance sheet in preparation for future acquisitions or developments where we're not really exposed in the second half of the year in real development costs. So we feel pretty good about that timing.
Sounds interesting. Unfortunately, we have run out of time, so I would like to thank Christopher, Matthias, and Michel for this presentation, and thank you so much for listening in.
Great. Thank you, everyone.
Hello everyone and welcome back to ABG's Investor Days. My name is Carl Bokvist and I'm an industrial equity analyst here at ABG. With us now we have CTT Systems and CEO Henrik Höjer, and we will have the same format as before with an introductory presentation followed by some Q&A from my side. So without further ado, Henrik, thank you for joining us and welcome.
Thank you. Thank you, Carl. And I also say hi and welcome to the CTT presentation today. I'm Henrik Höjer, and since 1st of April this year, I'm the CEO of CTT. I've been 12 years running businesses in other business areas, and I'm really happy now to be back in aviation business. Before leaving the aviation business, I worked 18 years with Saab in different aircraft programs, but mostly with the Gripen fighter. And it's really nice to be back in aviation with specific requirements, driving amongst other things, quality, but more important, I think, attracting really competent people, and it's quite interesting. But let's talk about CTT. That's the first picture. As you know, CTT, we have a passion. We solve the moisture paradox in aviation. It's simple, 2 problems, 2 solutions. The dry problem we solve with humidifiers on board, and the wet problems we solve with anti-condensation systems. You're also most likely familiar with our first quarter earnings, but I'll run through them quickly anyway. So our net sales increased to 49 million compared to 31 last year, the first quarter. That's actually an increase with 56%. Our EBIT was 14 million compared to 1 million last year, and our earnings per share rose to 0.76 Swedish crowns. And we also generated a positive cash flow on 9 million compared to a negative 7 last year. So, what about the market? Yeah, I would say that we are now not back to normal, but CTT is in a recovery mode and in a good position for continuing to grow and grow back. For the second quarter this year, we forecast the net sales between 50 and 55 million. And important factors in our recovery and growth is that all aftermarket sales, they are almost back to the levels in 2019. And it's strongly driven by resumed intercontinental flying. Our private jet-driven business is short-term driven by the VIP business, but also from 2023, we should see that the business jet comes into and helps us growing as well. OEM sales will remain on a low level due to the low production rate of the 787 aircraft, which is only 1 to 2 aircraft per month. Retrofit, the outlook looks really better, but no orders yet. When we now look at the business landscape, we saw that air travel was rebounding in the first quarter. And North America, Europe, and also Middle East, they are leading this recovery, whereas Asia, parts of Asia and China is lagging behind due to the close downs. We see a gradual recovery in international passenger traffic, and also the transatlantic traveling is coming back. The US and Middle East airlines, and now also lately the European, they are starting to do their medium and long-term strategic plans to increase their passenger capacity and also upgrade their fleets to strengthen their competitiveness. The US airlines reported in April that they foresee a very strong second quarter, where traffic starts to rebound to pre-pandemic levels with a very strong demand for both business and leisure travel. And also a little bit later, the big European airlines reported the same. Airlines also forecast to come back into black numbers in the second quarter, despite high fuel prices, but they see that the demand is so strong that they can offset these increasing costs on higher ticket prices. But air travel is cyclic, we know that, and with higher interest rates and also higher costs, higher inflation, this can have an effect on the passengers' willingness to spend on tickets. But right now, airlines are very, very optimistic, and if they are right, we will see a good recovery on our business. So, aftermarket. As you saw on the first quarter, aftermarket is a very big portion of our business, and we foresee that they will continue to grow and recover. This business increase is based on a few factors. We have more products flying than before the pandemic, both on A350 and the Boeing 787. 99% of the delivered Boeing 787 fleet is now flying again, and later on, when Boeing starts delivering 787 again, we will have even more aircraft out there. There is more than 100 aircraft there to be delivered. A350 market was in 2021 higher than in 2019, and we're seeing that it will continue to grow since we add more and more Airbus 350 to the fleets. So in summary, our aftermarket growth is driven by more flight hours coming from longer flights, higher utilization per aircraft, and also an increasing number of aircraft with CTC systems on. OEM. The OEM market is still lagging behind, and it will not contribute to our growth in 2022. But we are in a strong position when the OEM market starts to recover. Boeing 787 is currently on a low build rate, 1 to 2 aircraft, and it will gradually increase to 5 aircraft per month when Boeing starts delivering the aircraft again. Airbus is currently targeting to put their A350 program up to 6 aircraft per month from today's 5. And later on, Boeing expects to start delivering the 777X in 2025. And we are on all these aircrafts. In the background, you see our latest customer. It's Detta Airways with their Airbus A350, the first out of 8, with 2 humidifiers on board. And we always welcome new customers. I think this is an important picture when we look at the OEM growth. And this is how we try to grow this market. We try to grow it with higher selection, with higher aircraft production rates, more content, and of course we try to be on the new programs. As you can see on the 787, we try to get back and have more content, adding the humidification to the cabins. In Airbus A350 and also Boeing 777X, we are everywhere, but we need to get the airlines to select us, so higher selection rate. And then, of course, incremental upgrade and new programs where the long-range Airbus A321 is one opportunity, both for humidification and also for anti-condensation, and they're also adding the Boeing 737 MAX. Then in the future, new programs, we are there and trying to see what kind of position we can have on the new aircraft and increase the CTC content. Cabin humidification retrofits. Quite a lot of interest there. The pandemic put a spotlight on the importance of good air quality, both for passengers and for crew. But at the same time, it stopped a lot of the investments and upgrade programs. So now when travel is rebounding, we, CTC, start to get back in the position we were in 2019. And we notice a growing airline interest for cabin air quality humidification. Short term, there is a limited number of upgrade programs, but the projects will restart when air travel is starting to recover and also the airline comes back into black numbers. This is also partly driven by the delays and the delivery problems we see by 787 and 777X that the airlines need to upgrade their older aircrafts. So this is an area which we haven't penetrated. And now, together with our partner, Collins Aerospace, we're really strengthening our efforts to get into this market. Anti-condensation. Yeah, we're currently on a low level when it comes to anti-condensation retrofit segment. But the moisture protection market is currently driven by sustainability, topped with a record high fuel price. And this should make the investment payoff time really be favorable for the airlines. The low-cost airlines are increasing the numbers of passengers per aircraft, and this should mean that they have a greater need for anti-condensation. We're also increasing our efforts to obtain a supplementary type certificate for the Boeing 737 MAX, and we're focusing on all the European airlines where sustainability is a target on their agendas. We have a strong prospect list. Adding to that, our current customer Jet2 ordered another 57 new aircrafts, Airbus A321, and also Transavia ordered another 100 A320s, and this is of course great opportunities for CTT. This is a new slide that you might have not seen before, and it's the freighter market. And during the pandemic, we also saw an increase in the freighter market, and we see that it will continue to increase. Both Boeing and Airbus has launched new programs with their newest aircraft and made freighter versions of them, so the A350 and the 777X. And these aircraft will come into service the next 5 years. CTC has therefore started to approach this market, and we see that there's a great potential when this market grow with another 2,400 aircraft to grow it from today's 2,000 approximately to more than 3,000 20 years later. And we are targeting all the segments of this market, so the new aircrafts, passenger to freighter conversion programs, and also the retrofit programs where more modern aircraft, cargo aircrafts like Boeing 777F and Boeing 767F are retrofitted, and we try to get our unification system on board. Pilots are a limiting factor in the whole business right now, and we think that the pilots flying the passenger versions of these aircrafts and getting used to humidification will create a demand for humidification in the freighter business as well. We have already reached our first milestone in this segment, and we are now a catalog option on A350, both for the flight deck and for the flight crew rest. And of course, we're now targeting to get into the same position on the 777X freighter version. If we're successful, we will be on both those two aircrafts, and with the new rules of emission, these two aircraft will be the only ones that can be delivered as new aircrafts from 2028. Private jet. CTT has historically focused on the VIP aircrafts only, and CTT is actually dominating that segment. Humidification is a de facto standard on all the wide-body VIP aircrafts, but on narrow-body VIPs, the penetration is much lower. For business jet, humidification has not even been an option in the past. As we speak, one of the largest events in the private jet business is ongoing in Geneva. I just came back after participating in the first day out of 3. And my short summary is that the message from everybody is that the business is really booming. There is a shortage of both new and used aircrafts. We also see that all the big OEMs are introducing large business jets with longer range, filling the gap between smaller business jets and the VIP aircrafts. As an example, Bombardier yesterday introduced their new Global 8000 aircraft, which flies even longer and faster than the 7500. CTT is part of 2 important important announcements this week. CTT, we got an in-flight humidification VIP system order from Fokker Techniek in Holland, and they're installing our systems on the ACJ 330 for the operator K5 Aviation. Fokker will be the first to install our system in all 6 cabins zones on the A330, and this is supported by 6 humidifiers. We also have our anti-condensation system on board, of course. This will make it the 102nd installation of humidification into VIP aircrafts, both from Boeing and from Airbus. We also today announced together with the ACJ that we have our systems on their A220, and it will be a promoted option and promoted by Airbus. And this is very, very strong for us. And their CEO and president, Benoit, really supports our system and is actively saying that this is needed to get his aircrafts up to the highest standard. So a very good cooperation with Airbus. To do this and make it even easier in the future to select our systems, we have developed a kit together with Airbus, and now it's a kit that can be easily installed by the completion centers. The first systems will be delivered this year, and it will continue with more systems in 2023. The other big opportunity in this market segment is the large cabin business jet, which I already talked a little bit about. And the market consists of roughly 50 to 100 aircraft per year. It is long-range business jets, which are equipped for the best comfort, and humidification is required to meet these high set standards. And as I said, ACJ 220 will enter into market next year. We are on the first couple of aircrafts. As we also reported earlier, we are on one of the Global 7500. That one has now entered into service, and we see that the operator is very happy with the system. We are now reinforcing our efforts to get onto the OEMs and into the OEMs. So we're discussing both with Global Bombardier, with Gulfstream, and also hopefully later on also with Dassault on their Falcon programs. And this is just a slide on the ACJ 220, which we talked about already. Also a slide on the Global 7500, and as I said, this is quite a big market, and we now have humidification in all the zones, and the delivery rate is actually 30 to 40 aircraft, and we really try to get into this market. Last but not least, we're also trying to work with other companies to improve the air quality in flight. And the filter functionality in humidifiers increased the customer benefit and the product value. We have worked with Camfield to ensure that we have a good functionality with their filters, and it really works good, removing ozone and other evaporations. The next step in this is to find our first customer. So with that, I move to the last slide, and now been with CTT almost 2 months. I'm very impressed by our products, and I'm even more impressed by all the skilled and dedicated people within CTT. And together with the CTT team, I really look forward to continue our mission to reduce carbon footprint and also improve the air quality and wellness in civil aviation. And at the same time, continue to deliver shareholder value. And with that said, I hand back to Carl for questions.
Perfect. Thank you, Henrik. So the First question, more of a short-term oriented one. The quarterly guidance, 50 to 55, was based on a bit higher private jet deliveries, that the strong aftermarket might have been a bit too strong in the first quarter, but we're now in May. We're approaching semester or summer holidays for many. Do you also feel that the ongoing recovery continues on the current track, so to say?
Absolutely. Just coming back from travels, I can confirm that traveling is back to normal. It's even chaotic, and but we also see that the flights are coming back, and we should be well into our forecast as well.
Because then if we do hear a bit of worries perhaps regarding, as you mentioned, higher fuel prices, and we have maybe a bit of a hesitant activity from Asia now. Is it still so that it's Europe, North America, transatlantic flight that is driving the recovery?
Absolutely. North America is really on track, driving this. Middle East also back on track. And Europe is really coming behind and picking up, and both Lufthansa and Air France had really strong reports a couple of weeks ago where they're really optimistic. The only cloud on the horizon, I think, is capacity in the whole system, both aircrafts, pilots, ground staff, air staff. That's what's holding it back. I think the demand from the travels are there.
And then if we look at the, so to say, OEM business, when you look at the potential to gain humidification in the Dreamliner, for example, how are those customer dialogues progressing? Are there airliners with both the 350 and the 787 that you can sort of leverage to say, look at what you have in one part of your fleet?
That's really something we try to do, to map this and compare the aircrafts. You see that a few airlines that had A350s are now taking 787s, and we really try to push this. Some aircrafts are redirected to other customers. They thereby will get humidification, and hopefully this can also increase their appetite for the future to select humidification in future deliveries.
But do you feel that this is something like, once a customer actually has humidification on board, have you seen situations where a customer has had humidification and for the next round decided not to select it?
No, I don't think we have any examples like that. No.
So then on the private jet side, or business jet, VIP, private, you released the news today about the ACJ, previously announced it as in development, now it's an optionality. Maybe without saying too much, but the lead times on these projects, and you highlighted the other aircraft that are potentially there. How long could the potential lead time be from discussions to development to actually being selected?
I think ACJ 220 is a good example where we have been developing the system starting late last year, I think, coming into the testing now, and then see the first deliveries out on the market next year. So then that makes us somewhere 18-24 month cycles. I think that is realistic. Then the starting point is, of course, a little bit further down or closer to us, where we need to now start the discussions with, as I said, Bombardier. Hey, we have your system, our system on one of your aircrafts. There is a type certificate for it. The installation is made. Can we see how we can get it on as an option for your production lines? And then, of course, we are in the position starting that now. That will probably take a while before they say, yes, let's go for it. And then you have another 18 months. So you'll have to maybe add this marketing phase on up to a year, and then you have the 18 to 24 months before you can see that we start getting deliveries out.
And the final question, the freighter potential. Does that require any form of modification on your end?
I mean, we have the systems on A350 cabin and crew rest already, so that should be standard. 787 the same. Now We hope that, I mean, and we also have it for 777X, and now we hope that they will select it for the freighter version, so not much. Then, of course, for the huge retrofit market, we will need to see what kind of aircraft come into play and who is the retrofitter of it, and we are starting up these discussions as well. And then it will be more like a normal retrofit for us that we'll have to adopt the kits. But as you know, we've done it before, and I think we can do it in the future as well.
With that, our time is running up. Thank you, Henrik. Thank you, CTT. And thank you, all of you who have been listening.
Thank you.
Welcome back, everyone. My name is Marcus Henriksson. I'm an equity analyst here at ABG. We're very happy to have Fastator here with us today. It's Knut Posett, the CEO, and Kristoffer Strömbäck, the CFO. This is an investment company with both unlisted and listed holdings in the real estate sector. So without further ado, I please welcome Knut and Kristoffer.
Tack så mycket för den introduktionen och vi är väldigt glada, jag och Kristoffer, att få vara här och presentera Fastator. Jag är vd på bolaget och Kristoffer är CFO på bolaget. Och precis som vi sa i inledningen här, vi är ett investmentbolag och har en portfölj där vi har onoterade och noterade innehav i fastighetsbolag. Vårt fokus är fastighetsbolag och fastigheter, och det är också det enda på börsen som är ett investmentbolag i fastigheter. Vi ser många fördelar med det. Dels för er som är investerare att ni får också en liten bredd i aktien och en liten riskspridning inom segmenten av fastigheter. Och vi ser också stora fördelar som bolag, att vi också kan vara lättrörliga på marknaden, på en marknad som rör sig mycket och det händer mycket just nu. Så ser vi en fördel i att kunna så att säga gasa och bromsa i olika segment och även hitta nya segment. Och det som är målet med det vi jobbar med, det är att just vara tidiga i nya segment. Och då kan man ju fråga sig, vad är nya segment i en sån seg verksamhet som fastigheter? Men det är ju faktiskt så att det rör sig rätt så mycket på fastigheter i olika segment, och det är en samhällsrörelse som man följer för att hitta var efterfrågan kommer vara stor i framtiden. Var är prissättningen på hyrorna låga? Var behöver vi mer mark för att tillgodose det som samhället behöver? Skapa arbetsplatser, bostäder och så vidare. Så därför tycker vi att den här konstruktionen som vi har är väldigt positiv, och vi tycker det är väldigt spännande också att få jobba i den här miljön och hela tiden fundera på vad är vårt nästa steg i kanske en ny portfölj eller i den portfölj vi har och de vi har. Vi är noterade sedan ett bra tag tillbaka på börsen, men gick i höstas upp på huvudlistan på midcap. Grundades då 2011, så vi har hållit på ett tag, och de som är på bolaget har en lång erfarenhet av fastigheter. Joakim Kuylenstierna, som är grundaren, är idag affärsutvecklare, var tidigare vd före mig och har jobbat i fastighetsbranschen i hela sitt liv. Jag har också gjort det under en lång period. Jag hade lite andra uppdrag innan, men har under de senaste 20 åren jobbat i fastighetsbranschen och bland annat varit med och startat bolag som Stendörren, det är Carnegie, Agora och andra bolag. Och Kristoffer har en lång bakgrund i fastigheter, men också väldigt mycket corporate finance, och även jobbat en lång tid i Swedbank. Nog om det, då går vi in och tittar på bolaget här. Jag lyckades inte alls där. Och de olika delarna i bolaget.
Ja, så här, på den här sidan så har ni ett pie-diagram över våra nuvarande innehavsbolag. Och det är alltså 7 stycken innehavsbolag. De 3 största står för en ganska stor andel av det totala värdet. Så det är Företagsparken, Point Properties och Studentbostäder i Norden. Och de står tillsammans för ungefär 80% av vårt substansvärde. Sen har vi ett antal lite mindre bolag, och sen har vi en kassaposition och det är lite aktier i noterade fastighetsbolag som tillsammans utgör ungefär 10% av vår balansräkning. Och vi kommer att berätta mer om de här bolagen under den här presentationen. Så vi går igenom dem ett för ett.
Yes, och då går jag över till och titta lite på vår affärsmodell. Och precis som jag sa, önskan för oss är att vi bygger bolag, startar bolag i nya områden och utvecklar och och förädlar dem, bygger en portfölj och sen så kanske tar in partners under tiden och sedan går det kanske mot en notering eller någonting att vi säljer in till ett annat bolag som jobbar just i den nischen och då kanske blir aktieägare i det bolaget. Så ser det ut. Vi har den starka fastighetskunskapen i bolaget och därför gillar vi att starta bolag. Men vi kan också gå in i bolag som redan har startats och bli en både kapitalpartner och då en partner i utveckling. Som exempel på på det är till exempel Svenska Bostadskompaniet som vi för drygt ett år sedan då var ett startat bolag med en portfölj på 300 miljoner. Och under det här året har vi jobbat tillsammans och utvecklat bolaget och idag så är det ett värde på nästan 650 miljoner som vi också annonserat ut att vi säljer bolaget. Det var kanske ett väldigt kort innehav men det var också en fin utväxling. Företagsparken är ett annat exempel som egentligen har funnits ett tag men kanske legat lite lugnt fram till för drygt ett år sedan då vi hade ungefär 300, det är helt startat från oss själva, kanske 300-400 miljoner i fastighetsvärde och idag har vi drygt 5 miljarder och satsat rätt så hårt på företagsparken. Så det är olika sätt att jobba. Så vi jobbar gärna med partners och vi bygger gärna upp bolag själva. Och här är då lite bilder på ledning och styrelse. Jag berättar lite om mig och om Kristoffer. Ytterligare i ledningen finns Svante Bengtsson som är vice vd och har varit med i princip nästan från starten av bolaget. Och sen Joakim Kylenstierna som då är grundare och har ju också innan Fastator byggt upp flera fastighetsbolag. Som jag också nämnde tidigare så ser vi den här investmentbolagsidén som att vi får följa samhällets utveckling väldigt noga för att då också se de reflektioner som det betyder in på fastigheterna och hur fastighetssektorn ska utvecklas. Därför har vi en styrelse som också är kanske annorlunda från andra bolag med ett stort inslag av personer som ligger nära samhällets utveckling. Bland annat då Björn Rosengren, tidigare näringsminister och också en karriär inom näringslivet. Anders Mossberg, tidigare vice vd på SE-banken mer finansiellt. Jacqueline Winberg som sitter i många finansiella bolagsstyrelser. Men har också en bakgrund inom human resource. Mats Lundberg som också var en del av grunden för Fastator. Carl Bildt, tidigare statsminister och ligger väldigt nära rälsen vad gäller samhällsutveckling och världspolitik. Helene Tillberg som också har en bakgrund i human resource och också byggt upp många större organisationer. Därför den här styrelsen ger oss en bra dynamik i arbetet för att se vad som händer här utanför rummet.
Om vi då tittar hur det har gått för oss så har det gått ganska bra senaste åren. Vi har haft en god substansvärdestillväxt. Sedan 2018 har vi här på den här sidan. Och sedan dess så har substansvärdet ökat med ungefär 120% och om man lägger till de utdelningar som aktieägarna har fått så är det upp ungefär 140%. Och substansvärdet nu per senaste kvartalet var cirka 29 kronor per aktie. Och de bakomliggande resultaten som har skapat den här substansvärdestillväxten ser ni på den här sidan. Lite hoppigt och det är så det blir, speciellt när man har lite noterade innehavsbolag som rör på sig en del upp och ner med aktiekurser. I snitt 4,20 över de senaste 4 kronor och 20 öre under de senaste 5 åren och vi har ett finansiellt mål om att vinsten ska vara över 4 kronor per aktie. Och 2021 så var det en bit över 6 kronor per aktie.
Jag kan bara kommentera också att vi är ett bolag som gör utdelning också Och har ju också där ett mål i vad vi gör för utdelning.
Ja, vi har som mål att vi över tid ska ha en stabilt ökande kontant utdelning. Och så har vi sagt att vi från tid till annan kan också göra sakutdelningar av noterade aktier. Och det har vi gjort vid ett tillfälle då vi delade ut noterade aktier i ett tidigare innehavsbolag som hette Offentliga hus, som vi inte äger längre. Men där gjorde vi en sakutdelning.
Offentliga hus kan jag bara ta som en bakgrund att det såldes då för 1,5 år sedan till SBB. Var ett noterat bolag. Ett bolag som då Fastator har jobbat med i över cirka 10 år att bygga upp. Och för 10 år sedan när Fastator började i den nischen, nämligen samhällsfastigheter, var det precis så att det var svårfinansierat. Det fanns ingen marknad för fastigheterna och det var ingen som riktigt helt 100 förstod vad vi höll på med. Det här visade sig sen vara någonting som utvecklades då väldigt väl och blev ett fastighetsbolag med nästan 10 miljarder när vi sålde det till SBB. Så det är också ett exempel på en nisch och vi har jobbat och fortsatt där, och vi brukar säga ibland lite skämtsamt att när banken inte förstår att finansiera verksamheten, då är det antagligen väldigt bra. Men banken är viktig för oss. Företagsparken är då vårt största innehav, precis som Kristoffer sa. Det är drygt 5 miljarder i den portföljen. Den är då inriktad på lättindustrifastigheter. Och affären här är att vi köper styckefastigheter, ofta inte så stora fastigheter. Och gärna kanske med flera hyresgäster. Så det är ofta mindre hyresgäster. Och det gör vi för att det blir en riskspridning. Vi vet också att just i den här nischen så är det extremt. Om man ska beskriva fastigheten så är det ett plåthus med flera portar. Det är den absolut bästa fastigheten vi kan tänka oss i företagsparken. Det finns inte många portar lediga i Sverige. Så de här är oerhört lätt att hyra ut. Det går också att jobba på hyran, där hyran kanske inte är den största utgiften för hyresgästen utan en del där annat är mycket större. Så det finns ett utrymme att höja hyrorna. Och det kom en rapport nyligen om lättindustrilokaler och vakansgraden, och den är nere på under 4%, vilket är rätt så extremt, där det tidigare legat på 10%. Vi är alltså närheten av det som man kallar omflyttningsvakans på bostäder. Så det är en oerhört sug efter den här typen av fastigheter. Vi köper dem på en avkastning mellan 6% och 7%. Vi har en stor portfölj i Stockholmsområdet, en i Västsverige och en i Skåne, och en mindre portfölj i Norrland, faktiskt just fokuserat bara på Umeå. Vi jobbar vidare med det här fastighetsbolaget och målet är att om drygt 1,5 år komma upp till 20 miljarder. Ett mål som vi kommer ta på ett klokt sätt, det vill säga vi köper fastigheter. Det är väldigt många transaktioner och vi kan välja vad vi ska köpa och få den rätta avkastningen. Bra, då hoppar jag vidare till företagsparken. Här är lite exempel på hur vi utvecklar eller ofta förvärvar i ett område, ett industriområde, och sen så när vi har förvärvat en fastighet så blir det ofta så att vi får förvärva fler, och därför är det väldigt viktigt att både hantera förvaltningen väl och även göra affärerna väl, så att man liksom får en spridning, och det kan man se i vår portfölj att det har spridits i liksom industriområden där vi har växt och köpt från andra, ofta egenanvändare och ofta off-market-affärer. Point, då har vi det näst största bolaget i portföljen, någonting helt annat. Här talar vi bostadsutveckling. Vi förvärvar gamla EPA Domus varuhus nu är det knappt någon som vet vad det är, men det var i alla fall varuhus som byggdes på 60-70-talet. Man rev vid Stora torget i alla städer i Sverige i princip. något kvarter och så byggde man en betonglåda med parkeringar på taket. Riktigt fula och tråkiga. Ursäkta. Och gjorde ett varuhus där. Under tiden så har de här varuhusen då inte är varuhus längre utan blivit gallerier. Vi har haft en tuff utmaning i handeln med den omställning som har skett i e-handeln och en del av de här gallerierna har haft det lite tufft. En marknad som inte så många är inne på. Vi är inne på den här marknaden och vi ser någonting annat, nämligen möjligheten att bygga bostäder på taket, vilket vi gör. Så att till det här så köper vi en byggrätt gratis mitt i stan och kan bygga då mellan 150 och 200 lägenheter i bästa läget i stan. Det här ger ju också en stor effekt på gallerian som får helt plötsligt då kanske 400 personer som rör sig mer i gallerian och handlar, och det är där man vill vara. Konceptet har också fungerat väldigt bra med sådana ankarhyresgäster som Systembolaget och så, som gärna vill ligga där folk rör sig. Där har vi ett bra samarbete. Vi äger på, nu ska vi se, 21 orter sådana här fastigheter. Och idag är portföljen då drygt 2 miljarder. Jag ska också säga att när vi köper de här gallerierna så avkastar de drygt 6%. Så att den här byggrätten, samtidigt som vi då jobbar med byggrätten, så har vi en god avkastning i grunden. Och den kommer också bli ännu bättre, den här grundavkastningen, eftersom det blir mer rörelse och fler hyresgäster som kommer röra sig till den här fastigheten. Och byggkostnaden på att bygga detta är ungefär samma eller något lägre än att bygga på ny mark. För infrastrukturen finns ju på plats. Men sen finns det vissa saker som kan vara lite fördyrande. Man behöver ibland förstärka. Ibland inte alls, för att det är så fantastiskt mycket betong i de här husen. Så att det går att bygga direkt 4 våningar ovanpå. Här är ett exempel i Motala där den bilden längst upp till vänster, den lilla bilden är då hur det såg ut innan man rev. Det här är en bild från 50-talet. Och idag ser det ut så här. Rätt så tråkigt, då har man ändå försökt piffa upp betongklossen med något litet hörn och en liten lampa. Och sen efter det här så är det slutprodukten, det vill säga där ser man gallerian i botten och bostäderna ovanpå. Och det här är som ett läkat sår i staden. Så.
Ja, studentbostäder i Norden är som namnet indikerar ett nischat bolag helt inriktat på studentbostäder och helt inriktat på Norden. Vi bildade det här bolaget 2018 tillsammans med 2 stycken branschkollegor, Amasten och SBB, som slog ihop våra, vid den tidpunkten, mindre portföljer av studentbostäder, och tillsammans hade vi ett fastighetsvärde då på 900 miljoner. Sedan dess så har bolaget vuxit ordentligt och idag är fastighetsvärdet cirka 6 miljarder. Det här är det enda av våra innehavsbolag per idag som är noterade. Studentbostäder noterades i slutet av 2020 och gjorde en så kallad omvänd notering när man tog över ett redan noterat bolags börsplats. Fick även en del fastigheter på köpet då. Utöver en gedigen portfölj av studentbostäder så har man också en betydande projektportfölj med flera tusen lägenheter, studentlägenheter i produktion och i pipeline att bygga framöver. Bland annat ett stort projekt här i Stockholm på över 1000 lägenheter som man kickade igång med nu tidigare i år. Vi äger 20% av aktierna och sen som sagt är bolaget noterat. I Sverige så finns portföljen i Luleå, i Stockholm, i Göteborg, i Malmö, i Karlstad med flera städer. Så klassiska svenska högskole- och universitetsstäderna helt enkelt.
Och då ramlar vi igenom snabbt de mindre innehaven. Nordic PM, ett förvaltningsbolag som finns över hela landet och är ett bra stöd för oss både i förvaltningen men också att hitta fastigheter. Så det hjälper oss starkt. Sen har vi Vrenen som då jobbar med bostäder och framförallt i Storstockholm men också i Mälardalen jobbar med utveckling av de bostäderna. Är ett bra komplement till Point som då i framtiden kommer vara största intäkterna kommer vara bostäder. Likaså Svenska bostadskompaniet som jag pratade om lite kort, också bostäder. Liksom samarbetet med Innova om en fastighet i Nacka. Allt inriktning på bostäder. Så att Fastator har inriktning nu på lättindustri och bostäder. Jag tänkte bara avslutningsvis bara kommentera lite kring det marknadsläget som är och försöka beskriva Fastators position i det. Och man kan ta, om man tar Point där vi jobbar med att faktiskt nyproducera bostäder, så ser vi också med en försiktighet på den utveckling som är nu. Och eftersom vi har ett kassaflöde på våra fastigheter i botten som avkastar mellan 6 och 7%, så har vi aldrig bråttom med projekt, utan vi kan alltid vänta om vi känner att det är som det är nu. Det vill säga det är väldigt svårt att räkna på projekt just nu. Man vet inte vad saker och ting kostar. Så det känner vi att det är en bra position. Vi känner att vi har en bra position i företagsparken där alla, liksom i Point också, där alla hyreskontrakt är indexreglerade, vilket gör ett visst skydd då mot inflationen och i sin tur då mot de räntor som också stiger, som såklart påverkar alla bolag och också Fastator. Men där gäller det att jobba med kassaflödet och också ha en viss likviditet beroende på hur det här sätter sig på olika sätt, som jag i alla fall i min värld inte riktigt kan se helt kartan framöver hur det kommer se ut. Så vi känner oss trygga, men med respekt för det som händer. Det var väl lite slutord om det.
Jättebra.
Ja, det är inte bara ni som inte har full koll på kartan just nu. Jag tror det är så generellt där ute.
Yes.
Lite nyfiken, du nämnde i början att segment där bankerna inte vill finansiera. Om man tittar på era innehav, var tycker ni att det är mest åt det hållet?
Ja, det var ju bra att du fångade upp just det där. Och vi brukar säga lite skämtsamt, men såklart Point som är handel. Idag är det ju liksom 90% intäkter handel. Har ju varit ett stort motstånd hos bankerna där man känner en osäkerhet i den utveckling som är. Men eftersom vi ser någonting annat i de här fastigheterna så känner ju vi oss trygga. Men där har det varit en utmaning att få det finansierat via bank. Det har gått på vissa delar men inte alla delar.
Har ni märkt av här nu, jag har lite känslan av att kanske retail är lite mer inne i värmen under det här året än vad det har varit under de senaste 3-4 åren. Är det något ni har märkt av på marknaden?
Absolut, vi ser absolut ett ökat intresse för det. Vi ser ju också att man nu liksom tänker även från retail. Alltså, det har ju förändrats väldigt mycket, och om man tittar på Kina så där liksom de hade fördelen av att e-commerce kom samtidigt som man liksom bygger och planerar. Så har man ju planerat för lite handelsytor. Så att det är ju en återgång till att liksom etablera sig, fast kanske på ett annat sätt, och kanske ha mindre butiker men kanske mellanlager i källaren. Man försöker ju också lösa den problematik som är för e-handeln, för det är inte jättemånga e-handelsbolag som går så där jättebra. Och det beror ju på bland annat den här returhanteringen som kostar väldigt mycket pengar, och kan man få den i närheten, lösa det som många tittar på nu, så kommer de här köpcenterna bli viktiga som mellanlagerstationer också. Så det kommer bli som ett komplement, och det tror vi, det börjar vi se tendenser till, men det har inte riktigt strukturerat upp sig än.
Hur har ni tänkt använda likviden här från Svenska bostadskompaniet? Är det vila lite på hanen nu? Du nämner det osäkert där ute. Samtidigt ska man nå 20 miljarder potentiellt då i företagsparken. Hur tänker ni framåt?
Ja, vi diskuterade väldigt mycket och ja, vi kommer nog förvärva när vi hittar väldigt bra saker, men vi kommer också vara lite försiktiga i vad vi förvärvar och jag ska inte säga att vi liksom har förvärvat företagsparken bara för volym, men det har ju funnits ett värde att komma upp i en volym och både gentemot finansiering och allt möjligt. Och där har vi ju liksom passerat den gränsen. Så därför har vi också en trygghet i att liksom, gå lite försiktigare fram.
Då är det snart dags för nästa bolag, så tack så mycket Knut och Kristoffer. Väldigt intressant.
Tack.
Då kommer snart nästa bolag här.
Tackar.
Welcome back, everyone. My name is Fredrik Stensved. I'm an equity research analyst here at ABG, covering the real estate market and the real estate companies. The next company to present is Eastnine, and we are very pleased to have the CEO, Kęstutis Sasnauskas, with us today. Please go ahead.
Thank you very much, and I'm pleased that I have an opportunity to present Eastnine tonight. If we look briefly at Eastnine, Eastnine is a Swedish real estate company, but with one difference, with all of its assets being actually in the Baltics and now Poland. We focus primarily on prime offices and prime logistics. Today we have a quite significant portfolio of top office assets in capital cities of Vilnius and Riga, and now we also entered Polish market. So our total assets today are around 750 million euros, with property value of around 600 million euros. Our rental income is expected to be at around 33 million euros and total leasable area of 183,000 square meters. So if we look on our properties, actually they are all very centrally located. They are all very modern, and they are relatively big in size. Overall, if you look on our portfolio in Vilnius, we are focused on CBD area and very central locations. Same goes to Riga, again, very modern property portfolio. And in Riga, we also have quite significant development projects. And if you look on our third market in Poznan, which is a regional city of Poland, we just entered with a relatively big acquisition of Nowy Rynek D, which was acquired from Skanska. But I will go into it a bit more into detail. And basically, if we look on the region as such, Baltic and now Polish region, in terms of population, is actually bigger than the Nordics. The region overall historically has been growing faster than the Nordics as well. The Baltics have been converging towards Nordic region over years, and Poland had its own very strong development path over the last 30 years, basically. And it continues that way. So for us, the entrance of Polish market is very natural, but also it accomplishes it opens up very, very great growth opportunities for us. And of course, it's very similar to what we see primarily in our core market of Vilnius. The office segment is significantly bigger in Poland. There are 9 cities as large as the smallest capital in the Baltics. So from that perspective, there is huge growth opportunity. And if you look on the region compared to the Nordics, it's actually bigger. So from that perspective, the universe and growth potential over time is significantly bigger. Just a couple of words of our last acquisition that came after the quarter. It was a very significant transaction, not only for us. It was actually the largest regional transaction in Poland ever made. We acquired the property from Skanska. It's 39,000 square meters of leasable area. Property will be LEED and LEED Platinum certified, as well as WELL certified. The largest tenant is Allegro, a Polish e-com operator, and the property will generate approximately 7.5 million euros of revenue for us. It actually boosts our revenues and boosts our profitability very, very significantly. And of course, for us, it's a natural step to do a bigger transaction in Poland once we enter the new market. Here is just on the map, you can see where it's located. It's very centrally located, very close to the railway station. Very basically, there is a new establishment of a future CBD area in the very, very heart of Poznan. And just a picture of interior of the property, and just a couple of pictures again to see how it looks. So if we now summarize a little bit our properties, we have 14 properties, 183,000 square meters of top office space, at closer to 600 million euros in total asset value. If you look on our top tenants, you would recognize a number of Nordic names. And of course, now we have a slight decrease or significant decrease actually of Danske Bank and additionally new tenant in form of Allegro, which is a Polish operator. But if you look overall on the sort of tenancy, it's a very, very multinational list with very, very strong financials. Again, if you look on the locations, they are all very central. They're very, very probably top locations in each of the cities. And this is how we intend to build our portfolio in the future. Now going a little bit to the highlights of the quarter. We have actually been working with pooling more cash to do this acquisition that is now announced in Poland during the quarter. But we also have a very, very strong fundamentals in the market again. We're seeing higher occupancy rates as well as our portfolio. We see increased rental levels, partially due to indexation, but also there is a bigger push in the market following the inflation. We have positive net letting. We have also very strong fundamentals, especially in Vilnius when it comes to overall letting in the market. But of course, we have one negative news, and that is the war in Ukraine that has affected the value and exit possibilities of our holding in Russia. It's our last non-core holding that was planned to be IPO'd before the summer, but of course the war has scrapped those plans. And we also included Poland, and now Poland already is a part of our investment universe. So if we look a little bit on the macro picture in the Baltics, Baltics actually are performing very, very good. We've seen a slight dip in the corona during 2020. We have a very strong recovery 2021. And actually this recovery continues. Now there are some of the downgrades coming in terms of potential growth, but we still see the market being very, very strong. Of course, inflation soaring in the Baltics faster or growing faster than it is in the surrounding regions. And that is again driven a little bit from a smaller economies. And in a way, this inflation, we see it as more positive because Baltic markets are not as effective for the Euribor, and we are borrowing in Euribor. So the overall, it pushes the prices up, it pushes a little bit even higher the rents up, actually. We've seen relatively stable yields during the last quarter. Yields have been going down quite significantly over 2021, but now we believe they are stabilizing, and at the same time, with the growing inflation, probably growing interest costs, we will see a higher increase as well in the rental levels overall. And that's what we're witnessing right now in the market. During last year, we made 3 acquisitions, 2 in Vilnius, 1 in Riga. Now they are all included in the Q1 figures. The Poznan acquisition is actually already taken over, so it started generating revenues from the 9th of May. So it will be seen already in Q2 figures, but not so fully. If we talk about Melon, Melon is the holding that we made a bigger value write-down during the quarter. It's based on a theoretical model, and of course the weighted average cost of capital increased in our universe. It's also a bit unclear what is the proper exchange rate in the ruble. So the value decrease was quite significant. Nevertheless, we still believe that the company will perform pretty well. But of course, exit opportunities are limited at the time and a bit unclear at this point of time. We also work very hard on sustainability. It's a part of our DNA. It's a part of our overall work. It's integrated fully. But we score 92 points in GRESB. We are actually among top players even compared to the Nordic peers. We are number third company ranked under Allbright's gender equality on Stockholm Stock Exchange. It's among 320 companies overall. So it's a very, very high score. Our green financing is probably smaller compared to our peers, but that's because there is still lower availability of actually that type of financing in our region, in the Baltics, but we're gradually shifting it, and it actually increased to 34%. We actually expect it to increase even further. The acquisition of Novirinek was a green loan, so that share will also increase. And our properties, 81% of our gross floor space is actually LEED Platinum or BREEAM Excellent or Outstanding certified. So it's not only certified, it's actually among the highest brackets there is in the market. So if we look just on some of the financial highlights for the quarter, annual rent 185 euros on average per square meter and year. Occupancy rate 91%, surplus ratio very high at 88%. We think that surplus ratio will increase as we are in the universe of triple net leases. Property yield 4.9, net LTV 41%, and equity to assets ratio still very, very high at 55%. If you look on some of the highlights from the Q1 in terms of revenue is continuing growing, 22% up in rental income, 19% up in net operating income, and 9% up in profit from property management. I will come back a little bit to that later, looking at our earnings capacity, because we are such a fast-growing company, so that is it's even more important to look at actually these days. Our assets at around 630 million euros at the end of the quarter. As I told you, we're at 700, above 700 as of today because of the new acquisition. If we look at earnings capacity, which is probably the most important part to look at when you look at us, you see that our rental revenues are actually compared to Q1, end of Q1, are growing by 30%. Our net operating income is growing actually 33%, and most importantly, our profit from property management is growing at 45%. And this is an effect of adding more properties, is that we actually see a significant boost in profitability because our costs are not growing the same pace. So there is a huge value creation by adding more properties to the portfolio. Just briefly on the share development, of course, share was hit during the quarter, as most of the real estate companies. We probably were as well affected by the fact of uncertainty with Russia. But if you look on the share price and distribution of our NAV, you can see that actually we're trading at a slight discount, even if we exclude the Melon Fashion Group from our calculation. So why we think Eastnine is an exciting story? We are a growth company. We grow very fast. And if you look on our overall development of our business, you see that quarter by quarter, year by year, actually we add on growth, and especially given the last acquisition, our growth is actually boosted quite significantly. If you look on per share statistics as well, especially last acquisition actually boosts our profit for property management actually per share 45% compared to the last quarter. So this is a very, very significant improvement. We pay stable dividends, and long-term equity, of course, was affected by the revaluation of Melon during the quarter, but we still see lots of potential there in the future. So just to summarize why we believe it's an exciting story, we have a unique portfolio of very high quality assets. Those properties are actually inhabited by very high quality tenants, most of them Nordic or multinationals, which means that the risk, underlying risk of the business is very much international, not only the Baltic, but at the same time, those properties are valued at the Baltic yields. This in combination with financing opportunities that are also Nordic gives a significantly higher margin. And those properties generate very strong cash flows, and they have been very stable over the years. We also lead the way, or we lead actually the work in sustainability in the Baltics. And if you want to invest in sustainable assets, this is a very good choice. And actually, we see a very exciting future development, a future for us, not only that we have a very strong growth ambition, but also there is an underlying convergence in our investment regions that has been ticking for the last 30 years. It continues ticking, which means that the growth is slightly faster, inflation is slightly faster, higher, and actually, nevertheless, this region remains competitive. I've just recently looked at some statistics, and it shows that actually the Lithuanian market share in terms of export of services doubled over the last 5 years, despite this high inflation, which means that actually there is quite a lot of value added created in the region. So this is briefly, and I'm opening now for questions.
Thank you very much.
Thank you.
Great presentation. So I guess we can start with the recent acquisition in Poland. As you said, it significantly boosts the NOI, rental income, income from property management, etc. What is sort of, maybe if you can expand, what is sort of the rationale for going to a new market versus acquiring something in Vilnius or Riga or?
I think the rationale is that liquidity in our current markets is relatively low. So it has been more challenging to do acquisitions over the years. We still want to continue grow relatively fast and develop as a company. So once we established a very strong position in Vilnius, and today in Vilnius, our position is similar to what Fabege has in Stockholm. So it's difficult to actually double it, basically from that perspective. There's simply not so much physical assets to buy. And in Riga, we've taken a bit more conservative stance. We want to grow through more developments because we see that in general, there's very little of that quality that we would like to buy today. So the market is still very emerging. And then we started looking northwards and southwards. And of course, Tallinn is the smallest capital. And if you look southwards, there is 9 cities similar in size as Tallinn. So, and at the same time, the yields are significantly higher in Poland. We recognize very much the business condition, the terms, the tenants that we used to work from Vilnius. And for us, it was very, very natural to actually start looking and recognize ourselves in Poland. It's still euro-denominated rents. It's still euro-denominated lending. So even there is a currency risk in the market, there's been very stable kind of euro-denominated rent market as such. And the tenants are multinationals playing into euro markets and globally. So from that perspective, it felt much more appealing actually to go southwards now, because yield expectations are a bit high in the northern capital, and south is a bit better.
Makes sense. You also mentioned this sort of high inflation, which I guess everyone is talking about nowadays, and strong rental market. Maybe if you could quantify what in the current markets, what's the sort of like-for-like rental growth? Are we talking 2% or 5% or what? What do you see?
I think if you look like-for-like indexations, they are around closer to 3, I would say. But at the same time, we see a push for higher rents, especially in Vilnius, and this is driven by construction costs, relatively little available stock right now. The construction costs have grown 30 to 40%, maybe even more in certain segments. which means that basically at the current or at level of 15 euros, you basically cannot build and rent profitably. So today we see that the rents are going up, if not talking about euros month per square meter rents. So we're talking about, I think our average is slightly above 15. The current market is 17 to 18 euros and going up to 20. So there is actually, there is a further push up in terms of for the new leases. It of course depends a little bit on location and the premises and so on that you lease, but in general there is a quite significant push upwards. That push is somewhat weaker in Latvia, but very strong in Lithuania right now. So it looks quite strong, and demand actually remains very strong despite the uncertainty. And it's rather maybe the contrary, that we see even more companies moving from Belarus, from Russia, and even from other regions, and trying to establish themselves in the Baltics.
And speaking of the sort of building cost inflation, you mentioned 30-40%.
Yeah.
And you have a pipeline of potential future projects.
They are unfortunately delayed because of that. We are looking and monitoring situation very closely. We are very ready to start one project, but we see that the rents are not actually moving as fast as construction costs have moved. So we just need to look and evaluate the situation a bit more. It's difficult to start a project when it's such short cost commitments by the constructors as well. So from that perspective, it's a big challenge as I see it. But I think we will see with some time what will happen, how it will all evolve.
Do you expect the sort of occupancy in the existing stock to increase on the back of lower supply coming to the market?
Absolutely. In Vilnius, it is very visible, especially in the prime offices, where we see both move towards demand for quality growing. We see basically that basically all of our tenants are in growth mode, so they demand more premises. So from that perspective, we see very strong market fundamentals actually going forward.
That's the final question. I believe a year ago, or almost a year ago, your board decided to look at sort of the logistics space. Any thoughts or any updates on that?
We're looking at it. We're looking at this segment as well. We haven't managed to do any transactions yet. And for us, logistics will probably start with acquisitions anyway. So we continuously looking. Of course, the yields moved very fast. And for us, so we will continue. Of course, the reason for that was actually to be able to continue growing because we saw more limitations on the office market, our ability to grow, and that's why we sort of entered logistics. But now we see much more opportunities in Poland in both segments. So from that perspective, I think our universe is more easy to achieve those goals.
Right. Makes sense. All right. I think that concludes this session. So
thank you very much.
Thanks for having you, and thanks for listening in. Welcome back. The next company up to present is Studentbostäder i Norden, and we are very pleased to be joined by Rebecca and David, the CEO and the CFO of the company. With that, I'm leaving over to you.
Thank you. Hi, and welcome to this presentation of Studentbostäder i Norden. My name is Rebecca Eidenert, and I'm the CEO of the company, and have been that since we started in the autumn of 2018. Before I started at SBS, I worked at Rikshem with several positions in property management, rental, and project development.
Yes, my name is David Svensson. I'm the CFO of the company. I started here the 1st of January this year. Before I joined Rebecca, I also worked at Rikshem as a property manager and a controller, and then I joined Amastan as head of controlling.
We are the only pure student housing company that are listed with a focus on becoming a leader in the Nordic region. And since last year, we are located in 3 of the Nordic countries, and currently we manage 4,700 student units. We have also communicated further acquisitions of 500 units that have not yet been closed. And we have 2,900 units in our project portfolio. This adds up to a total of more than 8,000 units. And over 75% of our portfolio is green or social sustainable assets or a combination. During the first quarter of 2022, we have acquired a property in Örebro and agreed to acquire a new development project in Copenhagen of 173 units, and that will be completed and closed in Q4 2023. The company was founded in 2018. We could see that there were a lack of a nationwide player in the market, and in 2019 the portfolio was doubled through a large acquisition in Luleå. That was over 1 billion Swedish crowns. And in 2020, we set up our own organization, and before the new year, we made a reverse merger, and through that, we were listed at First North. 2021 was an intensive year with acquisition in both Denmark and Norway. And through these acquisitions, it was natural for us to change our name. In the beginning of 2022, we received a BB- rating from NCR, and by our Q1 report, we have a property value of 6.1 billion. And through this year, we have hired the Shore Plus radio, and that will continue when we close the communicated acquisitions and when we complete projects in our pipeline. Over the years, the portfolio has gained a wider geographical spread. Management is done cost efficiently through our digital tools and with our own staff. In bright green, you can see our project portfolio, and through this, we get even more efficient management units, but also a stock that contributes to an expanded green and social sustainability. The project portfolio will contribute with higher rents a square meter, and we have also made a conversion, as you can see to the right. Thanks to the fact that small apartments receive a higher rent a square meter when you negotiate with the tenants association, and the model available for norm rent. And the conversion in dark green is the average rent for our student units for which we have applied for the investment grant before the end of 2021, and the average rent for residential apartment that received the investment grant in 2019. And as you can see, our small units gets almost 50% higher rent a square meter. And this combined with lower property costs for the new production will contribute to higher operating nets that will come in when the projects are completed. And the Nordic region has had as a strategy that during recession, the population should further educate themselves instead of going unemployed. When the economy then turns, the population is ready for the labor market. The number of students has historically increased during recessions, and the increase of students, if we compare with the population as a whole, is extremely large. If we also look at our largest customer group of young people between the age of 19 and 26 here in Sweden, this will increase with 100,000 people within the next 10 years. And every year, the United Student Union of Sweden releases a housing report. Green cities have a surplus, light green has a balance, and orange is a shortage. Our student housing is located in the largest part in places with shortage. Today we have about 400,000 students here in Sweden and 100,000 student units. And here is an overview of some of our properties in Copenhagen, Stockholm, Jönköping, Luleå, and Gothenburg. And our continued growth will take place organically through our own project portfolio, but we also want to combine that with further acquisitions of either existing cash flow properties or purchase of land. The strength for us as a company and the student housing segment are the higher rents that we can achieve if we compare to the residentials. Also are the universities in growth cities where the demand is high, and we can, with the tenants, also work more digitalized. And we have a great advantage in being a pure student housing company when it comes to digitalization. As a property owner, it is difficult to digitize for their different customer groups. Changes are often taking place on the entire portfolio. Our tenants, they demand that we are digitalized. So through this, we can increase the customer benefits and at the same time lower our property cost. And we have put together a structure with smaller players who have adapted their system to what we ask for. And this would have taken years if we had a traditional property system. Instead, we use HomePal, which contains all our master data washed so we can integrate with new systems. And we have HomeQ, where our leases take place. And now we also have our app through AV, which is our tenants' interface, where they can sign their lease agreements, pay their rental notice, make error reports, and communicate with us. In our new production, we will also introduce digital keys that will be in the app. Sustainability is important for us as a company, but it's also important for our tenants. The impact we can make on our young tenants, we are convinced that they will take that through their whole lifetime. Our collaboration with Läxhjälpen is extremely important, and instead of sponsoring them centrally, we have our own SBS classes. These are young people in social disadvantaged area who without Läxhjälpen would not have grades to be able to study in high school. We offer these young people priority to our student housing when it's time for higher education. And all our new production is built with green building certification and is designed to receive the energy bonus, which means that the energy consumption is less than 56% of Boverket's building regulations. In the new production, the tenants are responsible for the cost of electricity and hot water with help of EMD. These are currently costs that are included in the lease agreements, and through this, the costs are transferred to the tenant. Upon completion, our project portfolio will generate a rental value of 260 million per year, and with the average rent of 2,450 Swedish crown a square meter. So this will increase the rent a square meter for the entire portfolio. Ongoing projects are now Jönköping, Karlstad, Stockholm, and Norrköping. In total, these projects includes over 1,800 student units. All have fixed-priced construction contracts, and the projects are proceeding according to the time plan. The first phase of Karlstad and the third phase of Jönköping will be completed in August this year. And the houses we built are designed to meet the requirement that today's students have. And through small units with common areas, we can get a lower monthly rent for the students, while we, as a property owner, get higher rents a square meter. And through the common areas, the students quickly get to know each other, which reduce the moving in and out. And in all new production, we focus on the physical activity for the students with outdoor gyms and group training on the evenings. And here you can see the ongoing projects. And with that, I will turn it over to David.
Thank you, Rebecca. As I said before, I started here the 1st of January, and I'm really happy to present a strong first quarter for Studentbostäder. If you look at the revenues, they're up by 43% to 73 million, and the net operating income is up 63% to 44 million. This is possible, though our cost only increased by 21%. There are mainly three reasons for this improvement. The first one is the vacancies are down from 12% last year to 5% this year. And the second is the properties we acquired last year have a better surplus ratio than our existing portfolio. The third one, maybe the most important one, is that now we have a better property management team in-house that manage the properties more cost effective. These improvements give us a surplus ratio of 60% compared to 53% last year. If you look at the profit from property management, it's up from 2 million to 16 million. Then I have to say we had some extraordinary costs last year that lowered the result. The change in value for properties is 110 million for the quarter, and the result after tax is 109 million, or 0.57 crowns per share. That's equal to return on equity by 23% on yearly basis. If you look at our financial targets, it's to grow the net asset value per share by 20% and the profit from property management by 20% as well. As I said, the profit from property management is up a lot, almost 470% due to extraordinary costs last year, and the net asset value has increased 90% the last 12 months. If you look at the risk limitations, the ICR should be above 2, is 178 today. The LTV should be below 70, is 63% today, and the equity ratio should be 25 or above and is 31 today. If we look at the charts for the past 2 years, we can see at the top left, the property value has gone from 2 billion to over 6 billion in 2 years. It will increase even further when we close the acquisitions in Denmark later this year and Norway. The total portfolio have an average yield of 4.03% in the valuation. Up to the right, you see the total income, and it's increasing as well. And you can see we have some seasonal variation in the income, and that's due to our 10-month rent in some parts of the portfolio. The net operating profit have the same pattern, and you can see down to the left that the net asset value per share has increased every quarter the last year. When we look at the balance sheet, I would say Studentbostäder has a quite simple balance sheet. When we look at the asset side, we have assets of 6.3 billion. 99% are properties or cash position. And we look on the other side, we only have one class of share. We don't have any hybrid bond or preferred stocks in our equity. We finance our assets with 3.3 billion in secure bank loans with an average interest rate of 1.49%. We have 15% or 600 million in a sustainable unsecured bond and 200 million in shareholder loans due to some acquisitions. The total average interest rate is 2.23% and the average time to maturity is 1.8 years. If you look at the debt maturity profile down to the left, you see it's quite even coming years. The average maturity time is 3.1 year, and 2024 is a bit higher when our bond expire. And we have 1.9 billion in equity. When we're looking ahead on our earning capacity, we have divided in 3 parts. Our current earnings, that's our portfolio as it stands today. And that gives us a net operating income 161 million and a profit from property management by 46 million. If we add the acquisition in Denmark and Norway, we will be closing this summer. We have a net operating income 193 million and a profit from property management of 75 million. If we also add the development properties in Karlstad and Jönköping, we have a net operating income of 280 million and a profit from property management 96 million on yearly basis. Yes. Thank you.
All right. Thank you very much. Great presentation. I have a few questions.
Yeah.
Maybe if we can start with, both of you mentioned the acquisitions in Norway and Copenhagen. And Rebecca, you spent some time discussing or speaking about the sort of market in Sweden.
Yeah.
What's sort of the difference between the countries? Are there any fundamental differences one should be aware of?
No, but I think you can see that the lack is the same in those countries. Norway is a little bit worse. I think I need some water. Where it goes about 5 students per unit. In both Sweden and Denmark, we have 4 students per unit.
And it's still the students that lease the housing rather than the sort of schools or the universities, and
yes,
that's similar.
Yeah.
All right. Then on the surplus ratio, which was up significantly year over year in Q1, and you mentioned 3 sort of main components. What's the surplus ratio in sort of new construction, and will that further enhance the NOI margin going forward, or is sort of the journey of increased surplus ratio, is that behind us, or how should we think about that?
No, it's not behind us. We believe we will keep increasing the surplus ratio as we acquire properties that more newly build, and our project portfolio is better than 60% in surplus ratio.
Right. So can you give us a number on the new construction on average?
No, but I think it's about 70-75%.
All right. So significantly higher.
Yeah.
Great. And then Rebecca, you mentioned when it comes to the projects that they are sort of negotiated on fixed prices, which is comforting in today's environment. What about sort of future projects and potential start if we look out 6 months or a year or 2? How should we think? Are those sort of at risk for being delayed, or how should we think?
Of course, now we have like 50% of our project portfolio already contracted, so that's positive. But of course, it's a negotiation always when you start a project. But I think that of course we can change things in the projects to get the prices down. And also I think it will be good for us. It's going to be maybe easier also to get land to do the projects, and we see that we have good margins on the project, so we are positive.
Have you seen anything like that so far or yet, that building rights prices have have come down, or it's easier to get access to
Yeah,
land?
but we are communicated with some of the municipalities and also negotiating with new projects. And when we discuss, it's not the so big increases that we can see right now. So we will continue and work with the projects, and we think that we really have a good project pipeline in good cities with good location, and that's the important.
And then continuing on this topic of projects, there was sort of an investment grant in Sweden, if we go back, which is under discussion or under review. How does that affect your projects, and whether or not you receive the grant or don't receive the grant?
No, but we have always worked with two calculs, that one with the grant and one without. And we will continue to do that. Now the grant was taking off the budget of 2022, but there are money in, so you can get it in 2022, 2023, and 2024. But now we also have an election this year in September, and of course with the inflation, this will be. We will see what happens with the grant, but of course I think with the such situation right now, they need to do something.
Right. And in terms of project margins on your end, receiving or not receiving the grant, how does the sort of profit for you differ?
It's almost the same, because if we don't have the grant, we can hire the rents. So it's almost the same, and when we look at it, it's about 20% up on the rents if you don't have the grant.
And that isn't a problem in any of those regions?
No, not in the pipeline we have right now. But in some cities, it could be a problem. But we always look in the cities with the highest demand. That's important.
And you mentioned a higher occupancy, David, during the presentation, going to 95%.
Yeah.
Is that sort of a level one should think of being a normalized level, or is it temporarily boosted, or can it go even higher?
Well, I think in the next spring we will see higher, because we can see that it's the students aren't back at campus at 100%. So
they're not back?
No.
Okay. But okay, so post-COVID there has been sort of a lag, and okay, and so somewhere between 95 and 100, I guess.
That's correct.
That's a good ratio. I think time is running out. So thank you both for attending this Investor Day. And thank you all for listening in.
Good afternoon and welcome back to ABG Sundal Collier's Investor Days. My name is Benjamin Wallstedt. I am an equity research analyst working from the Stockholm office. The next presentation will be of Nexam Chemical. With me today, I have the company's CEO, Johan Arvidsson. So, Johan, take it away. The floor is yours.
Thank you very much. Welcome to this presentation by Nexam Chemical. It's actually the first time we present at ABG, so thanks for the opportunity. During the coming 20 minutes, roughly, I will present Nexam Chemical, what we make, how we do it, how it goes, and also why I think we have a really great chance of success, long-term success going forward. So, first slide. We are making plastic better. We are a chemical company in the material area, and we are working with plastic. And the first question is usually, why plastic? Isn't that something that we hoped would be possible to avoid? And perhaps, I also agree, there are areas where we absolutely do not need plastic, but there are also areas where it will, for a very long time, be a part of our society. And in some cases, we don't really think about it as plastic. For us, it's polymers, and it's an opportunity for us to modify it and to change the properties of it in order to adapt the material for different type of applications. So we don't do the plastic, but we do additives that can change the behavior of the material. And still, plastic is a great invention for many things. There wouldn't be a renewable energy industry without plastic. A lot of sports, as we know it today, is very much based on plastic material. What we wear is, to a large extent, also plastic in electronics. And the pandemic during 2 years' time, and some claim it still is here, also learned us that plastic is something we should be quite happy for in terms of protection and different type of material for healthcare. But you do need to have a solid sustainability vision around your company if you're working with the polymers and plastics. And we were looking really for a way to explain sustainability as a company. And we always thought that it must be something that is a little bit beyond the vague targets. It has to be something that is more possible to audit. And we found a system. We are working together with Nasdaq. They introduced a program called Green Equity Designation. They did it last summer, and we spent the autumn getting, let's call it certified or approved. And it's you work together with an audit company, and we came out with the approval through the system. So we can call ourselves that we have the Green Equity Designation, which is a great thing for us, because that really tell the whole story. And it's possible to check it. There is a report around it. 50% of what we make or more ends up in industries that are described as green. That's the definition of the program. So this has really helped us in our sustainability work. Nexam Chemical is 2 business units, and it's one business unit that we call Performance Chemical. That's the more innovative part and more niche applications, high growth, fewer customers but bigger customers. The other one, Nexam Performance Master Batch, is more of traditional industrial part. Very many customers, more traditional sales work, We are working with something called Color Master Batch. We have loads of customers in the Nordics and in Eastern Europe. And this is actually a really great mix for us. We have 2 units with quite different approach in the market. One more the niches and one more broad, and they really support each other. And we can have a look at the numbers that we presented the last time. I will go through some numbers in the beginning here. And we have had this is from the Q1 report. It compares Q1 throughout 2020, 21, and 22. And we have had growth throughout these 3 years. And usually it has been the chemical side that is growing more. But this time we actually, through a lot of effort, managed to get the other part, the performance master batch, to grow even quicker than the chemical side of it. And why the chemical is not growing that fast at the moment, I will come back to. But if we look to our company over a little bit longer range, the last couple of years, it really has proven solid growth throughout 3 years. The year 2018 is the first. We made an acquisition in year 2017. 2018 is a year that we can compare. From 2018, we can compare all numbers up to today. And we actually doubled the revenue during those 3 years. And that is really the ambition we have, to grow by that rate. That's also in harmony with the target we have, growth by 25% per year. So if we continue then, how do we find growth in the market? You need to have products, of course, to sell, but you need also to define some areas where you want to make business, where you can see that you have a growing market that you can follow, and then you can feed in products in that market. And where Nexam really started a few years ago was in, we can call it lightweighting and miniaturization, making things smaller and lighter. And typically that has been composite materials for Nexam. This is something we still do. We make chemical components for composites when we speak about really high temperature applications, typically in jet engines. So if you're not compression zone in jet engines, and can be a lot of other things also but always in aircraft engines. So it's an extremely demanding applications, and that was our starting point. That was where we learned how to work with additives that can chemically react with polymers in different applications. And then we have been moving forward from that. We also touched quite recently, actually, in the same area, electronic material. And we published the news a few weeks ago around a new business with a Japanese resin producer called Sumitomo. That is something we are really, really happy for. It's material that will end up in semiconductors. So it doesn't only have to be jet engines. It can be other things as well. The trend that really gave a boost to Nexam's growth in 2018, 2019 was additives for a material that is called PT foam. And PT foam is a core material in windmill blades. And we sell additives for the production of PT foam. So it's kind of a hidden application. No one sees it, but you see the windmills, and they are quite a lot of them. And that really helped us. What we are looking into now, going forward, we started it a bit like a year ago, is recycling and waste and recycling, and to improve the possibility to recycle plastic. And then we are also looking into future plastic materials. So the growth strategy is really improving sustainability in plastics with creative chemistry. That is, it can summarize what we do. And when we do that, we end up in an extremely close relation to our customers very often. We will be a part of our customers' innovations. We are not really an add-on that they can have or take out. Once we have started to sell to customers, it will be, we are a part of their products. Of course, sometimes it takes a bit of time to get in, because when we have done our sales job with our customers, they need to do their sales job with their customers. But once that is done, it's kind of a stable situation. I usually say that we will sell the same products to the same customers also in 20 years. I haven't been proven wrong yet, but we haven't been running the company for 20 years. The second area is we are a part of a circular economy. We can contribute to more circularity in the polymer and plastic area, definitely. And we can also support that plastic can last longer. If you don't recycle it, sometimes it's perhaps not so interesting to recycle material from niche applications, but we can be a part of a longer lasting product. The other thing, and this is also, we have been working for a while now, but we are really in the beginning. We haven't come to the 20 years yet, to come back to that. I will, on the following slide, try to explain why I think it's so interesting to work specifically in these two areas, the renewable energy and windmills, and then also waste and recycling. This doesn't mean that the other areas are uninteresting, but I selected a few examples where I want to show you a little bit of how we see this market coming up in front of us. First one, the wind energy. And I don't think anyone has missed that we want more renewably sourced or renewable energy. And it's likely that it will be quite a lot of it. We want to get away from coal. We want to get away from perhaps gas from a bit east of where we are standing at the moment. And it really drives renewable energy. And windmills will be a part of it. And it's available. It's available now. And the estimation, if you look into it, is that actually there will be roughly 1,800 gigawatt installed by 2030. And if we are just looking to the market, then what does that mean? It actually means that it's going to be more wind energy built in the coming 8 years than it has been until now ever. So we are looking into a growth scenario where the industry itself will grow by roughly 10%, so a year. And that means that they need to produce like 1 million blades over these coming 8 years. So it's a good, but it actually doesn't stop there. The material we work with is PET foam, and that's really the favorite core material. So the PET foam is gaining market share. And it's gaining market share from other core material like PVC foam and also the wood-based balsa. So we have the 10% a year from industrial growth, and then we have in the product mix inside every windmill we have additional growth. So we think this is a very interesting area. We also have the possibility to gain more customers. We are not selling to all customers yet. There will be more coming. So the penetration level can be a third growth opportunity for us. Then I move to recycling, and that is something that we haven't the PT foam is here and now, and we are growing it, and we know what to do, and this is the recycling business is more of an opportunity. But what we have learned with other polymer modifications, we can apply also in this area. And the thing with the recycling is that you actually need to do something new with the plastic that has been used before. And each time you use plastic, it deteriorates. So you will have a worse material than you had from the beginning when you recycle it. And still, the target is pretty high. At the moment, globally, it's produced like 400 million tons of plastic every year. And we only recycle globally 15%. And let's say EU is a little bit better than that, perhaps 20% in EU. But the target is that by 2025, it should be 50%. So there will be a lot more that has to be recycled. And guess what? All the easy things has been done already. So we have been working with this very often called downgrading. You see often in recycling that trash bags will be out of recycled plastic, and that is because it's quite easy to handle. If we're going from 20 to 50% in 3 years' time now, you need to challenge yourself a little bit. You need to obviously invest, because it's not enough to make more trash bags. We don't need that many. We need to go also into other areas and really upgrading of material. And this picture here shows how recycling works. That it's you can make the same product again. You can do the downcycling, which is typically the trash bags, and you can try to do something, increase the value of the material you recycle. And that is where we believe there will be a big drive in the coming years. How will we do this? Our game plan is really focused on R&D and innovations. We are an innovation company. We are creating our own products very often. We combine that with the products in the market and try to make very strong combinations. We do a lot of patents. At the moment, we have 56 patents in 7 families, and a few coming up, new ones, 4 in progress. So this is really, we are a technical company that really tried to come up with new solutions. We know chemistry. That is what we're good at. We also learned how to sell chemistry, and that is what we are getting better and better at. With this picture, which we are getting into the end now, I actually just want to point out one thing. We have had a stable growth for many years. I already showed you that message on an earlier slide. But on this slide, and if you look to it, we have had a positive EBITDA for more than 2 years in a row now, every single quarter. So we are not, in terms of profitability, where we want to be finally, and we haven't set the company for that either. We have set the company for growth and innovation, and we are very happy to still produce a positive EBITDA. We will get further once we start to optimize the company in a different way. And the last slide. So outlook for 2022, what do we expect from this year, from the rest of this year? And the PET foam is related to the wind energy. And you saw the picture, how much wind energy that will actually be installed and produced in the coming years. The thing is, that right at this moment, it's not really happening. They are not building that many windmills. So we are suffering from that, and that has slowed down our growth temporarily. And it's likely it will continue during this quarter, actually. So we expect massive growth in PT foam for us, foam applications, but not right now. We have a lot of other things in PET, like fibers, and that is still a good opportunity, but it's not that mature. We do a lot of testing at the moment, and fiber is a good area if you want to do this upgrade recycling, upcycling. Then fiber is a very nice place to work at. You have probably read when you buy a shirt or something that it's done from recycled material, and we can be a part of that. The master batch, the Nexam Performance Master Batch, we want to maintain the momentum that we already have in that. We had some headwind for during a few years, but since the last half year, it's going very, very well, that area. Then we stepwise believe that our electronic business about semiconductors with this Japanese customer will continue to increase. It looks very positive for this year. Next year, even better, and then we see. Reactive recycling, that we call our recycling initiative, is also something that we launched recently. We pick up a lot of projects, and we expect that to kick off. Development side, keep momentum. We do a lot of patents, and we hope to be able to continue with that. And then sustainability, we want a higher share from green areas to even make our green equity position stronger. We want also work a lot internally to reduce our own footprint, but last but not least, Nexam is not really just a development company anymore. We are much more than that, so it needs to be a good place to work at. And with that, I'm actually done. Perfect. Thank you very much.
Thank you very much, Johan, for that presentation. Let's now turn to some questions.
Yes.
You mentioned this briefly. Could you comment a bit on rising raw material prices and how that could affect Nexam's sales, but also margins?
Sales, it can definitely be. It's always a problem with when prices going up first. Because the more upstreams you are, the quicker you will be hit by price increases. And we are somewhere in the middle. So we will get it, and then it takes a little bit time to get your price increases through with your customers, which we have, but it always takes a little bit of time. On the other hand, the chemical industry always suffers when raw material prices go up. But when you get over the top and when it's going in the other direction, that can take a while. But so far it has always happened. Then it's the opposite momentum. Then you actually can increase your margin. And if you have innovative products that are have a good value proposition, you can actually benefit from scenarios like the one we have seen during the last couple of months or the last year. Yeah.
Thank you. You also commented on your financial targets. You currently have a financial target of 25% sales growth over a business cycle.
Yeah.
You also have a financial target of a healthy margin. So if we look to the future, what would be a healthy margin level for a company such as Nexam?
And we speak about gross margin and a healthy gross margin. We have been at above 40% gross margin, and that is an area where we definitely should be. You take a little bit of a hit when prices go up, and we did that during Q3 and Q4. We got back with our 40% in Q1, and then I think going a little bit forward when we start, but remember, we haven't really optimized the company. There is still a lot of things to do. We are not a trading company that buy a product and sell it, and then you just count the gross margin. We are very often coming up with completely new products, and until you have built a bit of volume, cost will be higher. Usually, with new projects, for the first period, you need to build a little bit of stability until you can start actually making money. You need a bit of scale of economy to get to that. So we are absolutely not through with all optimization. So I'm positive to say that 50 is a very achievable target going forward, and we could be higher also, but most likely not on all products.
Is there any specific segment or product category that you can charge a higher gross margin for?
There can definitely be such examples.
Okay.
But I wouldn't point out a certain sector because it's not really, it's about generating value for your customer in the end. And if you can do that, you can charge the customer and they still pay and are happy for it. So the more innovative we are, then the better margin we can have long term.
Sure. With that, it's time to wrap up. Thank you, Johan, for your participation in ABG Sundal Collier Investor Days. And stay tuned. Stay tuned. More presentations will follow.
Thank you very much.
Hi everyone. My name is Daniel Högland. I'm an analyst here at ABG, and I will be moderating this call with StrongPoint, which is a very exciting Norwegian retail technology firm, now also going into the UK with its latest acquisition. I guess Jakob will be talking more about that shortly. But it's my pleasure to welcome Jakob, the CEO of the company, Jakob Tarbakk. So I'll just give the word to you. It will be around 15 to 20 minutes of presentation, and then we'll do a Q&A at the end. So Jakob, the floor is yours.
Thank you so much, and welcome everybody to this short presentation of StrongPoint. If you just go to the next page, we'll talk very briefly about what is StrongPoint. You're right, we are a Norway-based, or I say Nordic-based, because our presence in Sweden is also quite strong. Efficiency obsessed, which stems out of the fact of being a Nordic-based company with high labor cost in general, which spurs a lot of very interesting technologies for retailers and grocery retailers in particular, in the rest of Europe and North America in particular. We provide both in-store solutions and also e-commerce logistics solutions that I will talk a bit about. And the unique thing about StrongPoint is that we both own software and hardware, and also integrate that with some of the world-leading partners like Pricer and AutoStore to provide a end-to-end solution for customers, whether that is in-store solutions or e-commerce solutions. And in the countries we are present, we are doing not only the pre-sales and sales, but also installation service support, which enables us to get a very, very good grip of helping customers with what really matters for them. On the next page, the mandatory map to show where we are. We're now in 8 geographies, actually: Norway, Sweden, the 3 Baltic countries, and Spain. And now lastly, with the acquisition of Airlink Group, we are also in the UK and in Ireland. We're not a new company. We've actually been around for 35 years and are now listed at the Oslo Stock Exchange. We have about now, or in excess of 450 employees with the last acquisition. And our solution is pretty much in all countries across Europe and also in North America. If we go to the next page, we'll talk about what we at StrongPoint have called the double opportunity. So e-commerce category killers like you would know out of the Nordics with Europris, Normal, and also hard discounters are challenging the traditional grocery retailers on 2 fronts. On the one hand side, the move of volume or sales from the traditional stores, either online or to these category killers and hard discounters, is putting a pressure on the grocery retailers' margin. So taking away the sales with pretty much a big part of the cost base being fixed puts a margin squeeze on these companies. And we believe that one of the absolute important ways to withstand that margin pressure is in the introduction of technology solutions. The other major opportunities within e-commerce. So e-commerce in itself is both driving the changes in store, but it's also a source of opportunity for StrongPoint. We have now the full range of e-commerce solutions and e-commerce logistics solutions, from the fulfillment solutions, whether that is manually or automated picked, to the full range of last mile solutions. So whether you are a grocery retailer or retailer about to start the e-commerce journey, or in the midst of the journey, or actually rather mature, we have the solution for you. That's the double opportunity for StrongPoint. On the next page, we have in today's environment with higher inflation, with fuel costs going up, with electricity rates going up, at the same time as we've lifted or trying to get into a normalized world after COVID, you could argue that, well, what are really safe havens in today's environment? And we would argue that regardless of what happens in the turmoil, you still need food and vegetables and food and drinks. And whereas we are all keen to go to restaurants and to canteens, the grocery store, whether that is in the store or e-commerce, will continue to live on very, very strongly going forward. And that's exactly the market that StrongPoint is serving. So on the next page, just very superficially, the range of solutions that StrongPoint has in its portfolio. In the in-store solutions, we have best-in-class self-checkout solutions with image recognition that makes our solution stand out from the traditional self-checkout solutions you will find in Norway and Sweden today. So we're getting that into the market also in the home countries. Electronic shelf labels from Pricer, we've been a long-standing partner for many, many years. We have our traditional VenSafe solution, our CashGuard solution, but also more cutting-edge technologies such as the humanoid grocery robot or humanoid robot from Halodi Robotics, able to perform tasks in store to withstand the pressure on the margins that we see there with higher labor costs. On the right-hand side, you will see an illustration of the e-commerce logistics solutions I mentioned, whether that is in-store picking, dark store picking, or automated picking, or whether that is the last mile solutions with home deliveries, grocery lockers, stationary or mobile, or drive-through solutions. So we have a full range of solutions to offer to our customers. If you go to the next page, the T-shaped strategy, we've called it, meaning we are dedicated to go deep in some core markets. And this is, again, with the UK and Ireland, we're now into 8 markets. And when we go deep into markets, we define that as not, quote unquote, only selling a solution, but doing the full range from installation, service, support in those markets. That enables us to not only serve customers well, but also grab a very nice portion of the full value created in the selling of a solution or product. In addition to that, we do have some proprietary solutions that we believe are right for the world market. Most notably is the e-commerce order fulfillment platform that we have, and that you in Sweden would have seen a lot of, whether it's the order picking that you don't really see but experience when you see the order picking being fulfilled in stores, or whether there is the last mile solutions with, for instance, our click and collect lockers. So we've defined a number of these of the solutions that to be taken also outside the countries we're going deep in. Next page, please. At StrongPoint, some 2 years ago, just prior to the COVID-19, we set forth a very ambitious financial ambition and a strategy to follow. And that was to grow our business to 2.5 billion Norwegian kroner in 2025 and get to an EBITDA margin of 13 to 15%. And when we launched this, we had a turnover of about 1 billion and an EBITDA margin just south of 9%. Since then, and going into the next page, we've divested a number of non-core assets, most notably cash security and labels production. So that used to be on top of the 1 billion, but since then we've grown the business and laid out a plan to grow to 2.5 in such a manner where obviously e-commerce logistics in itself is very important. M&A, I'll talk about more about both these two topics in a second, and also improving the way that we serve the in-store efficiency market. If you now go to the next page and we'll look at how have we tracked on on the path to this now, because what we showed on the previous page was a implied CAGR of 26%. We're now at a CAGR of 22%. So when you strip out the non-core assets that we sold and got a very, very decent price for, we've invested those or parts of those funds into, amongst others, the Airlink Group acquisition that we did. So with pro forma last year numbers, we're then looking at 22% growth on top, which then includes a very strong organic growth. Next page, please. For us, going forward, it's important to emphasize that both what we do in e-commerce and what we do with in-store efficiency solutions is going to be important. In 2021, e-commerce was a mere 11% of the total turnover. As you could see from the earlier slide, you will see that a major part of the growth will be coming from e-commerce. We believe that solutions we have really are world-class and are ripe for the international market. And we've just started to scratch that. We last year announced the partnership agreement with Glovo, the leading or one of the leading delivery platforms in Europe. And for those of you that have been following the market, Delivery Hero, the giant in Europe and internationally, announced the acquisition of Glovo. So we're very proud to see that world-class platforms, the tech platforms like Glovo, are selecting the StrongPoint solutions also in e-commerce. And we're starting to see also the grocery retailers seeing exactly that. Next page, please. For those of you that are, I would say, still skeptical to in which direction e-commerce is going, and you could argue with the pandemic now easing or being removed in most parts of the world, you would expect to see a dip in e-commerce penetration. And that might be true, but that blip is really a blip. I think history has shown over many, many cycles that regardless of what kind of retail sector you're talking about, the penetration will continue to grow over cycles. And grocery still is overall in the markets we're looking at a single-digit penetration. So there's lots of potential still in the grocery retail market in e-commerce. On the next page, you will see what we are expecting over the next 5 years to be the addressable market for some of our solutions. We're looking at the picking solution growth, which is the in-store picking at the decent CAGRs, but where we are expecting to take a much larger market share. On the right-hand side, you obviously have the micro-fulfillment centers or the automated picking, which you're expecting to see a massive growth in, where we are very proud to be a distributor of AutoStore and actually the world's first grocery-specific distributor of the AutoStore solution. And in the middle here, we have our click and collect lockers, again, that you in Sweden would have come to get accustomed to. We're expecting a very massive growth also in that area, in particular in new markets where traditionally home deliveries have been strong. So we're expecting massive growth in e-commerce going forward, and we'll take a massive part in that. Next page, please. So to sum up, sort of priorities for StrongPoint going forward. Number one, it's to execute on the in-store strategy that we have. We believe that in order to succeed in grocery and retail in general going forward, you need to ride the tide of the turmoil that is happening. As an example, and I know my good friend Magnus Larsson at Price were talking about how the turmoil is actually creating a market for ESLs that we've grown accustomed to in Norway and Sweden. And we're dedicated to take those solutions and other solutions that are proprietary outside the Nordics. We're truly dedicated to leverage on the e-commerce logistics market that is out there. Again, despite the blip that is happening in this quarter maybe. For many grocery retailers, we're expecting a continued massive growth there. And at StrongPoint, we will continue the momentum that we have in M&A. And with that note, I think we should go to the next page. Just a few words about the acquisition we announced that we have signed the SPA on last Friday, ALS or Airlink Group. Airlink Group is or has been a family-owned business with more than 20 years in the UK and Irish market, performing installation, service, construction, and engineering for some of the finest grocery retailers in the UK. They already have experience with temperature control lockers, self-checkouts, and vending solutions. And when you have this kind of platform to work out of, we believe, obviously, that we can create lots of value on top of the good foundation ALS already has, with bringing our solutions to the market. Our e-commerce solutions portfolio, our VendSafe solution, our self-checkout solution, and also some of the third-party solutions that we believe is right for the UK market. So very optimistic and positive about both the UK and Irish market going forward. So to round off before questions, on the next page, what are we expecting in today's situation with lots of turmoil? Well, first of all, if there are any, I wouldn't say safe havens, but if there is one market to be positive about, it is the resilient market of grocery retail that StrongPoint is very, very focused and oriented towards. Yes, we are seeing a pressure on supply chains as well, and those that have been following the StrongPoint would have seen that at least for the past 3 quarters, we have also announced what kind of growth we would have had unless or if we had not been impacted by the component shortages. However, that aside, we have experienced a very strong growth, so that just proves there is even more demand in the market. And then lastly, for any in particular new listeners to StrongPoint, you should know that we are investing heavily in the future. And what is particular for a company like StrongPoint as a retail technology company is that you will not find a lot of our investments in the balance sheet. We're expensing all the investments that we're doing directly. So there's no hidden balance posts expecting huge growth as we still are expecting, but we're being very conservative, expensing all the R&D investments that we're doing. So with that, thank you, and I'm open for any questions there might be.
Thank you, Jacob. So I think I can start out. You touched a bit upon the challenge retailers are facing with regards both to in-store being pressured from e-com, and now during COVID, e-com has seen a very good boost, at least in some geographies. So I was thinking, could you maybe give a bit more flavor on how grocers are talking to you now about e-com? Are they approaching it more in a wait-and-see approach, or is it rather like they think this change is coming now anyway and will continue to invest?
So I think, first of all retailers or grocery retailers see e-commerce growing. All e-commerce or all grocery retailers see that there is no way that you could be a grocery retailer in the future without any kind of e-commerce offering. That might not be so evident if you're sitting in Norway, where the e-commerce penetration is still very, very low. But everybody knows that e-commerce is going to be an important part of the public or consumer and customer offering going forward. So I think, first of all, it depends very much on the market. But that said, we all know that the grocery market is a market in which changes happens over time. And we have very promising discussions across the geographies that we are serving to serve the different markets, whether that is very mature markets like the UK or less mature markets like the Nordics or Finland for that matter.
And obviously, this will be an important growth driver when you look at the bridge you present from 2021 to 25. That the e-com logistics will be an important driver there, and is that like tilted to some specific countries in your mind going towards 2025, or do you also think it's more of a broad game going towards that?
In general, it's hard to find geographies in which e-commerce is not expected to grow through the cycles, right? First of all, that said, of course, there are certain markets that we would like to be more present in than others, just because they're more ripe for the solutions. But that said, I think we should dare to be somewhat bullish and proud here, because our e-commerce solution, first and foremost, stems out of the acquisition that StrongPoint did some 4.5 years ago of a company called Coop. What we realized then is that the solutions that Swedish grocery retailers have been benefiting from really all are world-class. We invested significant amounts of funds making the solution both scalable and cloud-based. And that is the solution that we're now bringing out to grocery retailers. And just earlier today, I was in a customer call with one of the premier grocery retailers in Europe. Not very known, well, StrongPoint was not very known to them, and not least our solution, but you know, the efficiency, the picking efficiency we are able to display is absolutely something that's casting shades all across Europe. So we have high expectations for the e-commerce. That's correct.
Great. And we can just touch a bit on this UK acquisition of Airlink now. Now this already seems like a quite decent business. You look at the 10% margins, especially given that it's more of an installation business, at least to my understanding. Could you talk a little bit about how you will work now to develop that market further through ALS, for example, selling StrongPoint solutions into their prime UK customers, etc.?
Yes. Well, first of all, I have to just underline what you just said. I mean, we're adding 240 million kroners with a 10% EBITDA to the business, and know that it's out there. I mean, our purchase price is 9.5 million pounds. So you do the math. We believe it's a very decently paid price in the eyes of StrongPoint shareholders. That said, right, this is a fantastic platform for us to bring the solutions that we have in. I mean, we have to recognize that in order to work with the Tesco's of the world, Poundland, Sainsbury, I mean, these kinds of customer relations is not something you build over weeks or months. And ALS spent 20 years building these relations. That said, we also know that if you look at the UK market, that is alongside the France, this is the highest penetrated European market in e-commerce. Highly inefficient in many manners. This is where the StrongPoint solutions come in, whether that is on the picking side or on the last mile side, including with the lockers. The UK is also the what should you call it, the capital of self-checkout, and they've yet to experience the own produced or proprietary built self-checkout solution, both hardware and software, that we have out, and it's a market leader out in the Baltics. We're expecting that to be of high importance in the UK market. So we have, again, you know, very, very high expectations about what we can build on top of the ALS platform. Right now, in the short term, the boring priority, so to speak, is sort of to maintain the amazing business that has been built. We are very careful about any kind of acquisition leading to questions and turmoil in the target organization. We feel confident that we have motivated, incentivized the correct people at ALS, and are keen to make sure we have a very, very solid base before introducing new solutions. But it's a very, very promising acquisition we've done, we believe, in the UK and Ireland.
Great. I see we've reached our hard cut on time now. So I just want to say thank you to Jakob and to StrongPoint for presenting. And as you all know, StrongPoint, we have a commissioned research coverage of StrongPoint. You can find our latest research on our website, and you can obviously also find both webcasts and presentation material at StrongPoint website. So with that, thank you, Jacob. Have a good day.
Hi, welcome to this presentation with Q3. My name is Eirik Øresland and I'm an analyst with ABG. With me today I have the CEO Håkon Volldal. He will give us a 20 minutes presentation and then we will round off with some questions after that. So with that, I give the word over to you, Håkon.
Thank you, Eirik. So let's start with some basic introduction to Q3 and then some slides on what we have done over the past couple of years and what we plan to do going forward. Next slide, please. If we start with the basics, Q3 was founded 38 years ago in Trondheim, Norway. We have been publicly listed for 20 years. We have offices in 15 countries around the world, but we sell products and solutions to roughly 50 markets around the world. We have 900 million NOK in revenues, or at least that was the revenues last year, and we achieved an EBITDA margin of 12%. In terms of presence and footprint, Europe is our most important region. We do 60% of our group sales in Europe. We have 65% of our employees there. The second most important region is Americas, with 30% of sales and 25% of employees. And then we have Asia Pacific, which to us is essentially Australia and Thailand, with 10% of sales and 10% of our employees. Overall, we have roughly 350 employees. Next slide, please. Q-Free was founded in 1984 by a group of engineers coming out of the Technical University in Trondheim. And after looking into various different products based on radio technology, they were assigned with a task from the Norwegian Public Roads Administration to come up with a better mousetrap for collecting tolls. In the 80s, at least in Norway, the way road tolls were collected was by means of having a toll plaza with booths staffed by operators, and then you would throw a coin into a basket and a barrier would open. If you didn't hit the basket or you didn't have the exact amount, you would have to talk to the operator in order to get permission to proceed. So this was the technology, if you can call it technology, that was in place in the mid-80s, and Q-Free was asked to replace that with a different concept. So we came up with a solution for automating this process, basically taking away the whole toll plaza, putting up a gantry with radio technology and equipping the cars with transponders that could automatically detect whether a car had passed this gantry or not, and automatically collect money from motorists. We did this successfully in 1988 outside Trondheim. We did it in Oslo in 1990. And based on successfully delivering these projects, the Q-Free team then expanded operations to Europe and other parts of the world during the 90s and the first decade of this century. In 2010-11, the company decided to move into other segments of the traffic technology space and acquired a handful of small privately held companies in areas such as parking, traffic signal controlling, traffic management, way and motion. And by the end of 2016, the portfolio was rather big. I joined the company in August 2016 and was immediately tasked with the job to optimize the portfolio and also consider where to compete and what to sell. So more on that when we come back to the strategy part later on. But this is essentially the timeline of Q-Free. Next slide, please. Despite being a fairly small company out of Norway, we have left a big mark on the world. We have delivered prestigious tolling projects on all continents. We were the first to do congestion charging in Stockholm and Gothenburg. We have hundreds of toll stations in Norway. We did a nationwide truck tolling system in Slovenia. We do most of the toll collection in Portugal and now also in the northern part of Spain. We have toll installations in Australia, in Bangkok, in Denmark, in Chile, and also a number of installations in the US with toll operators there. On the traffic management side, we have central software systems for monitoring everything that happens on highways. And we have implemented these software systems with a number of DOTs, or Department of Transportation, which are state bodies. So every state in the US has a DOT and they run a system to control traffic. And we delivered a top level system for managing that traffic. We've done that in Virginia. We've done it in West Virginia, Colorado, Delaware, Alaska, Pennsylvania, etc. We've also done signal management, so solutions for running traffic signal operations and deciding when to shift from green to red and back again. We've done that in Georgia. We have 10,000 intersection controllers in Georgia, all the centralized systems that monitor a network of intersections. We do nationwide traffic counting in the UK, and we also do way and motion in different parts of the world. Next slide, please. In essence, what we do at Q-Free is that we try to address the three main challenges of modern mobility. And these three challenges are congestion, accidents, and pollution. We have solutions that will help traffic authorities and societies reduce congestion. We have solutions to prevent accidents and injuries on the road, and we have solutions that will help reduce the carbon footprint of traffic. Now, in reality, you don't sell a solution concept. You have to work with different divisions inside customer organizations. And the way we have set up Q-Free now is in 2 divisions. So if you give me the next slide, we have a tolling division and we have a traffic management division. In tolling, we have a full product offering. We have the onboard units that you have in your car to collect tolls. We have turnkey solutions, meaning the full toll stations with cameras, readers, lasers, etc. Everything you need in order to collect information about the vehicles that should pay toll. We have the software systems aggregating all this data and running analysis on the transactions in order to turn them into billable transactions for our customers. And we have special solutions for analyzing license plates and automating the information that we receive from license plates. So rather than having people manually looking at license plates, we have software to detect the license plate. Tolling represents roughly 2/3 of our revenues and 2/3 of our employees. Europe is the most important market in terms of revenues, 80%. Australia, Thailand represent 12%, and US and Chile represent 7%. In traffic management, we have the traffic signal controllers. These are the brains that basically decide when a traffic signal should shift from red to yellow to green. And we have the software systems that will collect information from all these different individual intersections and make sure that the system actually performs. I think we all have experienced, hitting a green light in one intersection and having to stop 30 meters down the road waiting for green light at that intersection. So it's not enough to optimize the flow in one intersection. You need a solution that will actually optimize the entire system. We also deliver these freeway management software platforms. These are advanced software systems that are used in traffic management centers to monitor what's happening on the road. So typically when there's an accident, we have pre-programmed responses. Imagine there's a fire inside a tunnel. You don't want the operator to sit down and think, how do I address this situation? This has to happen automatically. So in our software, we have a button you click that will physically close the tunnel. You will get video feed from the scene of the accident up on the wall. You will alert the fire department, the police department. You will engage the ventilation systems. You will reroute traffic to secondary roads. You will slow down the speed limits, etc. This is just one example of a scenario, and there are multiple scenarios for handling everyday situations and also unplanned incidents. And then we do traffic counting, classification of vehicles, and weigh and motion systems. This is typically used by road authorities in order to get grants to maintain roads. Every state in the US, every council in the UK, for example, have to report traffic on the roads. And based on traffic on roads, they get allocations from a federal budget to maintain and make sure roads are kept in good conditions. Traffic management is the final 1/3 of our revenues, 120 employees. Most of our business happens in North America, 75% of it, 22% in Europe, and then 4% outside Europe and Americas. Next slide, please. If you look at our organization, we have 350 employees, 2 main locations for ATMS or traffic management. That's the US and the UK, whereas tolling has more of a global footprint where we have local organizations and teams in place to make sure we can service and maintain installed solutions and also sell new solutions. However, if you look at the breakdown per employee category, you can see that we are quite heavy on the R&D side. We have in total actually 130 engineers working in Q-Free in R&D and development. Delivery is not manufacturing, that's engineering and customization of solutions together with service and maintenance technicians, field technicians. We have roughly 40 people in sales and 40 people in admin. So we're a small company, but heavily skewed towards development. And this is the reason why Q-Free has been so innovative throughout its existence, that we have always prioritized R&D and we always invested in new technology. Next slide, please. So if we go from the basics to the plan that we have been following now for a number of years, when I joined, it was clear that we had to refocus. We had too many businesses. We were in too many countries, and we didn't have the funding or the resources to be competitive across all these geographies and all these business areas. So we had to figure out, where do we have a competitive advantage? What kind of businesses should we prioritize? Once we had figured out that and cleaned up our portfolio, we would turn to the build phase. And there were two key objectives in this phase. One, to build a strong presence in some markets. So rather than pursuing opportunities all over the world, make sure you have some really good core markets that every year give you revenues and turn a profit. Because unless you have that, you're not able to enter new markets. The second objective in this phase was to revamp our offering. In 2017-18, competition had caught up. Q-Free had always had good solutions to offer, but at that point in time, I wouldn't bet on Q-Free always coming out on top when customers would benchmark our solution versus solutions from competition. So that was the second priority. Make sure we have the best portfolio in the industry. And the third phase, which we are in now, is really the fun part. So after cleaning up the company, building a strong foundation, we're now in the scale phase, where we want to scale standardized solutions to selected new target markets to grow the company. On the next slide, I will recapture what we did in the first phase. So of course, this was an effort that didn't happen over the course of 2-3 months. It took us years. We went from 6 business units to 2. We went from 21 to 15 markets. We went from almost 500 employees down to 350 employees. And we also had to fix the capital structure. We were not properly capitalized. We had a leverage ratio of 4.5 back in second quarter of 2019. By the end of the first quarter this year, we were at 1.2. So a much more healthy capital structure and also access to capital and liquidity to fund the growth. So this was all sort of basic fixing of the business. If you give me the next slide. This comes down to building a stronger presence in key markets. In tolling, we have 9 markets that really represent more than 80% of our revenues. And we have, over the past few years, focused a lot on winning projects and winning market share in these markets. And we've been quite successful. We have won numerous projects in Norway. We have won a renewal in Portugal. We have developed new clients in Portugal. We won several projects in Australia. We will renew the Stockholm congestion charging system. We have developed Slovenia into a healthy business. We have won projects in Thailand, signed up numerous customers in the US, etc. On the traffic management side, back in 2016, we had 2 key customers. Now we have at least 7 customers that account for more than 30% of revenues. And what we've also successfully done, which I will come back to later, is to increase the share of recurring revenues. So we don't start the year having to exceed last year without having anything to start with. On the tolling side, more than 30% of revenues are recurring. They come back every year. And on the traffic management side, 25%. And both these businesses have growing recurring revenues, which also means a lot of these contracts are secured on a long-term basis. In tolling, you typically have 8 to 12-year long contracts, and in traffic management, 5 to 10 years. So it's a much more predictable business with higher visibility. Next slide, please. The second key priority in the build phase was to revamp our offering. And I'm actually quite proud that we have touched every hardware product and every software product in our portfolio. We have made new transceivers and onboard units for tolling. We have made a new camera system. We have advanced our ALPR software. and we have upgraded our traffic management platform. So everything in our portfolio is new. Everything is not brand new. There are some smaller changes, but there are also some really revolutionary things that we've done. Next slide, please. The last thing we did, we have also focused on prioritizing projects. So if you look at the win rate we have on projects during the past 3.5 years, our win rate is actually 60%. So 60% of what we bid on, we win. And this has helped us grow the order backlog to almost 1.4 billion NOK. So that means 1.7 times last year revenues. Next slide, please. Recurring revenues. We have grown recurring revenues by 20% in 1 year. And in the first quarter this year, we have won 5 additional contracts, which will bring this recurring revenue portion to 320 million NOK, meaning more than 1/3 of our revenues are now recurring, fairly evenly split between software and services. Next slide, please. So now we really think it's time to shift gears. We need to grow. So next slide. We operate in a large and growing market, which is driven by the fact that we get more cars on the road and we need more goods to be transported. Tolling is growing at a rate of 6% and traffic management by a rate of 4% historically. And this is, of course, impacted by the pandemic. But there is healthy growth that we can capitalize on in addition to increasing our market share. Next slide, please. If we look at the rationale for expansion, this is a busy slide. You can study it in more detail later. But the point is we need off-the-shelf products in order to grow profitably. Every product sale cannot be a customized solution. So we have moved all the software components and all the hardware components to the right, which means we can sell these products to new customers without spending so much time delivering it. That's the key message on this slide. Next slide, please. A lot of new markets are opening up. We are in the fortunate position that we have existing markets that provide interesting opportunities, and we also have new markets that open up. And France, the Baltics, other Central European countries are now opening up for tolling and traffic management. Next slide, please. Our short-term pipeline opportunity is quite attractive. We have already signed projects for 500 million NOK. We have been awarded and are awaiting signature on 250 more. And there are opportunities that we are bidding on with a value of 1.5 billion NOK. Altogether, the order intake potential in 2022 is 2.3 billion. We will not win everything, but as I said, we have a hit rate of 60%. So I think order intake in 2022 will be great. And that also gives us good opportunity to grow in the coming years. Next slide, please. These are 6 examples of contracts we have won, ranging from tolling contracts in Spain to 4 important projects in Norway and a big tag contract in Portugal. And the great thing about these contracts is that most of them are recurring. They are on 15-year contracts. So Ålesund, Trondheim, Tromsø, and the E6 contract in Norway are on 15-year contracts that will generate close to 15 million NOK in recurring revenues every single year with a good margin. Next slide, please. In terms of financial performance, this is the final section of my presentation. It was really a roller coaster ride up until 2016. In the past 5 years, we have stabilized performance. We have focused on profitability rather than revenue growth. So this is the reason why revenues have come down. We have divested underperforming businesses. But look at the improvement and the stability in profitability. Next slide, please. We have strong current KPIs. We have a good organic revenue growth. We have a high share of software revenues. We have a high share of recurring revenues, strong profitability, good cash flow conversion, and also a healthy backlog and good leverage ratio. So I think from a financial point of view, we're set to grow. Next slide, please. And if you look at our long-term financial targets, we believe we can deliver 10% annual growth on average. M&A will come on top. We believe we can expand margins because we have scalable solutions. We don't need to add many resources to grow revenues. So we're already at 12% EBITDA margin. If we can grow by 10% annually, we will get to our margin targets. So the margin expansion will happen as a consequence of selling more software with higher margins and not adding a lot in terms of OpEx. Next slide, please. So in sum, to round off this presentation, we operate in a large and growing market. We have leading positions in tolling globally and in traffic management in North America. We have the best portfolio, I dare to say, when it comes to technology and unique references. We have 350 skilled industry professionals. We have a clear plan for how to grow, and we have an attractive starting point in terms of financials. Thank you.
Thank you, Håkon. We have time for a few questions. There seems to be a particularly strong demand for your tolling products at the moment. Can you give us a comment on explaining the key drivers on the current increase in demand that you're seeing in the tolling segment?
It's two things. One, a lot of big tolling markets have old assets that they need to replace. So we are replacing old infrastructure in Australia, Portugal, Chile, France, Stockholm, Norway. So this is really, a key driver for us. The second driver is that road authorities are underfunded. So to deliver on all the plans they have for making traffic smoother and better and more fit for the future, they need funding. And the only way to get funding is to implement tolling.
And while the backlog appears very strong for tolling, there seems to be slightly lower visibility on the traffic management side. So could you shed some light on how you're working with sales and marketing in traffic management and what products you expect to be the most important going forward?
Yeah, so for us operating in traffic management in North America, the pandemic has really been a challenge. Customers have not been at work, not been able to take deliveries of purchase orders in the field, and they've not been able to process tenders and actually run tender processes. So everything stopped during the pandemic. Now it's coming back. So we see an increased activity level, both for statewide software systems and for modern and better traffic signal systems. So we expect the US to bring in some really nice contracts this year, and this will continue going forward, especially on the software side.
Sounds good. And I think you said the recurring revenue share is around 1/3 now. Could you give us a comment or a brief overview of the most important recurring contract structures in your portfolio at the currently and their duration as well?
Yeah, so on the service and maintenance side, we have these long-term service contracts from 8 to 15 years. So that's probably the most important one in terms of overall contribution. Then we have roughly 50% of our recurring revenue, so 150 million NOK coming from software. So various software products that we put on SaaS contracts, and I think this will grow going forward. It was challenging to convert from on-premise to cloud, but now all customers are sort of experienced cloud users and they demand cloud solutions. So this will also grow going forward. So it's a combination of more service and maintenance contracts and more software sales structured as SaaS contracts and not, product sales with perpetual licenses.
Yeah. And have you set a target for how much recurring revenue that you think can be achievable in the long term?
I think right now we're around 30%. So let's say we can increase to 40% of a much higher revenue base. So let's say by 25, 26, we can be at 450, 500 million NOK in recurring revenues given today's business model. And if we successfully convert some of these other business models, it could be more. But ARR will grow much faster than total revenue growth.
Yeah, good to hear. And lastly, there have been several transactions in the ITS market recently. For instance, your competitor Unix was acquired by Atlantia. And in your Q1 report, you commented that you consider to take part in attractive structural opportunities if they should arise. So could you give us a comment on what kind of transactional opportunities Q3 see and that potentially could arise?
I think what we're seeing right now is that private equity has really set their eyes on traffic technology. They want to deploy billions of euros in this industry. They think it's driven by fundamental good macro drivers. And they start with the big assets, but then they want to consolidate. And of course, then Q3 is, a very attractive piece of the puzzle that they might need in order to complement the portfolios of the bigger guys. And they need some sexy pieces that they are not getting through the main acquisition. So that's really what's behind, the recent M&A activities, that the PE guys want to enter and they want to consolidate. And of course, we are, we will be and we are approached by some of these players to see if there's a strong strategic rationale behind combining businesses. And then, it's up to the board and the shareholders to decide whether they want to pursue a given opportunity or not. But I expect that this industry will consolidate going forward and at fairly attractive multiples.
It will definitely be interesting to see what happens going forward. I see that we are running out of time now, so thank you for the presentation, Håkon, and thank you for the ones who listened in.
Thank you.
Hi, welcome to this presentation with Napatech. My name is Eirik Øresland and I'm an analyst with ABG. With me today I have the CEO of Napatech, Ray Smets. He will give us a 20 minutes presentation and then we will round off with some questions after that. So with that, give the word over to you, Ray.
Eirik, thank you very much and welcome to all the attendees. I'm Ray Smets. I'm the CEO of Napatech. I'm actually based in San Francisco, California, but our company is based in Copenhagen, Denmark. I'll do my best to compress this presentation into about 20 minutes time and leave plenty of time for Q&A afterwards. My goal here is really to give you a high-level overview of what Napatech does. And if you want to go to slide number 3, which is the topic slide, please. Yeah, just what excites us about the potential of the business, why we believe this is a very interesting investment for our investors currently. And we'll just touch a little bit on, from a financial perspective, how we're doing. So next slide, please. So I'd like to start off with just a very high-level overview of who we are. So Napatech is a leader in what is known as SmartNIC technology. So we build SmartNICs. I'll show you what a SmartNIC looks like in just a few moments. But it's a very, very important, and it's a very hot market here in Silicon Valley and around the world. We have customers that basically span the globe of many different kinds and types. And there's an increasing interest in this particular part of the marketplace. From a company perspective, we've been performing well over the last 3 years. I took over this business about 4 years ago and made a promise to build a business that had the potential for significant growth and had the potential for strong leverageability, so we could grow the revenue faster than costs and deliver what we hope our investors like is both positive gross margins and positive EBITDA and profit. We do have a very interesting prospect here. We do something very unique in the industry. We've been doing it for about 20 years, almost 20 years now. We're building software that runs on something called an FPGA. It's very hard to do this. We do have patents that protect the business, but what really protects our business is time and expertise. And that's something that Napatech brings to the marketplace and has created a world-class leader company in this particular technology domain. So it's a little complicated. So the next slide, please, will make it very simple for you. What you see here are these little devices in the middle of the screen. These are called NICs, Network Interface Connection Devices, sometimes known as Ethernet connectors. And basically, these are form factored to fit within any standard server that runs in any data center globally. And that's very, very important because it's not really the hardware that makes the important point here. It's the software that runs on it. What's embedded on this piece of hardware is a little chip called an FPGA. An FPGA is a super high-performing, fast piece of silicon that we write software on to actually power the SmartNIC. And what it does basically is it creates a turbocharge factor for the server. So the server CPU has a certain amount of capacity, and you know everything is running on a server these days. You want to be able to run it faster, more efficiently, and provide more capability from the applications that run on those servers. And the art of the opportunity right now is to move those workloads from the server CPU to these little NICs that plug into the server. So every server that is being deployed in every data center globally is a hardware addressable market for Napatech, and we build best-in-class smart NICs that run on these servers. What makes this a smart NIC is the fact that it is software programmable. So when you invest in a company like Napatech, you're not really investing in a hardware business building NICs that run in servers. You're investing in a software business that happens to be form factored into a hardware device called a NIC that runs in a server. That's why we're able to sell our product at a very high price. We get the benefit of software gross margins, and you see our very strong gross margins of 70+%. And that's what we've guided for the current fiscal year. So we build smart NICs. Next slide, please. So just to give you a round robin feeling for what we're so excited about in this industry, and I'll go through each of these boxes in a little greater detail. But Napatech has been building our solutions now for about 20 years, and we feel honestly that we're never in a better position than we are currently. We have a market that is exploding. We didn't plan it that way. The market's doing this all by itself. The need for a programmable smart NIC that offloads data center servers is so important to many players in the industry that are putting everything in the data center, from tier 1 cloud, tier 2 cloud, telecoms, and enterprises of all types. Everybody has a data center. Everybody's running applications in data centers, and they need to have the capacity and the ability to run more applications efficiently in those data centers. So on the upper right-hand side of this slide, here comes the smart NIC. The smart NIC is traditionally has been an FPGA, which is that fast silicon that sits on it. that is basically used to power the horsepower that we need to accelerate applications. And this technology continues to evolve. We're very excited about the fact that more and more focus is being placed on the SmartNIC as being the center of the universe of accelerating applications in the data center. And now all of the telco workloads are being targeted to run on the server. Run on the SmartNIC instead of on the server CPU. I'll talk a little bit more about that in just a moment. One thing about Napatech, as you know, we're not a very large company in the whole global domain. Sometimes I say we're a pygmy amongst giants. You'll see that in just a minute when I show you the market share slide. So one way that we do business is we actually go to business directly with our sales organization. We work through partners and OEM relationships with technology companies. And what we've been doing over the last 3 years is building significant partnerships with very large companies within our space. And we believe that these partnerships will deliver significant growth as we get into their marketplace with our products. We're very excited about the partnerships we have with AMD, Xilinx, and Intel. These two guys are the two largest developers of the FPGA technology. We've been working with Xilinx for years. Our Intel relationship is relatively new. And we've recently added Achronix to the list, which is a #3 FPGA maker. But we work with the server companies as well and other technology partners. And our goal here is to find channels to the market that we could not get to normally. Small Napatech cannot walk into a large telecom company and sell our product without having the backing of significant partnerships. And we sell into, on the lower left-hand side, various growing market domains from anywhere from financial trading, cloud, network infrastructure, especially mobile infrastructure, and cybersecurity. Those are the places we play. That's what our product does best. I'll give you a touch of a little bit more color of that in just a moment. Next slide, please. So what you see here on this next slide is what our market looks like. We exist within what is known as the NIC market. And the NIC market, the network interface connection device market, is basically layered in 3 different significant categories. Think about everything that connects to the internet. Everything that connects to one another it requires a NIC. Your cell phone has a NIC. Your iPad has a NIC. Your laptop has a NIC. Every server in a data center has a NIC. In many cases, it's a basic NIC. It just allows connectivity between 2 devices. But there's different kinds of NICs. Over time, the concept of an offload NIC evolved, which is the purple bar. That's the market that is evolving as a smart NIC, as a offload NIC. And what defines the offload NIC compared to the third bar, which is the pink one on the top, is the offload NIC is hardware only. The pink bar is the programmable NIC or the smart NIC. That's the one that's programmable with software. That's the market that Napatech plays in. If you look at the full market, you can see that the market is growing rapidly from last year at about 2.8 billion to 6.4 billion in 2026. We believe this. We see this market growing rapidly in front of us, and we're vectoring our investments to make sure we capture as much opportunity that is growing in the pink bar, which is the bar that we play in, or the market that we play in, the subsegment we play in, called the programmable NIC. You'll see if you look at the full bar, Napatech is a top 10 player in this market, dominated by the big guys like NVIDIA, Intel, Broadcom, and Xilinx. But if you look specifically at the vendor market of the pink segment, which is a very important segment that we focus on, we're a top 5 player in that particular market, competing against some pretty significant players. However, Napatech is the largest FPGA-based smart NIC maker in the world, and we're very proud of that position. And we're one of the largest smaller versions of these companies that are public and available to investors to invest in. So next slide, please. So what really drives our business? Well, it's pretty obvious that, as I mentioned before, everything is moving to the server. Everything is an application that runs on a server in a data center. We call that the cloudification of everything. So everything is basically software running on a server, and the servers just can't keep up. The servers are built with general purpose CPUs within them, and they do a particular set of functions to run applications and services. Where you really get the power is by plugging the SmartNIC into those servers. So when you look at data centers today, data centers are basically massively scaled locations of servers, just racks and racks and racks of servers. The servers are intended to be as low cost as possible. And when you think about the footprint of these data centers, you want the footprint to be as small as possible. So the real TCO opportunity for a company like Napatech is to help companies that are moving everything into the data center to buy less servers, having a smaller footprint, and making those servers more powerful so they can run more applications more efficiently within a smaller footprint. So, so the SmartNICs basically are kind of in the right place at the right time when everything is moving to the data center. Next slide, please. So we see some evolutionary steps here. So we've been building our solutions for about almost 20 years now, and Copenhagen has become a bit of a center of excellence for FPGA software design, and Napatech is really the company that founded that capability. But the industry continues to invest in this technology as an important place to place applications and services within data centers. And there's a new evolution in this area called the IPU, the Infrastructure Processing Unit, or the DPU, the Data Processing Unit. This is brand spanking new, designed by the biggest guys in industry. That's NVIDIA, AMD, Xilinx, Intel, et cetera. And we're already participating in developing software that runs on these types of devices. The objective of the IPU is to offload the entire network stack from the 5G mobile network infrastructure. So all of the 5G services are now running as applications and servers. It's very, very hard to run all of those on general purpose server CPUs. The SmartNIC becomes kind of the place where everybody wants to put those workloads to get as much power out of those servers as possible in the data center. Next slide, please. So Napatech has been able to develop quite a relationship with a number of customers globally. We have about 250 customers over the last 6 quarters that buy products from Napatech. We have 2 different kinds of customers. We have OEM customers that design our product into their solution and take us to market through their designs. Those OEM customers span the spectrum, as you see on the left-hand side. Companies like Rheinmetall, companies like Excelio, companies like Mobileum, and more recently, about a year ago, we announced a relationship with Lenovo, who takes our product as a Lenovo branded solution, and they're selling it to the largest service providers in the Asian market as a Lenovo branded solution to accelerate certain components of the 5G architecture. So the OEM customers are quite important to us because once we win an OEM design win, that kind of revenue relationship exists for about 5 to 7 years. But on the other end of the spectrum, we also work directly with end user customers. These are customers that have data centers, that have applications that run in those data centers, and they need to have the ability to accelerate those applications as needed. For example, Facebook has a cybersecurity application that runs in all of their internal data centers, and Napatech was the chosen SmartNIC to accelerate that cybersecurity application for Facebook. We do that for many different financial companies like Citadel, Bank of America, Jump Trading, pharmaceuticals, cybersecurity, Department of Defense focused companies. And our objective there is to be as applicable on the direct end user side of the business, and we sell very aggressively to the OEM side as well. In the middle, you see our groups of partnerships that we work with to go to market. And as I mentioned, that we get the echo effect of their channels to the market to try to get as much revenue growth as possible. So our hyper growth that we anticipate getting out of Napatech is going to come through a combination of technology development focused in certain high growth areas of the marketplace, working with partners that will get us into those large opportunities as they evolve. Next slide, please. I'm not going to go through this slide in detail, although I have it in the deck. You can look at it. I've broken down the types of customers that we've done business with over the last year or so, and what types of customers and categories they are and what they use our product for, which is on the bottom. Once again, just to mention many, many different customers that many companies would love to have buy our products all the time to solve significant problems within their data centers. Next slide, please. The important part, and I think it's a very important development for Napatech that our investors need to know about, is that we've been working very hard to develop a product that makes sense to that high growth marketplace. But in order to get more access to that market, we've been building true, deep strategic partnerships that will get us access to those markets in very significant ways. And, you know, for example, I mentioned a little bit about Lenovo. Lenovo is a relatively new OEM relationship, and they've taken our product to the market. They have to sell the product in order for us to earn revenue. But they are actively testing with some of the largest cloud and telecom operators in Asia we would never have access to if we went to directly. And once they get a design win from those customers, and we anticipate that will happen, we would anticipate some very significant order volume from that relationship. And that is the goal of some of these partnerships. We work with the top technology players like Acronix, but one that's been very significant for us, and it's one to watch, is a relationship we have with Intel. And what we've just recently announced, and this is interesting news in today's environment, is we've been working with Intel to accelerate different components of the VMware application running on the Intel versions of the FPGA and SmartNIC. As you know, there's some rumors in the marketplace that VMware is going to be acquired by Broadcom. I think that's just evolving today. It just came out yesterday. So we're working with some of these big partners in some of the most important parts of their go-to-market strategy. And VMware for us is very strategic, and we're very embedded in a relationship with Intel, working with them on accelerating VMware. So that gives you a little bit of a touch of what these partnerships can do. And if you just go to the next slide for just a moment, some people, some customers, some investors like to know, so what's the strategic value? What is the benefit to our partners, or what's the benefit to Napatech? And this slide attempts to give you a sense for why these partnerships are important and why these partnerships can deliver very significant growth opportunities for Napatech. And we have just started this over the last year. And we believe that the partnerships that we have, combined with the technology we're developing, will deliver a very significant growth potential for our business. And we're excited about it. We're very excited about these partnerships. And it's very difficult to build them, as you know. We can't do too many of them, but once you get them, you got to make them work. And that's the mode that we're currently in. Next slide, please. So just to finish off something that I think is very important, that gives you a sense for the type of technology space that we're focusing on, is we're focusing on virtual network functions, accelerating virtual network functions. It's a very technology-oriented concept. But think of it this way. Next slide, please. The mobile network infrastructure is going through a massive change. I think most people know this, but it does take time. I worked in telecom for almost 15 years, so I know how long it takes for telecom infrastructure to change, but the 5G infrastructure basically changes everything. The 4G and prior infrastructures of mobile networking was designed with hardware, routers and switches, all connected together in concert to provide mobile services. That's all gone out the window. The 5G architecture is now all applications that run on servers and data centers. Sound familiar? Well, that's important for us. And those applications that provide these 5G mobile services are very compute intensive. They require a lot of CPU, and they cannot just run on the standard CPU in the servers that are being deployed in these data centers. So what Napatech has been doing, if you look at the next slide, please, is developing capabilities within our SmartNIC that accelerate very important parts of the 5G architecture. If you can move a lot of those heavy workloads from the server CPU onto the SmartNIC, you're going to get a lot more bang for your buck, and service providers are going to get a lot more capability out of their data center architecture, developing and deploying 5G mobile services. This investment has begun in the mobile services arena. These architectures are being deployed from the edge to the core. We're arriving at a time with some applications and capabilities for the 5G mobile core right at the time that this is getting architected and deployed. So we're hoping that we can get in there with something that is better than the competition. If you look at the next slide basically just gives you a sense for what we can bring to the table compared to what the other guys have. And I don't want to name what the competitor is, but it's a pretty large competitor in this particular market space. And we're using the FPGA, and the other guys are using an ASIC. An ASIC is a hardware designed capability, whereas the FPGA is software programmable. And you can see what we design and what we're bringing to the market. If you look at the bullets on the left-hand side, is something that is significantly faster in terms of performance than what was prior available to these kinds of customers in the 5G mobile space. So we believe we're bringing the most comprehensive feature set for virtual deployments in 5G, and that's a super, super important part of our strategy. So just to bring things to close on the next slide, we're going for it. We're going for growth. We know that historically Napatech has not delivered the hyper growth that we anticipate from this company. We know we can do it. We're very optimistic about it. We're leaning into the opportunity and we're developing our capabilities to go for a significant growth opportunity in 2022 and beyond. The last slide that you'll see on the next slide is what we have in our guidance for 2022. As you know, we are obligated to provide annual guidance. For a small company like us, that's not so easy. We've done a pretty good job achieving our prior year guidance. We feel very confident about the current guidance we have in place. If we achieve the guidance range that we currently have on revenue, that'll be between a 20 and 33% growth rate for the year, with very significant gross margins. And we think, and we're investing in the business for growth. We believe it's a good prospect for investment now by investors. So next slide, please. So Eirik, so just bringing things to conclusion here is we have a profitable and scalable business. We're going to continue to run it that way. We promised it. We've proven it over the last couple of years to achieve it. We have a great reputation. We have a great business prospect with partnerships and customers. We're increasing our investments to get faster revenue, and we're targeting a very high growth marketplace. And we hope that's a nice, simple overview for many of our new investors. And I'm happy to take some questions. Eirik.
Thank you, Ray. We have time for a few questions. As you mentioned, the underlying market here is driven by server expansion. Can you provide some color on how this market has developed recently and to what extent you're seeing demand coming up in 2022?
Yeah, sure. We track the server market very, very carefully because, of course, it's a pretty important part of the food chain, if you will, for SmartNICs. The healthier the server market is, the more addressable the data center market becomes for Napatech. And that market's growing pretty rapidly. In fact, that market was measured to be about 80 billion in the year 2020. It's expected to be about 138 billion by 2026, which is about a 12% CAGR on a massively large marketplace. And that's important because in the prior 10 years, the data center market has kind of waned a little bit as capacity was being eaten up in the data center. But the capacity now is there, and then the need for additional servers is absolute. And of course, companies don't want to buy more servers. They want to buy less servers, less floor space, and they want to horsepower those servers with NICs and smart NICs like what we produce. So every single server has 2 to 8 slots that you can plug a NIC into. We want to get our NICs into a few of those slots into as many applications as possible. So it's important.
And you also mentioned the virtualization opportunity, for instance, the partnership with Lenovo, but also Intel that you're investing in now, and which could be a transformational opportunity for Napatech. So could you comment on what the next milestone here would be and potentially how the ramp up would look like in terms of volumes?
Sure. If some of our investors were to check out some prior presentations we've made publicly, you'll know that we've developed a multi-pronged strategy from a product perspective. And, you know, I have this fundamental belief that a company grows not because of great sales and great marketing. That's, of course, important. A company grows because of a great product strategy. And what we have inside of Napatech is a core competency of building software that runs on an FPGA that accelerates things. What we've chosen to do is we've chosen to focus our technology core competency in what we believe are the highest growth potential areas for Napatech at a time right when they need it. We're not building it too soon. We're not building it too late. We're going to try to get into this market just when the market needs it. And we believe that in the network infrastructure side of the marketplace, the big move is towards virtual networks. Virtual networks meaning applications that run on data center networks. So we focused on a couple of key significant compute intensive areas. of network virtualization. We're designing our solution to optimize those capabilities. We feel very good about it because we're testing with customers all the time. We're getting some very positive feedback. And if we can just kind of hit that market just right, it doesn't take 10 or 15 or 40 or 50% of that market to be successful. For Napatech, Napatech is small enough to really grow significantly with even capturing a small part of that marketplace. And we feel like we're in a very, very good position. We're getting feedback from cloud customers right now that are testing our solution that said that they see stunning performance, and we're going to continue to deliver that kind of solution to our customers and wait for the next purchase order. So we're getting there.
Very good, Ray, and thank you for the presentation. I think that's all we had time for today. Thank you for those who listened in as well. Have a nice day.
Thank you very much. Have a great day.
Hi, my name is Patrick Bratelius, and next up to present is the co-founder of Klar, Christian Jakobsson. Please take it away.
Thank you. Yes, my name is Christian Jakobsson, and I'm the co-founder of Klar. We built the credit rails globally, so we're empowering end customers, giving them more transparency and increasing conversion rates for the lending industry. We are a digital loan broker, so our secret sauce is divided in two. We have a panel of different lenders, banks and no banking lenders, and we have so that's one secret sauce, that the different lenders have different credit policies, risk appetite, and different segments in the market that they want to attract. So that's one part of the secret sauce, and the other part is to simplify the process for the end customer. So the process is 100% digital, end-to-end within our platform. So that's our business model. So do you show the presentation here or?
The video.
Okay, perfect. So in the slide in front of you, you can see the process. The end customer comes to our service, apply for the product. We connect them with all the lenders in the market, which respond with an offer, and they can accept and sign the agreement straight away on the platform. We have now 221 lenders connected into our platform, and 34 million users customers connected to our platform. The blueprint of our business model is based on the success of Lendo in Sweden and Scandinavia. Lendo, the team worked with Lendo and Smarta in Sweden, and they had together 26% of the Swedish market 2015. So all the new loans, 26% of these were provided by the digital loan platforms Lendo and Smarta. 2020, 5 years later, that was 40% of all new loans distributed by the loan brokers. Today, that number seems to be 60 plus. More than 60% of the market comes through these digital loan brokers. So that's the platform that we work with and that we roll out globally now. Throughout history, we've launched in different regions. So the global lending industry is not global, it's divided into regions. So a lender like Nordea, they focus on the Scandinavian market. They don't go abroad because the balance sheet is different. It's a huge balance sheet that needed to be a global player. So we're a broker with no balance sheet, and we can attract more or less all customers with different lenders with different customer segments. So we rolled out this model in South Europe with the brands Prestol and Creditis in Spain and France, in Central Europe with the brands Luando and Acredo, and in Brazil with the brand Financeiro. And also Lendala in ASEAN region, in Singapore and Hong Kong, and Taslefa in Bahrain and Saudi. So that's the regions that we pinpointed so far and that we're going from. From these specific markets, we're about to roll out into new markets. So from this experience and the relationships with the lenders that we have in each market, we go on a global rollout mission now. From Spain and France, we roll out in Portugal, Italy. From Singapore and Hong Kong, we rolled out in Australia and New Zealand. And from Poland and Czechia, we're rolling out in Slovakia. And we are also going from Mexico up into US and Canada. So that's how we roll out this model. And we always look into the market when we rolling out that it's a large population. It has it's a digital maturity in the market. It's a high expected GDP growth and low competition. We have a 5-step integration model with our lenders, going from CLAR 0.0 to CLAR 4.0. So 0.0 is basically a lead generation model where we send applications to lenders, and then we start integrating and getting a deeper relationship with the lenders. So over time, we simplify the process for the end customers, and we simplify and reduce the friction for the lenders, which enable us to charge a higher commission. And our business model is a commission business model, approximately 6% or more on the total loan that the customer gets. And it's upfront commission, so we earn it within 30 days from the loan has been signed. So going down in this relationship with the lenders, we can go up to 15, even up to 20% on commission. And in these graphs to the right in this slide, you can see how the deeper integrations, 2.0, 3.0, is taking bigger chunk of the number of lenders, the number of contracts, and also pushing up the commission in general in our platform. So there's a couple of things here. But one is the different lenders segment. When a lender themselves do marketing, they only focus on 15 to 20% of the market, because that's how they price their product, and that's also how they finance their business. So when they do marketing, they get 100 average people, and they can only give a loan or convert 15% of that market. With our business model, we have up to 70 lenders in one market. So we have 70 opportunities for that lender, which makes us having a better conversion rate than our competitors. And we also have a commission with upfront revenue, which makes us cash flow. Our cash flow is very quick, so we can grow quickly. We don't need to wait for the customer to be loyal until we have the profit of that margin. We also keep all the data about the customer. We know all the different lenders' perspective on that customer, so we can easily help refinance that customer and help them get a better loan when the maturation time is over of that loan. As you see in this graphic, this is the evolution of our customer base. We're growing quickly now, adding approximately 2 million new customers, connected customers to the platform. And as you see on the grades, we have 4.9 or 5 on a 5 graded rate. So very happy, satisfied customers. Here's some data about some of the markets. So for example, in Lendela, the graph up to the left, you can see the average revenue per contract is increasing steadily because we're adding more partners, we're renegotiating commission level, and we're adding a better and better product mix. So our product mix is unsecured loans, car loans, mortgage loans, but also SME loans. So more or less all loans that in the market you can get through our platform. And a similar model, Financeiro in Brazil, you can see the CAC, the cost per acquisition, is continuously decreasing because we're getting a better brand awareness, more free of charge traffic. Even the banks are using our financial model as their second solution. If they can convert their customer, they use Financeiro's platform to convert it to someone else, and we do a rev split model with that. So that's a very scalable model. And for example, in Spain, Préstalo, you can see the lifetime value times divided by CAC is continuously increasing. So in general, we have 60% of all the costs are in marketing, so it's a very scalable model with low administration costs, low cost in general, no balance sheet risk, and 60% of it is within marketing. Something we can continuously optimizing and can change depending on the market situation. So yeah, maybe a little quick, but concluding remarks, we are a global player, so we have an extremely big total addressable markets where we have a strong position. We have a scalable platform that we built for 7 years, and with this 34 million and counting customers. We have a proven strategy. We have done this in multiple countries and quickly reached good numbers. And from these markets, we can roll out in a more global environment. The team, we're now 214 people, 10 of them with strong Scandinavian experience from this model or the banking industry, and a very attractive financial model that proven in Sweden have a 40+ EBITDA margin. So yeah.
Thank you, Christian, for that presentation. Yeah, so I have some questions for you in the Q&A. So considering the economic cycle and where we are and demand for credit, what is your view on growth prospects going forward in your different geographies and regions?
Yeah, I think our business model is in two global megatrends. So one is that the outstanding loan book is continuously growing in our markets, and also the digitalization. So the customers in the market are normally offline, but thanks to COVID, more and more banks and lenders became online and start making their decision online. So we're in these two global trends that pushing organic growth for us, because as soon as the customer and the lenders are online, we have the best business model for that to win that market. So that's two megatrends that are very important. We have built when we built Lendo in 2009 in that recession, marketing got cheap. So 60% of our cost is marketing at the moment. So what you can do in a market that has more cheap marketing, you can still attract more or less the same customers because everyone needs finance and need to make sure that they have the best deal. And we have cheaper markets, so we get a better return on investment in marketing and scale quicker. And since we don't have a balance sheet risk, we don't need to secure that we have specific risk, because we don't have a risk when we go into next month. So every month is a new month, we can adjust our marketing budget.
Thank you. Interesting. Another thing that I thought about is that in the Nordics, the online broker channel like Lendo is extremely popular. How does it look in the other geographies and regions where you are?
Yeah, exactly. In general, there's most of the competitors, they do a click out process or a lead gen process. And the reason for that is that they don't integrate with banks and lenders. They send the traffic to the lender, similar to the compriser model in Sweden. And one reason for that is that it's the infrastructure is not digital enough. Sweden has always been, more or less always been, very early in making the infrastructure digital. So we have had Bank ID for a long time. Swish pushed that to more or less all the Swedes, which simplified signing of documents and also identification. We always had UC or other credit bureaus that have good credit score, and we always had Kronofogden that secures that it's a safety net for the end customers, but also the lenders that lend out money. So that infrastructure is very important, and that's in these markets is more immature. So now when digitalization is happening more later than in Sweden, we see that trend coming, and we can take the position and scale from there.
So how many creditors or banks do you need to make a platform successful?
Yeah, exactly. To become the best in the market, we need approximately 20 with different segments, a different perspective on the end customers. So that's 20 different lenders, maybe 6 bigger banks, 6 mid players, and the rest on high risk end. If we have that, then we have a good conversion funnel for the end customer, and we can optimize that continuously. But then we have now, in some markets, 75 lenders, so we have more or less the whole market, and that's because everyone wants to work with us. But it's some of them that takes a bigger part of the volume, because they're more integrated, we work closer with them, so we reduce the friction, and they can give a better price for the end customer, and that increases volume for them in our funnel.
I see. When you research and look into the Nordic players, it seems like they have EBITDA margins of 30 to 35%. Is that applicable also to your company, or is it different in your regions, and why, if so?
So it's a matter of digitalization maturity. So Sweden is very mature now, and it has been for maybe 8 years digitally. So that's something that needs to happen in this market to have the full profit market. We have higher commission rates than we have in the Nordics, and we have shorter loan time, so we have a potential of renegotiating and helping the customer more often than we do in the Nordics. So the potential is there. The markets are bigger, so we have a bigger top line potential, and we definitely have the same potential of the margin.
Okay. And how is the regulators' view on this type of business model? We know it's successful or approved here in the Nordic, but how does it look in other parts of the world?
Yeah, exactly. We need a license, so we have a license to be a broker in each market. The regulators, what we bring to the market is transparency. So we have a model that we show all the lenders in the market, and that brings transparency for the end customer, so they can truly see what they, as their own individual, can get as an offer. So all the offers on our platform is for their, it's tailor-made for them. So it's not a general list offer that end up being something else. So all the offers in our platform is there only. So it's bringing the end customer power to decide, and also transparency to see all the fees. So and this is in line with the goals of regulators. So they really like our model. It's better than the customer going to one bank, have a cumbersome process, filling out the paper and get one offer, and often the cost is very hidden. So it's hard for the end customer to then know if that's a good loan or not. In our model, we show all the different parameters, and they can decide if it's the bigger volume, the bigger loan, or the cheaper loan that's most important for them. So in Singapore, for example, we are to provide their financial platform in the Singaporean market. So MinLaw, the government legal arm, has asked us to build that platform for them, because they think that that's more transparent than what's happening now in the market. So they truly like this model.
Interesting. When you look into your presentation, you can see that you don't own all of the companies to 100%, that you have a smaller ownership in some of them. Is that going to change in the future, or how does that co-ownership work?
Yeah, exactly. We built Klar as an entrepreneurial company without investors to begin with. So we got co-founders and investors in our local markets. So Financeiro in Brazil and Lendela in Singapore and Hong Kong was co-founded with local team and local investors, or Swedish investors investing in those markets. And that to secure that we have the best brand, the best team, to make sure that it's a success in each region. And then COVID happened, and we raised capital in Klar because we saw that digitalization was truly happening, and that also this business model is, if it works in Scandinavia, Brazil, and Singapore, Hong Kong, then we were more or less fully secure that this is a global product truly. So we raised capital in Klar, and from there we own 100% of our business, and we are working continuously with our companies with less partnership with, so the ones we have 20% of, but we see a future where we own everything through Klar, 100%.
So do I understand it correctly then, that in some of these companies where you don't own 100%, you are possibly looking to increase your ownership stake?
Yeah, exactly.
Okay. Thank you. You usually talk about the Nordic, particularly Sweden, as a very mature market, but another, when it comes to credits, but another very mature market is the American market. But to my understanding, it's not a very popular model to use the broker channel. Do you have any understanding why that is not a popular
Yeah, exactly. We have there? The main digital competitors. So the US is divided in 50 states, and those 50 states are different legal perspective on KYC and lending. So that makes it more of a, so US is more like Europe. It's not one market. So it's 50 markets within one market. And that makes it harder to be a truly digital loan broker, because you need to make sure that you have the license and the KYCs in all the different regions. So they ending up being different players in different part of US. So that's pushing our digital competitors to do a more shallow integration with lenders and have a shallow relationship with end customers. So they are click out or lead gen model. So they compare, they have general list of offerings, but no offerings are tailor-made for the end customers, and then they send away the customers. For example, we have Credit Karma that does that, which ended up being an exit of $8 billion. So still a strong model, a very popular model with high rates on Google also, and a lot of users. But it didn't integrate as we do deeply with the lenders, with one end-to-end integrations, because of the legal structure and the KYC. Open banking is not a law in the US yet. In Europe, the PSD2 definition or law made sure that all the banks need to share their data. And that data is used now as a credit score, a transparent credit score for everyone to use, and something that's current. So it's the more accurate than the last year tax income statement from the government, because it's the latest 12-month transaction from the end customer. So when open banking came to Europe, the banks started using open banking as their credit score model, and that improved online sales and increased online sales. So when Plaid, for example, they work in US to make open banking available, even though open banking is not a law. It seems like open banking will come to US after some time. That's the global trend. Europe was first, but other markets are getting there. So when open banking is fully launched in US, I think you can see US as one market instead of 50 markets within one market, and that's a great potential for the digital loan broker model. And
finally, as a last question, can you say anything about how the revenue development was last year, and what do you think about the future going forward? Do you have any prognosis for what you can achieve for 2022 or even further out?
Yep. Yes, we've had a strong growth in all our markets, pending from 20 to 40% improvement from quarter on quarter, continuously during the year. So it's super strong growth, ending up being more than 100% growth year on year. This year we do 24 million euro in the platform as revenue. And the coming 2025, we forecast without additional funding to do 218 million euro. So that's
okay.
That's the plan.
And that's a strong growth.
Yeah, but it's thanks to these global trends that we discussed, and also the business model being so that, and having super happy end customers coming back, being loyal in the platform, increasing the revenue over time.
Perfect. Then it seems like we are running out of time. I'd like to thank Christian for the presentation and the interesting answers. And thank you so much.
Thank you.